Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurants opened. He asked me to come to open a restaurant in New York. And beginning, I didn't know what he did there.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute aerospace news whenever and wherever it happens. I'm Guy Johnson at the Dubai Air Show, and this is Bloomberg.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump dispatches top negotiators for additional high-level meetings with both Russia and Ukraine, directing envoy Steve Witkoff to meet Vladimir Putin in Moscow next week. U.S. National Economic Council Director Kevin Hassett emerges as the frontrunner to be the next Fed chair. Traders push the 10-year yield to 4%, betting he will lower rates to where President Trump wants them. Plus, UK Chancellor Rachel Reeves will present her highly anticipated budget today, which will be a test in her ability to please both the bond market and Labour backbenchers. Stay tuned for our special coverage. Well, it's just gone 9 a.m. across the Emirates. I'm Joanna Versace in Dubai. The global rally has continued for the fourth day. So some of those concerns around the AE mega spend, the binge going on there, have been brushed aside. And what we saw is yet another solid day for Wall Street. Also, some weaker data coming through. Retail sales in the U.S. surprising to the downside. Consumer confidence sitting at very low levels. So the soft data, if anything, has been interpreted positively by the market because it just has consolidated the case for that Fed interest rate cuts come in December. The market has sharply pivoted in the last couple of days, as we were talking about yesterday on the show. So S&P futures today leaning more green, up 0.2%. Another story we're watching closely is that Kevin Hassett has emerged as the front runner to the Fed, perceived by the market to be dovish. You can see 10-year yields have been moving lower and lower. We did have the bad news, as I mentioned, but then also the perception that Powell will be succeeded by someone vastly more dovish than he is. So 10 years sitting at 4% now. And then European markets, a bit of green on the board. We're keeping a close eye on a couple of things today. Number one, progress with those Ukraine-Russia negotiations, whether we're any closer to a breakthrough. We're going to discuss that on the show. And, of course, that budget, the UK budget that's coming through later today. Brent, you can see, just sitting shy of $63. We are actually firmer to the tune of 0.4%, but still sitting at the lowest levels, close to the lowest levels over the past month, on concerns about fundamentals and also this potential breakthrough in Russia-Ukraine. We're going to talk more about that with an expert shortly. Switching over, I did mention it's UK Budget Day. There is a lot at stake for the UK Chancellor, and no doubt gilt investors are going to be watching it very, very closely. We did see the long end of the UK curve rally back throughout the course of October. We had a softer than expected inflation print come through in the UK, but a mild reversal in the last couple of weeks because the Chancellor seems to have also reversed her plans to raise income tax. And on the back of that, you have seen a backup in yields again. So there are lots of things that the Chancellor is grappling with, in addition to generating that extra fiscal headroom. All of these will put to Lizzie Burden in about half an hour's time for a preview. Okay, let's zoom in on how markets in Asia are faring as well. Min Min Lo is in our Hong Kong studio. Min Min.
Hey, Jumana, it's a happy hump day in Asia. As you can see, solid gains across the Asian benchmarks here. As you said, a lot of it because of the macro tailwind out of the U.S. There is the Kevin Hassett factor there and the economic releases boosting bets of a rate cut in December or in January. So that's providing a lift to Asian stocks here. The Kospi up about 2%. But we are watching the currencies in Asia very closely because a few central bank actions to talk about. We have RBNZ cutting rates today, but signaling that they see a small chance of a rate cut next year. And that is boosting bets that the RBNZ could be at the tail end of its easing cycle. And you can see the Kiwi dollar jumping about 1% against the US dollar here. The Aussie dollar also gaining 0.5% against the US dollar after the CPI data coming in hotter than expected. And again, strengthening the case for the RBA to put a pause on the rate cut. But the yen is a different story here because we have a former BOJ official saying that the chances of a rate hike in December is increasing given how weak the yen is, and we are seeing a continued weakness here. Earlier in the morning, though, it was reversing some of the weakness, briefly went below 156, but now back above that level. Yen looking pretty unchanged this morning, but we have, of course, the dollar weakness on the back of the revision of rate cut expectations.
Min Min, thank you so much for the run-through. Min Min Lo in Hong Kong. Well, let's go back to one of our top stories today. President Trump has dispatched top negotiators for additional high-level meetings with both Russia and Ukraine. Trump told reporters he had no deadline for an agreement.
Eventually, that's land that over the next couple of months might be gotten by Russia anyway. So do you want to fight and lose another 50, 60,000 people? Or do you want to do something now?
Bloomberg's Greg Sullivan is with us. Greg, so where do things stand right now? Do we have a counter-proposal to the 28-point peace plan that the U.S. submitted to Ukraine?
Well, there's certainly a flurry of diplomatic activity. As you said, Trump is sending his top envoy, Steve Witkoff, to Moscow, as well as Secretary of the Army, Dan Driscoll, to Ukraine. Driscoll was just in Abu Dhabi meeting with the Russians. What we know about the plan is that there was the original 28-point plan, which caused concern among the Europeans and Kyiv. That has apparently been revised. We don't know exactly how. We do know that there are fewer points. There were meetings in Geneva where Trump signaled that the gap with the Ukrainians on this proposal has been narrowed. We've also heard from Russian officials that if it is narrowed too far from original agreements that they had apparently reached in Anchorage, Alaska, that would be unpalatable to them. So right now they're trying to narrow this gap, and Trump is expressing a lot of optimism.
Yeah. How significant was it that U.S. and Russian delegations met in the UAE yesterday, according to media reports? And then also other reports suggesting that Ukraine's military intelligence chief was also in Abu Dhabi as well.
Yes. So in terms of the Russian meeting, it is significant because it shows that the U.S. and the Russians are maintaining contact amid all this ongoing negotiations. It was unclear that that would happen, especially after the Budapest summit fell through.
Yeah.
It was unclear where those channels stood, but they are apparently working. Talks are happening, and obviously we have Witkoff now going back to Moscow. So that in itself is significant.
Well, one of the biggest pushbacks, and we discussed that original 28-point plan proposal, was the lack of clarity around the security guarantees. Could we end up in a situation where Ukraine actually accepts to give up land in exchange for stronger guarantees?
This is actually the crux of the issue.
Yeah.
It's really hard to see what will satisfy Ukraine that will not be a deal breaker for Russia, and vice versa. And as you said, it comes down to two huge things. Land, territory that Moscow does not control right now, hasn't been able to take militarily, that they're demanding Ukraine cede to them, as well as security guarantees. Ukraine needs to know that Russia can't restart the conflict down the road, but Russia's demanding that no NATO forces be stationed there and that there are curbs on Ukraine's military. So it's hard to see how this is bridged, how they come to compromise on this, and that is probably what the flurry of diplomacy happening right now is all about.
Yeah. Greg, thank you so much. It's certainly been an escalation in tempo, though, in the last couple of days. Greg Sullivan. Well, oil has steadied after closing at a one-month low on signs of this Ukrainian peace deal getting closer. Joining us now is Dan Sturven, Goldman Sachs co-head of global commodities research and head of oil research. Really good to have you with us here in the Middle East. Dan, actually, let me just start off by asking you about the latest, with Ukraine, Russia, and how much downside risk you think that could pose if we do get a breakthrough in the coming weeks.
Great. So our base case is a status quo from a sanctions perspective. And under our base case, where you have a status quo, Russian oil production continues its downward trend. In our base case, oil prices next year for Brent will average $56 per barrel, so roughly 10% of downside.
Yeah.
However, if we were to see a peace deal, a potential lifting in U.S. sanctions, we estimate roughly $5 per barrel of downside. So we're already below the forwards forecast. So that would put Brent in 2026 probably in the low 50s. Downside because Russian production may not decline. And second, we have seen very significant increases in Russian oil on water. That may normalize, that may moderate more inventories on land, and so an additional source of potential downside pressure on gold prices.
Okay, so let's go back to your forecast for next year. You are forecasting Brent and WTI to average, respectively, over the course of 2026, $56 and $52. Those both below the forwards. What is the rationale here? Is it simply just a mismatch between supply and demand?
Exactly.
Yeah.
So
how much oversupply do you see?
So we think that next year the global oil market will be in a surplus of 2 million barrels per day, 2 million barrels per day more supply than demand. The main reason for that forecast is that we think the oil market is right now already in a surplus. If you just add up all the oil inventory barrels that we can track across the world, we have been close to building by nearly 2 million barrels per day already over the last 3 months. So we're not calling for a sequential easing in the surplus. We're basically calling for a status quo, a continuation of the very supply-driven strength we're seeing.
So you see a surplus of around 2 million already in this market?
Yes,
right now.
If you just look at the last 90 days, and if you just add up all the inventories that are building, you're close to 2 million barrels per day, with most of the increases on water, though. And to see the next leg lower in oil prices, I think a greater share of those builds need to happen in the pricing centers on land. And one reason why on water has built so much is pressure from sanctions, especially from Russia, but also Iran, for instance.
China's stockpiling has been a big theme throughout the course of this year, and I think that took people by surprise. Is that no longer a tailwind going into 2026?
So we saw a very rapid pace of stockpiling over the summer. We have seen a moderation over the last few months. I think it's partly seasonal. We assume an additional acceleration in Chinese stockpiling. We assume Chinese inventories will rise by about 400 KBD in 2026. That's absorbing about 20% of the global builds that we expect. We think it makes sense to look for an acceleration because China's stockpiling tends to be price sensitive, and we forecast lower prices. Second, because Beijing is focused on energy security. And third, China has a lot of room to store extra oil.
Okay, so one thing that I've noticed about your forecast is you're short term quite bearish, but then more medium term, you're forecasting $80 Brent from late 2028. Why are you seeing the uptick in a couple of years' time?
Yeah, so the short story is that in 25 and 26, we think we're going through a big supply wave. But later this decade, we see just much fewer supply growth projects at the horizon. We expect oil demand to grow through 2040. And so it's this combination of strong above consensus demand growth and a moderation in what has been exceptionally strong supply growth that leads us to forecast that oil prices will need to rise to incentivize investment. We have seen relatively low investment in oil projects over the last 15 years. And I think if we had not seen the amazing U.S. shale productivity boom, oil prices would have been significantly higher.
Yeah, what do you see happening with U.S. shale production in light of that? Because you mentioned that as prices continue to drift lower, we're probably going to see less of an incentive to continue with the pace of supply growth that we've had the last year or so. How does that affect U.S. production outlook in the coming years?
Yeah, so our base case is that the oil market market is in a large surplus in 26, but then rebalances in 27 because low prices are expected to take their toll on non-OPEC supply in 27, especially in the US, where total liquids production has been up an unbelievable 1 million barrels per day year over year, despite low and falling prices. We expect roughly flat US shale supply under our forecast, where prices come down further, and that will help to rebalance the market in our base case.
Yeah. Okay. Another commodity we've been watching super closely is gold. Obviously, with everything that's happened this year, it's had a stunning 2025.
Yes.
Do you expect that to be replicated in 2026? Are you still bullish gold here?
Yes. We look for nearly 20% of additional price upside by the end of 26, with our forecast at $4,900 per troy ounce by the end of 26. Not as fast as this year. We're up almost 60% year to date. But the two drivers of the 25 rally, we think will be repeated in 26. Number one, structurally higher central bank purchases. Since the freezing of Russia's central bank reserves in 2022, EM reserve managers got this big wake-up call that they need to diversify into gold, which is the only truly safe asset once you hold it in your domestic vaults. And second, Fed cuts. Fed cuts, because gold is a non-yielding asset, tend to attract inflows into the gold ETF market. And with our economists' forecast that you see 75 basis points more of Fed cuts, we get support both from central bank buying and from private investors.
It wasn't that long ago that people were talking about the great debasement trade that was going through, that investors were reallocating away from the USD into other safe havens. A lot of that money found its way to gold. The dollar has been supported in the last month. It's actually regaining ground again. How does that impact that thesis, that part of the market?
So I would think of a potential broadening in this diversification theme, which currently is quite restricted to central banks. But if that were to broaden to private sector investors, it would cause further upside to already bullish gold price forecast. I think the key intuition for the size of this price upside from private sector diversification is that the gold market is relatively small. If you look at global gold ETFs, they are about 70 times smaller than the value of the US Treasury market. So you only need a relatively small diversification step out of, for instance, global bond markets to cause significant upside to the gold price. So it's another reason why gold is our favorite long commodity recommendation. You have significant upside in the base case. And in scenarios where markets may perform less well, perhaps concerns about the fiscal trajectory or questions about Fed independence, I think gold would do even better than in the already attractive base case.
Dan, so good to chat to you. Thank you so much for coming in. Dan Stuyven, Goldman Sachs co-head of Global Commodities Research and head of oil research. Well, still ahead, we speak to HSBC's Simon Williams about the economic picture in the MENA region. But first, the next Fed chair. As a frontrunner for the top job emerges, we discuss the implications of a Trump-aligned institution. That's next. This is Bloomberg.
Prime Infra is an investor, developer, and operator into socially relevant and sustainable infrastructure across three primary market segments: water, sustainable energy, and waste management. We're really about doing the hard stuff, and that is highly regulated market, significant barriers to entry, and the type of infrastructure that renders an essential service. That DNA comes from the owner, and we're built on the DNA to create a very successful company.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
We have in Singapore the state-of-the-art technology, and then we export that technology into our Meta plant in Georgia.
The Smart Factory brings software-defined manufacturing to life using digital twins, AI, and automation.
Our Meta plant was the largest investment of the company outside of Korea, at 3,000 acres, with an investment of $12.6 billion for a capacity of 300,000 cars a year.
Indonesia holds 40% of the world's geothermal potential, but has tapped just 9% of its reserves. It's like an inexhaustible battery that never gets plugged in. Geothermal delivers clean power 24/7 It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking this resource with continued investment. Soon it was past 1 gigawatt of capacity, helping anchor Indonesia's clean energy future.
Today's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Bloomberg has learned that White House National Economic Council Director Kevin Hassett is seen by advisors and allies of President Trump as the frontrunner to be the next Fed chair. Hassett told Fox News he is prepared to serve.
If he were to ask me to be Fed chair, then of course I would have to say yes, because I want to serve my country and I want to serve my president. But we'll see how it goes. There are a lot of great candidates.
For more, our managing editor Jill Desis joins us now from Hong Kong. Jill, what do we know about Kevin Hassett?
Well, look, I think the bottom line here, Jumana, is that if Trump is looking for somebody that is going to attempt to carry out his policy priorities while as the chairman of the Federal Reserve, Kevin Hassett really seems to fit the bill. I mean, so far, we've really seen, particularly over the last year, Trump really heavily criticized Jay Powell for not cutting interest rates aggressively enough. That's something that Kevin Hassett has said that he would do. If you count television interviews as part of the interview process for becoming the Fed chair, which I think Trump kind of has a tendency to do. We've heard Kevin Hassett say on Fox News elsewhere, he would be cutting interest rates right now based on the data available to him. So he doesn't really think the Fed is moving fast enough right now. We've also seen Hassett criticize the Fed for allowing inflation to get out of control in the wake of the pandemic. So I mean, really, these are all kinds of things that really fall in line with what Trump is ultimately looking for. He's obviously been incredibly disappointed with Powell in that position. So I think at this point, that does seem to be again, according to what we're hearing, the front runner. There's still some other candidates that are in the race for this, but we'll have to see. But it does seem that Kevin Hassett at least is right now sort of leading the pack.
Yeah, so when do we expect to hear results? How far along the process are we? You mentioned that there are some other candidates still in the race at this point.
Yes, that's right, Jumana. So at this point, what we've heard from Scott Bessent, Treasury Secretary, who's actually leading the search, is that we could get something before the end of the year, possibly before Christmas in terms of an announcement. Obviously, we're still expecting Jay Powell to serve out the remainder of his term through the first part of next year before the replacement would ultimately come in. But yes, there are still some others in the race. You're seeing those on your screen right now. That includes Christopher Waller, who's currently on the Fed, as well as Michelle Bowman. Kevin Warsh, a former Fed official, is also there. So you do see some other contenders here. As we understand it, they're sort of finishing up some levels of interviews this week, and then we'll have to see where we ultimately go. But yeah, it could be that we get some kind of an announcement from the Trump administration before Christmas.
Yeah. What do you make of the market reaction? This morning, I noted that 10-year Treasury yields were drifting lower, closer to 4%. Is it a case of the market actually repricing, the yield curve repricing in anticipation of a very dovish successor to Powell?
I mean, possibly, Jumana. I think that at this point, the language that you've really heard from Hassett is that idea that he would like to cut interest rates more aggressively. Obviously, the Fed chair alone is not the only one that ultimately makes that decision. And I do think that one thing that the market should probably keep in mind is that, once somebody is actually in the position, sort of, what ultimately happens from there might not necessarily be in 100% lockstep with what Trump is looking for. And again, we don't really know who exactly could be the Fed chair, because Trump is also known for some surprise decisions. So even if Hassett is the front runner right now, it's really not over until Trump actually makes his announcement. But yes, ultimately, I think, at this point, Trump has really indicated that he wants somebody there that is going to really sort of aggressively push for lower interest rates. Once again, that's something that he's been really upset with the Fed at this point in not executing on. So I would imagine that anyone that sort of steps into that position, you'd imagine that Trump has taken a really long, hard look on how much he believes that person is going to be in lockstep with what the President of the United States ultimately wants.
Bloomberg's managing editor Jill Desis in Hong Kong, thank you so much. Well, coming up, UK Chancellor of the Exchequer, Rachel Reeves, is set to release her second budget later today. We discuss the tightrope she's walking a bit later in the show. This is Bloomberg.
silence isn't empty. It's full of proof. When a silent gesture orchestrates masterpieces, we're not just one step ahead, we're in a league of our own. From 50 years ago to today to tomorrow, CIB has always been here. Growth, innovation, and setting the standard for half a century. Progress driven by quiet mastery.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Indonesia holds 40% of the world's geothermal potential. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking this resource with continued investment.
You have to have very clear global strategy to bring progress for humanity. Thinking from the customer point of view and taking the right decision, taking the right action, it may cost you more money in the short term, but you are creating customers for life.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Today, Chancellor of the Exchequer Rachel Reeves delivers the UK's autumn budget. Can she boost growth and productivity by unlocking investment? How will the Treasury raise revenue without breaking tax promises? And will the budget prove that a fairer economy can reward working people? Bloomberg Television brings you special coverage starting with the Chancellor's statement to Parliament at 12:30 p.m. UK time. And tune in Thursday for the opening trade budget special at 7 a.m. Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. President Trump says Beijing has more or less agreed to pick up the pace and size of its U.S. agricultural purchases. Trump told reporters aboard Air Force One that Chinese President Xi Jinping will surprise to the upside when it comes to trade. Trump and Xi held an hour-long phone call on Monday to discuss trade and the tensions between China and Japan over Taiwan. BlackRock plans to rapidly double or triple its current investment of over $35 billion in Saudi Arabia and the broader Middle East. The world's largest asset manager sees the strongest growth opportunities in infrastructure as the kingdom develops its non-oil economy. BlackRock and other Wall Street firms are essential to Saudi Arabia, providing capital for its growing economic diversification projects. And Saudi Arabia has started work on new alcohol stores in Jeddah and Dammam for some non-Muslim customers. The moves indicate the government is quietly widening access to alcohol for a larger group of foreign residents beyond just diplomats who hold special permits. This gradual relaxation of restrictions is part of the kingdom's broader Vision 2030 efforts to attract foreign talent and diversify its oil-dependent economy. And a look at markets as we head into the break. Everything is pointing green. S&P futures up 0.3%, and what a rally for European markets, up 0.7%, keeping a close eye on those Ukraine-Russia negotiations. Up next, we speak to HSBC's Simon Williams about the economic picture in the MENA region. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Global electricity demand is set to surge 75% by 2050. Infrastructure alone won't keep up. To power the future, we must change how energy is used, not just how it's generated. The missing link? Demand-side solutions that unlock efficiency, productivity, and resilience. The Bloomberg New Economy Energy Technology Coalition is uniting industry, innovators, and investors to scale these technologies for a future-ready energy system. Learn more at bloombergneweconomy.com/ntech.
Indonesia holds 40% of the world's geothermal potential. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking this resource with continued investment. Indonesia holds 40% of the world's geothermal potential, but has tapped just 9% of its reserves. It's like an inexhaustible battery that never gets plugged in. Geothermal delivers clean power 24/7. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking this resource with continued investment. Soon it was past 1 gigawatt of capacity, helping anchor Indonesia's clean energy future.
Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
Some people travel to see the world. I travel to question the forces that shape entire nations.
How is it possible?
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
Yamas.
Good morning. This is Horizons Middle East and Africa, our top stories this morning. President Trump dispatches top negotiators for additional high-level meetings with both Russia and Ukraine, directing envoy Steve Witkoff to meet Vladimir Putin in Moscow next week. U.S. National Economic Council Director Kevin Hassett emerges as the frontrunner to be the next Fed chair. Traders push the 10-year yield to 4%, betting he'll lower rates to where President Trump wants them. Plus, UK Chancellor Rachel Reeves will present her highly anticipated budget today, which will be a test in her ability to please both the bond market and Labour backbenchers. Stay tuned for our special coverage. It's 9:30 a.m. across the Emirates. I'm Shimona Bersachi in Dubai, getting you up to speed on these markets. The global rally is continuing for the fourth day. Green on the screen everywhere. S&P futures up 0.3%, brushing aside some of those AI bubble concerns. Also brushing aside the weaker data that came through yesterday from the U.S. Both retail sales and consumer confidence showing dim figures. But on the flip side, you could say perhaps it actually consolidates the case for an interest rate cut come December, which is where the market is sitting at right now. A 10-year yield sitting at 4%, so we've rallied a couple of basis points throughout the course of the last couple of days. A lot of attention on who the next Fed chair is going to be. It looks like Kevin Hassett is emerging as the front runner now, known to be quite a dovish voice and closely aligned to President Trump. So the interpretation is quite dovish from a yield investor perspective, bond investor perspective. European markets, take a look, though, at the price action there, up 0.7% in early trading. No doubt some of the positive signals coming through on Ukraine, Russia are helping that market. And then Brent, you can see, is slightly firmer. Up 0.3%, but still just below $63. $62.70 is where we're at, and close to 1-month lows again on this potential overhang of supply. We were just speaking about it with the global co-head of commodities from Goldman Sachs, and he's saying they already see around 2 million barrels per day of extra supply in this market, plus that potential breakthrough on Russia-Ukraine, what that could mean for a resumption of Russia supplies more broadly to the market. So that's what's been going on in oil space, but it is a huge day in the UK. Let's just switch over and show you what is at risk for the Chancellor. We're going to be speaking to Lizzie Burden in just a few moments. But ultimately, the real test of whether this budget is going to be successful for the market is the reaction in gilt yields. And so far, for most of this year, we've seen the UK long end under a lot of pressure. It reversed a little bit in October with a softer CPI print. But again, the last couple of weeks, we've backed up again on the Chancellor U-turning on the decision to perhaps raise income tax. So that's no longer happening. The question is, where is this fiscal consolidation going to come from? That needs to be answered later today. Okay, let's also zoom in on how markets in Asia are faring. Min Min Lo is in our Hong Kong studio. Min Min.
Hey, Jumana. Yes, Asia markets broadly on the upside today, as you said, because of the macro tailwinds out of the U.S. But we're watching some sectors. And here I have Alibaba on the board because it reported earnings after market close yesterday. And yes, revenue was a beat, both for the overall revenue. E-commerce was 16% higher and cloud was 34% higher. Big beat there. But the bottom line, the net income saw a big slump. And that's because of the price competition with the likes of JD.com and Meituan.
you have to have very clear.
The reality is the fundamentals are still sound.
I don't think we have yet seen the real bubble trade in AI.
The market's done a little bit of work here to take some including Carnival shares to exactly that point because of this fear around the consumer. Later this morning, we also do get retail sales data coming out for September. Some interesting Fed speak over the past 24 hours. Mary Daly lining up very squarely in the camp of Chris Waller and potentially John Williams to cut rates. She's not a voting member, but she has never departed from what Fed Chair Jay Powell has ultimately voted with. And it really is signaling to markets, guess what? They're going to cut.
And this is what it's come to, right? Of reading tea leaves, trying to figure out which way Jay Powell leans, because we haven't heard from the man himself. And just given how divided the Fed is, the thinking goes is that Jay Powell will have the ability to sway to cut or not to cut. And to your point, because Mary Daly is so aligned with Chair Powell, we're looking to her for direction.
So right now we're looking for direction in equities. You are seeing a bit of a bounce back from earlier lows. Still off, though, still lower. Down about 0.1% on the S&P futures. You are seeing yields just marginally creeping higher on the long end. Yesterday, we did see an auction that did tail 10-year yields 4.03%, still lower than where we were yesterday. And crude off just about 0.33%. Coming up this hour, Peter Shear of Academy Securities with stocks coming off their best day in 6 weeks. Ed Al-Husseini of Columbia Threadneedle on why AI may not have the impact on economic productivity that so many people think. And former senior White House trade advisor Kellyanne Shaw with fresh talks between the U.S. and China. We begin this hour with stocks edging lower as investors count down to retail earnings as well as data. Peter Shear of Academy Securities writing, the end of free money has been a major factor in the recent downturn and could weigh on the economy and markets going forward. I think the economy is at a greater risk than we've seen in some time. Peter joins us now. Peter, great to see you.
Good to see you, too.
This seems to be echoing what we heard from Neil Dutta yesterday of Renaissance Macro, where he said that he thinks the train may have already left the station when it comes to Fed rate cuts and the potential damage that has been foisted upon the economy. Why are you so negative as well?
So what I'm seeing, I think, is what we're calling the end of free money, and kind of being a bit cavalier about that. But there was a time, right? If you announced you were spending X billion on data centers or AI, your stock went up 2X. And all of a sudden, now you're seeing people question that. You're seeing stories emerge about, which technology should we use? So I think we're going through this breather, right? A year ago at this time, if you didn't have an AI strategy, you were ridiculed as a CEO. Your stock was going to suffer. So there was spend. There was this kind of real rush to spend. Now I think everyone's sitting back, okay, what do we want to spend on? What is the best value? And the hyperscalers, right? All of a sudden, you can't just say you're going to build more and your stock goes up. So this is kind of this first time I think we might see a bit of an AI diet where people are like, okay, how do we be cautious on this? Where do we spend? What do we spend on? What technology is emerging? We haven't talked about anything out of China yet that could derail some of our stocks. So I think this is where we get a bit of a slowdown right now.
Before we get into the details of the AI trade, you said the end of free money. And I want to dive into that because yesterday we were talking about tightening liquidity conditions. Now, a lot of people attributed that to the sell-off that we saw in things like Bitcoin and also the big tech names. Why is this now the end of free money with the Federal Reserve cutting rates and ending quantitative tightening?
Well, you've also seen, coming back to some of the crypto, you had the DATCOs, or, the digital asset treasury companies. Some are very sophisticated. Some do a lot of things. Some simply buy the underlying. And there was a period of time, right? If you bought X amount of Ether, your stock went up 2X. All of a sudden, that's not happening. So all these trades that were kind of self-perpetuating are falling down. And you're having a bit less liquidity come through this. And everything I hear and see when we're talking, whether it's consumers, corporate, I feel there's belt tightening going on everywhere. I think people are going to be a little bit surprised as they go through the budgeting process that companies are actually shrinking their budgets rather than growing, full scale.
What do you think the administration does in this? Because we were speaking with the Commerce Secretary yesterday who was beating the drum saying AI has been such a boon for our economy. David Sachs, the crypto czar, which also has an ear to the administration, was putting on X yesterday that it is an AI-related investment accounts that half of GDP in a reversal would risk recession. Is this an administration that would see this sector as too big to fail, as Sam Altman has hinted at to the chagrin of others at OpenAI?
What I think they are doing, and I think it's rightfully to do, is investing heavily in electricity and energy production, right? We are putting money into nuclear. We're putting money into everything that's really the bottleneck right now is this electricity. And supposedly that's one of the arguments with the TPUs versus the GPUs is lower electricity usage. So I think electricity is actually a bottleneck. I see the government spending a lot of time on that, which fits very much, I know you're sick of hearing it, but production for security or PROSEC. I think they are trying to figure out I think these are the things that the government's trying to make sure goes along. I think it's going to be hard for them to intervene directly in AI. But yes, if we get this AI slowdown, unless other parts of the economy really pick up, we are going to see this potential, maybe not a recession, but a slowdown, and that's why I'm concerned.
How does the wealth effect play into that? Lisa's been talking about how just more of everyday people, of households own equities at this point, and a lot of the gains in equities have been tied to AI. If AI starts to take a breather, what overall wealth effect does that come back and have on the consumer?
Well, I think we've already seen a big hit to crypto, right? Bitcoin itself is down $650 billion, and it seems to track very well. I always use ARKK as a proxy for disruptive, stocks. Those stocks are down. So you've kind of seen this big move in certain segments of the market. Almost anything momentum related is down. So I think you've already seen a chunk of wealth wiped out for people who would spend that money. So I think we need to see this turnaround, or you're going to see everyone, hey, maybe we got to be a little bit cautious, right? We are everything's going to the moon. Crypto's going to 200,000, whatever the number is. All of a sudden you're sitting here at 86,000 on Bitcoin. I think it does create this negative wealth effect where people are going to be conservative coming into their spending.
So there are three ways to look at this. There's one way to look at it saying, okay, this is going to be a recession next year that no one's expecting, which is typically how it happens, which is what we heard from Neil Dutta. Then there's a way of saying that actually there's going to be a rebound early next year because of the tax refunds and other types of stimulative effort, but that there will be sort of this flagging growth. And then the third way of looking at this is it is going to be morally hazardous for either this administration or the Federal Reserve to allow this market to crater. So you're going to see this bazooka of stimulus coming from quantitative easing, from Fed rate cuts, and from fiscal that will ultimately propel this market higher. Where do you fall in?
I do think coming into the midterm elections, we are going to see a huge effort. I think Trump and Trump 1.0 learned the pain. If you don't win the midterms, it's really hard to govern your next 2 years. So I expect a lot of stimulus coming into that. And I have liked, for example, my favorite trade right now has been to be underweight NASDAQ 100, so QQQ in ETF form. And I like the S&P 500 equal weight. So RSP is one, ETF that you can use for that. And I think you're going to get this bit of a rebalancing, right? Some of the air is going to leak out of the AI. Some of it should be transferring to the rest of the economy. And that's why I like kind of the equal weighted S&P 500. I think as we take away investor focus from the AI to electricity, which is still going to be a part of this. But what else is going on in the economy? What else are we building? What are we making? We are going to be trying to build manufacturing plants. We're going to be trying to build mines. We're going to be trying to build refining and processing companies. So there will be activity. And I think that's the area that's going to shine next year.
If you are defensive, can you go into long-term bonds with the expectation that this is an incentivized Federal Reserve to ultimately bring down long-term costs in whatever type of financial engineering it requires?
Normally, I would say yes, but I'm kind of stuck more on the belly of the curve, 5 to 7 years. I just think there's going to be some outward pressure on the 10s and beyond as people are nervous. Did we cut too much? Are we being too aggressive? Are we paying attention to inflation? So I think that's going to diminish a bit of the rally there. So I kind of like the belly of the curve. I think you're going to see 2-10 spreads actually go potentially to 100. So I could see us down at 3% on Fed funds, and I could still see a 10-year close to 4%.
Are you getting those vibes from the Fed that they are going to be forceful in their cuts? We heard from Chris Waller yesterday saying, yes, December, and then it's meeting by meeting.
I'll be slightly embarrassingly honest. I'm not really paying that much attention. I think we are going to get a new administration. The Fed's going to look very different next year. We're going to get to 3% before the middle of the summer. I don't really care whether it's a cut in December or not. That's kind of my base case, right? This is the direction we're headed. It's going to come almost hell or high water. So that's kind of how I'm thinking about it. I'm spending less attention to who's talking today and tomorrow. Look who's going to be talking in the future. We know we're getting these cuts next year.
I love it. It tells you something, Danny, when Peter Scheer is not keeping track of each Fed speaker. Maybe they have no clue and it's completely divided.
Also a great way to preserve your sanity, I think.
100%. So congratulations for being sane. Peter Scheer, the sane one, is going to be sticking with us. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Good morning, Lisa. Fighting between Russia and Ukraine continuing overnight with heavy Russian drone and missile attacks on Kyiv and Ukrainian assaults on southern Russia. The exchange is coming after President Trump suggested, quote, big progress was being made on a deal to end the fighting following weekend talks in Geneva. White House Press Secretary Caroline Leavitt says he still hopes the deal can get done by Thanksgiving. President Trump and his Chinese counterpart Xi Jinping held their first talk since agreeing last month to a tariff truce. Trump says the call was very good and touched on issues such as trade and Ukraine. He also says he will visit Beijing in April and that he invited Xi for a state visit next year. Shares of Google parent Alphabet rising in the pre-market on reports Meta is in talks to spend billions of dollars on the search giant's AI chips. The information reporting Meta plans to use Google's Tensor processing units, or TPUs, in data centers from 2027. An agreement would help establish TPUs as an alternative to NVIDIA's GPU chips. That's your Bloomberg Brief. Lisa.
Thank you so much, Vani. All right, this is the time. Just 5 minutes.
Oh, wow.
5
okay.
seconds.
Thank you. I'm so
GPU
honored.
versus TPU.
Okay.
30
GPU,
seconds.
NVIDIA's chip, originally for graphics processing, so it takes a lot of energy and has a lot of broad applications. TPU, built by Google, very application specific, so more efficient, maybe a better chip, but people are already using a lot of NVIDIA chips, and there's a kind of locked-in thing to it, so it's hard to get to the other one.
This is the debate. More energy efficient, although more restrictive, or potentially more expensive, energy intensive, but flexible. The race is on. Up next, we're going to be talking about lowering the temperature with China.
It lasted about an hour, and it was a very positive call. The focus was mainly on the trade deal that we are working on with China and those relations and how they are moving in a positive direction.
Bloomberg's Michael Solner joins us next. This is Bloomberg Surveillance.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Stocks just kind of meandering here, dipping just a touch after yesterday's surge, the biggest in 6 weeks for the S&P 500, the biggest two-day rally for the S&P and NASDAQ going back to May. Today, taking a little heat out of that, down about 0.1% for S&P futures, seeing yields just up marginally, but still lower than they were to start yesterday, 4.03%. Meanwhile, take a look at NVIDIA and Google Alphabet in pre-market trading. A huge dispersion here in the fates of the two, and they're connected with Alphabet shares up 4.1% in pre-market trading. NVIDIA lower by 3.6%. On that news that Alphabet might be gaining some clout in the TPU game. We'll get into that coming up. Under surveillance this morning, lowering the temperature with China.
I did speak with him about the call. It lasted about an hour, and it was a very positive call. The focus was mainly on the trade deal that we are working on with China and those relations and how they are moving in a positive direction. And the president and President Xi discussed continuing to stay in correspondence.
Here's the latest. President Trump saying his call with Chinese President Xi went well. The two leaders now planning in-person meetings next year. Bloomberg's Mika Solner joins us now. Mika, what was the understanding of what was discussed in that hour-long phone call between Xi and Trump?
Yeah, so the president and the Chinese president spoke for roughly an hour, largely focused on trade and trade negotiations, particularly around soybeans and how, China is impacting U.S. farmers as well. So that was a large focus of the call. But the two also touched on Ukraine-Russia war briefly. But I know that, there's been significant steps taken with the two promising to see each other in person next year.
Mika, the two readouts, whether it was from China or from the U.S., were vastly different. The one from the U.S. was talking about trade as well as a little smattering of Ukraine-Russia. The one from China really focused on Taiwan. Can you talk a little bit about that huge difference between the two readouts?
Yeah, I think that's really interesting, and I do think that there's going to be tension around Taiwan. I know that that's a big priority for the administration, but I also think that President Trump really wants to have a good relationship with China. I think that it's really different from previous administrations in the way that he negotiates with countries considered to be U.S. adversarial to the U.S. So, there's going to be a lot going on and a lot of reaction from China hawks as well in terms of what's going to happen, particularly around Taiwan.
Mika Solner of Bloomberg, thank you so much for that. Peter Scheer of Academy Securities is still with us. Mr. Prosek, let's put that hat on, because ultimately this really does go down to what is your takeaway? Does this have more consequences potentially for Ukraine, Russia, or potentially for Taiwan?
I think probably more for Taiwan. So when we're looking at this, and again, I work with 30 retired generals and admirals, a couple CIA people, so we spend a lot of time on where this is all playing out. And I think as we're having conversation with clients, we're reminding, one, Xi said he wants his military to be ready by 2027. It's not a sign that he's going to do anything in 2027. But we've always thought what's going to happen is there's going to be a multiple application of the levers of power. So the levers of power are diplomacy, information, military, and economics. So the DIME framework. I think they're going to put so much pressure on Taiwan that Taiwan may eventually just say enough's enough. And we are seeing the U.S. pivot a little bit away from the kind of this global, policeman of the world to really focused on domestic, right? North-south. The Monroe Doctrine seems to be taking place again, right? We moved the Ford into the aircraft carrier into the Caribbean. So there's this big domestic focus. So I think there is some risk that Taiwan feels a little bit maybe left out, a little bit nervous. And when we look at trade negotiations right now, the two things that I think China has some power over us are still the processed and refined rare earths and critical minerals. So on PROSAC, I think we are trying to do a lot of that. I am convinced that this administration, from some talks as well, one, we want to produce the rare earths and critical minerals, but really we want to make sure we can process and refine them to break that lock that China has on us. We control the chips. We control the best quality chips. Again, maybe now we throw the TPUs into that. Those are things China wants. At the same time, China controls a little bit the ability for Taiwan to ship things. So far, China has not done anything, but they do have this very, very large maritime militia. They've used it in the past in little incidents, but they could put this to work. It's largely shipping vessels. They have larger vessels within that, and they would just disperse themselves in such a way that it would slow shipping down. They would throw logs off back. They would throw nets trying to, foul propellers. So they could do a lot if they really wanted to push on us against Taiwan. So I don't know where this is all headed, but it feels a little bit parts and parcel where we're focusing a little bit more north-south, Monroe Doctrine, and maybe China has a little bit more control in that region.
Where does that leave someone like Japan, who has been leading on the U.S. alliance in their current heightened tensions with China after the prime minister made those off-the-cuff remarks that they would support or take action if China had military action against Taiwan?
I think it leaves everyone a little bit questioning, what is our mission, right? The Biden administration was very clear that we would support Taiwan. Trump has not been clear so far. And our official doctrine before Biden had always been ambiguity, right? So strategic ambiguity has been a part of this. The one thing, to me, it comes back, and we've been talking to clients about this for 4 years, and people used to kind of roll their eyes at us, and now I think they're listening, is shipping. You have to diversify your supply chains along shipping routes. You cannot be dependent on one shipping lane. So Thailand and Vietnam, you're not diversified. They're going through the same place, maybe even South Korea. So I think this is a kind of a huge wake-up call that everyone has to look at shipping as a bigger risk than we ever have in the past and say, hey, what happens if, and maybe it never happens, maybe we go on living peacefully and we have these great economic deals that allow it. I think we have to prepare for more and more deglobalization and more risk.
That's so interesting you say that, because I've had conversations with private equity executives who have companies, lots of them that need to deal with supply chain issues. And they've said, we've done such a good job since Trump came in as president because we've de-risked from China. And now we're in South Asia. To your point, we're in Vietnam. We're in these places that still might feel blowback should there be a larger scale conflict. Are there other options? Is the supply chain resilient enough to completely move away from that region, even if it's not China?
No, but I think you can diversify. You can have some there. You can have some other reasons, because you are going to want to try and sell into that region, right? India is a huge growth story. There's all sorts of opportunities. So you want to be there, but I think you want to look at South and Central America. What's going on there, right? Whatever happens, how do we do better with Brazil? So far, Brazil's been tough. We are working closely, I think, with Argentina. So I think there's going to be a lot of opportunities in that north-south. And again, keep coming back, and lots of things I've learned not being military, but, they talk about at Academy Securities the tyranny of distance. So in war, it is really hard to fight a war if you're far away. If you look at where Guam is relative to Taipei or Taiwan, it is a very far distance. It's going to be hard for us even when we try and do something to support that relative to what China. They have the same problem when you look at Central and South America. And let's not forget, the first place Marco Rubio went was the Panama Canal. That has never really happened in our history, right? The Secretary of Defense, Secretary almost always goes to the UK. He went to the Panama Canal. So there is something shifting in this administration. So I pay close attention to that. And if you want to be where the U.S. government's going to protect you and do the most, I think it's pretty clear to me you want to be edging or favoring North and Central and South America over Asia.
5 years ago, when the pandemic was raging, everyone was talking about the deglobalization and this idea that you had to build in sort of inefficiency in your supply chain to create redundancies. It was going to be inflationary. Now we're not talking about inflation. We're talking about disinflation from artificial intelligence, even as we see an acceleration of this trend of being more regional. Is there still an inflationary overlay to this that's the reverse of what globalization provided?
I think there is as it comes online. There is going to be some pressure on commodity prices. If we really start building these factories, if we build out the energy production that we need or the electricity production, we are going to see levels of inflation that have been higher. I think it's persistent, say that 2.5% to 3.5%. It's not going to get out of control. But over time, we've also built a much more secure system. I think costs will go down over time, right? If you're not shipping things long ways. Again, I just keep coming back to, I really believe this kind of concept of production for security is going to replace kind of ESG. When we're thinking about sustainability, it's going to be much more like, what do we need at the base? And this is going to sound wonky, but, I look at Maslow's hierarchy of needs. I always think that's probably the most useful course I took was Psych 101. But it talks about you basically need shelter, you need food, and all those things before you can move up to self-actualization. And we are kind of at the self-actualization. What we would like, I'd love to do this, I'd like to do these things. And then we realized we had our base eroded. We cannot produce the things that we need. How can you be safe or sustainable if you're not making some level of your basic necessities? So I think that's where we are headed. I think the government's the first to see it. I think capital is already starting to flow into it. So capital is going to be second. Corporations are going to adopt it. And I think Europe's going to start following. I think Europe's going to fight it a bit more tooth and nail. But ultimately, they're going to get dragged into this where you have to produce your basic necessities or some portion of it yourself and work with close allies because you cannot just rely on China to be your friend.
Peter Scheer, thank you so much for being with us. Always really illuminating. Peter Scheer of Academy Securities, and this kind of goes to the heart of the issue. I remember a year ago when APEC was being held in Peru, and there was a real question over who is going to win the war right now. Is it going to be China or is it going to be the United States for one of the most important reserves of copper, of pretty much a ton of minerals that are absolutely essential to our modern world?
I remember when you were there and the reporting you did was China is so present at this conference. They're present there. They're present in Africa. What does the U.S. do about that? To Peter's point, as they increase their reliance on those beneath us to the south of us.
There were Chinese flags. Xi came. He was going down the boulevard. Everything stopped. Real difference in tone. Coming up, we're going to be talking more about the emerging markets as well as artificial intelligence with Ed Al-Husseini of Columbia Threadneedle, who thinks that maybe AI productivity gains are overstated.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
We are heading into the open about 3 hours away. Right now, what we see in the morning futures is lower across the board after the biggest one-day gain going back 6 weeks. NASDAQ leading the charge lower, down 0.3% despite the gains that we're seeing on the likes of Alphabet. What you are seeing yesterday was the biggest two-day pop for both the S&P and NASDAQ going back to May. Optimism around potentially Fed rate cuts. Take a look at 2s, 10s, and 30s. You do see a bit of that optimism fading, but definitely below where they were yesterday. 2-year yields getting a bid after we heard from Mary Daly that she was inclined to cut rates next month. She is not a voting member. Nonetheless, she tends to work with Jay Powell and tends to agree with him. John Williams also on deck for a cut. I am the one who's actually watching, Danny, and counting each of these. It looks like it's pretty evenly split right now with a lot of undecideds, and a lot of people are saying this is up to Jay Powell to decide whether or not this is a Fed cut or a Fed hold.
Which is why Mary Daly was so important, because, to your point, she's very closely aligned with him. It's a very different environment. We've moved away from consensus building. And I also think interesting in that Mary Daly article, interview with the Journal, was she said, this is a good thing, this is a healthy thing, you don't want groupthink. The question will be whether that protects the Fed or exposes them in an era where you have a Trump pick at the top of the helm.
Yeah, and whether it gives any kind of guidance at a time where the guidance aspect is very much part of monetary policy transmission, which is a key question. Right now, we are 3 hours away from the cash open. Let's get some morning movers with Vonnie Quinn. Vonnie.
Well, Lisa, it is all about AI today, so let's take a look at these companies because you've been talking about it already this morning, TPUs versus GPUs. Remember, NVIDIA was great at making those graphics processing units. Well, now Meta is in talks, apparently, according to the information, to buy billions of dollars worth of TPUs from Google, the Alphabet company. Obviously, that could have an impact on NVIDIA going forward. Now, is this the very, very beginning of maybe what looks like the end of dominance for NVIDIA? Maybe. We'll see. But the shares are definitely suffering. Pre-market down 4%. AMD also along with it down 3.5%. And the Google parent up more than 4%. Let's switch it up because we are now looking at Alibaba. Just reporting this morning, we were talking about Qwen yesterday and the relaunch of all of its AI tools and its push into that. Its rivalry with Tencent and with Baidu, well, paying off apparently in the quarter. The ADR is up 4.5%. Overall revenue was up 5%, but its cloud intelligence revenue up 34%. Massive growth in that revenue in the quarter. And then let's take a look at SanDisk because you mightn't think of it. It's a memory chip company. We all remember carrying around those thumb drives and so on. But this is also really an AI story. This was bought by Western Digital back in 2016, spun out this February, up 530% year to date since it was spun out, up another 2% because it is now joining the S&P 500, and that's been giving the shares a boost. But obviously, there has to be an AI portion to this. It's in talks for the build-out of large-scale data centers as well. So that's helping this memory chip maker today.
Thank you so much, Bonnie. On our radar this morning, tensions rising between China and Japan over the status of Taiwan. President Donald Trump holding back-to-back calls with the leaders of both countries. Any sign of the U.S. aligning with Japan could end up derailing its trade truce with China. Meanwhile, NVIDIA under pressure following a report that Meta is in talks to spend billions on Google's AI chips. Millions, billions, trillions. The information reporting Meta plans to use Google's tensor processing units in data centers beginning in 2027. And real quick, TPU versus GPU, Danny, it is...
I wish I brought my PowerPoint with me.
Yeah.
Okay, TPU is Google's chips. They're specifically designed to do the tasks of Google's cloud, so they're very efficient, both in terms of ability to get work done and energy, versus NVIDIA's GPUs, which were originally built as graphics processors, so they do more tasks, but a little bit more clunky, take up more energy. So you could say Google's better. The issue is there's a lot of locked-in syndrome. It's really hard to change cloud providers because so many people already use those types of data centers with NVIDIA chips. It makes it harder to transfer to Google.
There is this 1-2 punch, and it comes to something we were discussing yesterday with OpenAI and this question of whether Google could potentially supersede it in terms of Gemini 3 and some of its capabilities. This next story about NVIDIA versus Google and the idea of Google selling chips to Meta just reiterates this feeling of disruption and this ongoing sense that the story that we're seeing right now in AI is not the full story. It is not the end of the story. This is just the beginning, and we're not really seeing the full iteration.
And it's still a market, you'd have to argue, that hasn't decided who the winner is. You could do the Dan Ives thing. He's just put out a note with his top AI picks. It's kind of literally all of them. So that is one bet and one way you could do it. But if anything, it's a market that is more discerning. And again, I think Alphabet coming in as a challenger is so interesting because they have so many corporate relationships. They have better brand power than OpenAI does. So who's to say if they can get people to switch over that they're not going to be the ultimate winner?
Yeah, and just to add on to this, SoftBank shares tumbling to a 2.5-month low with investor concerns really coming out after OpenAI with respect to potentially Alphabet's Gemini 3 superseding OpenAI, which is part of the reason why people are wondering, what is this iteration going to look like? Let's stick with AI. Ed Al-Husseini of Columbia Threadneedle casting doubt on the so-called productivity boom, writing, AI will lead to an acceleration in automation, which has been a central feature of economic growth. AI will have no impact on aggregate economic productivity. Ed joins us now with that bold statement. Ed, why do you think that that's the case, given the fact that so many people are saying that is when this will start to pay off? That is when this will be disinflationary and not necessarily just the investment in nuts and bolts in the physical world?
Yeah, absolutely. Look, we've seen these waves before. The point I wanted to make is it's really difficult to translate technological innovation, which we've seen pretty much continuously over the course of the past 40 years, into aggregate economic productivity. That's extraordinarily difficult. It really requires us to reorganize how we make economic widgets.
So at this point, you're saying that there are implications for the fixed income world in terms of the ultimate payoff, right? Because it comes to not only the corporate debt market that's been fueling and funding a lot of this, but also it goes down to the expected inflation rate and just what kind of growth you can see on the heels of AI. So where do you think the biggest misunderstanding really is right now?
Yeah, I mean, part of the problem is we're channeling an extraordinary amount of savings now into the AI thematic. It's going to cannibalize to some extent the capital that's available to other parts of the economy, including the Treasury market. We're in the early stages of this. The AI theme has just come to the investment grade market wholesale. It will be with us for a number of years, no doubt. But one of the risks is it starts to lift yields across the board and starts to make the cost of capital more expensive for other companies. That ultimately could be a drag on growth down the line.
This is a real crowding out because not only in capital, but in manufacturing capacity, the way that energy is used too. So wouldn't that be a healthy thing if all of a sudden we've decided we've gone so too far and AI backs up and the spending on AI backs up? Does that open up other parts of the economy to make use of this capital, make use of the energy, make use of America's manufacturing capacity?
Yeah, eventually that could very well be the story. We've seen this happen in other parts of the world. China is a fantastic example of this. It's gone too far. We're now seeing deflation, outright deflation because of that capacity in China. It's very early in the story, but one of the risks is we've invested an extraordinary amount of capital, some starting with a T at this point, in the AI thematic, and some of that capital either depreciates rapidly or is stranded and doesn't contribute to economic growth.
What happens to private asset players who've all started to pour money in this? A lot of the conversation there is, we're not taking AI risk. We're taking meta risk. We're taking Oracle credit risk. If what you're talking about, that corporate bond markets also start to feel some of the pain, what does that do to this entire ecosystem of funding?
Yeah, it's quite vulnerable. Let me say this. The good news is we're starting with corporate balance sheets that are extraordinarily strong. These are high quality, high grade issuers. The corporate bond market, particularly the investment grade market, was practically invented for this. It's there to fund these themes. So it's going to be a while until we get to a point where it starts to degrade and we see whether it has an impact on earnings. But the fact that the story is so deeply interconnected is definitely a vulnerability. That's not a new theme, but it's going to be with us for some time.
So how much of a liability do you think this is for the Treasury market?
A little bit. And again, the good news is we're sort of focused on the narcissism of small differences. What is the Fed going to do in a couple of weeks? The AI theme doesn't affect that in any meaningful way. One of the core questions for the Fed in the next couple of years is, should we assume, the way Greenspan did in the mid-90s, that productivity is rising? That's a license to keep monetary policy tighter than it would have been otherwise. If they make a mistake, and look, Greenspan got lucky and he got it right. But if we make a mistake, that leads to lower growth, that leads to tighter policy, that leads to lower inflation in the coming years. And that's going to be a really, really interesting debate in both 2026 and beyond.
If this does lead to greater weakness and potentially overly tight financial conditions, at least for the rest of America or the rest of corporate America that hasn't experienced the AI boom, are you expecting this to be essentially disinflationary for the wrong reasons, right? The idea that it could actually slow growth and end up in a situation where the corporate debt issuance really suffers because the growth just isn't there to really fuel the returns and the profits in an ongoing way?
Yeah, let me start with the second part of the question. So if productivity does not materialize, or in other words, productivity is very concentrated in parts of the economy that potentially deliver earnings to these companies, it's fine. If productivity becomes more diffuse and the economy as a whole starts to lift, that's a license for, again, higher interest rates across the board. That's a license for a healthier growth story. That's something we saw in the mid-90s through the mid-2000s. Great outcomes in terms of inflation, fiscal, interest rate stability, and so on. The challenge for the Fed is, again, if we make the wrong assumption in the short term and we put that higher productivity story into our strategy at the moment, you could make a much stronger case for tighter policy, and that would be a mistake at this stage.
So if that's the case, what's your highest conviction right now heading into year-end, into 2026?
With respect to interest rates, look, I think we have a starting level of real yields, inflation-adjusted yields across the board that are still quite healthy. At the same time, when you look at the corporate debt market, where we're financing and underwriting this AI story, corporate spreads are extraordinarily tight. There's a lot more room for those spreads to widen, and there's a lot more room for real interest rate, inflation-adjusted yields to come down in the course of the next 12 to 18 months.
What would it take for spreads to widen, though? Because this is a market that's flush with cash, looking to put it to work. And it feels like every single auction, every single debt issuance, that there is so much demand that spreads, even when they widen, are widening to 70 basis, nothing crazy still, even when you do see widening.
Absolutely. And the appropriate answer is, I have no idea. All I know is, at the moment, investors are not being compensated for a lot of the risks that they are taking, particularly in weaker balance sheets. How quickly those balance sheets degrade ultimately is going to be the key part of that narrative for next year. And then most importantly, we need a shock to our beliefs. That's what always happens. There are deep stories that are embedded in the way we price these spreads. There are deep stories around the AI thematic, for example, that are being embedded in how we price assets in the economy. Shocks to stories like that ultimately are what reorient credit spreads.
I think that we've had enough shocks for this year, but we could have more, and that's what Al Husseini of Columbia Threadneedle is laying at. And thank you so much for being with us. Have a wonderful Thanksgiving. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief, the Vonnie Quinn. Vonnie.
Lisa, thank you. UK Chancellor Rachel Reeves is getting ready to deliver her autumn budget tomorrow. Sources telling us here at Bloomberg she will announce plans to slash the amount Britons can save in their tax-free cash ISAs each year by nearly $16,000. The decision is part of Reeves' push to get households to invest more in UK stocks. Apollo Global Management CEO Mark Rowan saying people have, quote, lost their minds over private credit fears. Rowan rejecting the notion that adding private assets to retirement and insurance portfolios could pose a systemic risk. According to the Apollo executive, most private credit held by insurers and by pension fund buyers is rated investment grade. Rare layoffs taking place at Apple. Sources telling us here at Bloomberg the iPhone maker has eliminated dozens of roles in its sales organization in a bid to streamline the way it offers products to businesses. The affected positions include account managers and staff who operate Apple's briefing centers and product demonstrations. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, looking for the edge in trade talks.
I think the question that we are negotiating is how to do things bigger and better together between our two great economies.
Former senior White House trade advisor Kellyanne Shaw joining us next. This is Bloomberg Surveillance. Good morning.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Indonesia holds 40% of the world's geothermal potential, but has tapped just 9% of its reserves. It's like an inexhaustible battery that never gets plugged in. Geothermal delivers clean power 24/7. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking these resources with continued investment. Soon it will pass 1 gigawatt of capacity, helping anchor Indonesia's clean energy future.
Less than 3 hours away from the opening bell, you can see a little bit of a rebound from the earlier lows in futures. Futures softer across the board, down about 0.2% for S&P. But you can see a bit of just sort of meandering after yesterday's rally. Yields marginally higher on the long end, lower on the front end, 4.03% on the 10-year. Take a look at these retail names. We are getting some earnings this morning. We're getting Kohl's, Dick's, Best Buy, Abercrombie & Fitch, Dell, HP. Just moments ago, we got Burlington stores, which is a discounted retailer. And Danny, it did seem to be a beat, which is, again, sort of this interesting question of, is a beat on some of these discount retailers a good thing for the U.S. consumer, or one that potentially belies a little bit of concern and choicefulness, as the word of the day seems to be?
You add that, and then you add Walmart doing better, getting higher income consumers coming down. Maybe it's not a great thing, but I have to say expectations clearly were very high for Burlington. Shares are down very sharply, and I wonder if it has to do not with what they're saying are great trends, but the fact that their third quarter comp sales were much less than expected, about half the rate that they expected. Maybe they didn't raise things enough. So it's one of these companies that people are like, yeah, you're a discounter. We know you're doing well. And if you don't show up and raise things more than you have, we're going to punish you.
Yeah, revenue missing. They did say that traffic to our stores fell off significantly after the back-to-school period, driven by unseasonably warm temperatures in our major markets. This comes after some discussion over hurricane season when it comes to the Lowe's and the Home Depots of the world. We'll be watching out for other retailer earnings, just as a forward-looking read on what we might expect during this holiday season. Under surveillance this morning, looking for the edge in trade talks.
I think the question that we are negotiating is how to make the deal bigger, how to make it stronger, how to make it more inclusive, how to bring in these digital Markets Act and try to improve that for digital America, how to maybe do steel and aluminum and how to include that, how to do things bigger and better together between our two great economies.
Here's the latest. Talks underway to preserve trade deals reached earlier this year. Former senior White House trade advisor Kellyanne Shaw writing, the détente between the U.S. and China is continuing to hold, and I expect it to through New Year's. I am increasingly skeptical about the durability of the U.S.-EU trade deal. Kellyanne joins us now. Thank you so much for being with us, Kellyanne. Let's just first talk about what you make of the idea of negotiating a deal for the EU and the U.S. that supposedly was already set in stone.
Yeah. Good morning. Thanks so much for having me on. This is why I'm so skeptical about this deal and frankly watching it very, very closely. The United States and Europe announced back in July that they had agreed on a package of mutual concessions, including tariff cuts going both ways. The U.S. implemented that going all the way back to August 1st. The EU has only introduced its legislation with no real hope of even passing it in the short term. So the EU has yet to cut a single tariff line. Now, the U.S. is in Brussels. You have Ambassador Greer as well as Secretary Letnick, who are there talking to their counterparts. What seems to be on the table is a potential deal on steel in exchange for concessions on the digital single market, on the DMA, on some of these digital regulations. But the EU has said that they're not budging on that. So I don't expect the U.S. to budge on steel and aluminum either, which means we have an impasse. And I think as soon as the president starts to connect with the fact that the EU hasn't cut a single tariff line, that's going to spell some serious trouble for this relationship.
That relationship has been frayed for quite a while. There are ongoing questions also about the U.S. and China. And I think that right now more people are focused on that just simply because of how essential trade is between these two economies, particularly when it comes to rare earth minerals and a couple other products. I'm just wondering what you make of the phone call between President Trump and President Xi and this idea of a visit coming in April.
Yeah, this was a really interesting conversation. It wasn't interesting so far as the two leaders spoke. They speak all the time. It's not unusual to follow up with a successful meeting and a deal that is being implemented to touch base, to talk about the trade issues, to talk about China's soybean purchases, wheat purchases, and other commitments that are coming due. But what I found so interesting were the competing readouts, and one in which China really rushed to get out. The president didn't even give his own readout for several hours later. China's was almost exclusively focused on this issue of Taiwan, on the importance of Taiwan, saying the U.S. had acknowledged the importance, talking about its criticality for the post-world international order. While the U.S. readout didn't mention Taiwan at all. It was focused on the trade deal, focused on Ukraine. And so it's this he said, she said, what actually happened in this call mystery. Now, of course, there are no transcripts available to the public about what happens in these behind-the-scene phone calls. But what is interesting is the narrative that both sides are laying out. And I think what is clear is what's on China's mind right now. I think the president's focused on this trade deal. But when the president does go visit President Xi in April, I have no doubt that Taiwan is likely to be on the agenda, at least from China's perspective.
The fact that Taiwan wasn't mentioned by President Trump, Kellyanne, does that say anything about the White House's willingness to step in should there be military action from China to Taiwan?
I certainly wouldn't read that into an omission. I think from the U.S. perspective, this call was really about checking in on the trade deal, discussions around what's happening in Ukraine. The administration has said several times over the past few months that there's no end to the Ukraine-Russia war without China's active participation. So I do think that those are the things that are likely on the administration's mind right now. I think what is clear based on what is happening between China and Japan right now, the concern over Taiwan is really this messaging campaign that we're seeing from China. This seemed to me more about a race to win the narrative versus what actually happened in the call. And I think that's why you're seeing the U.S. just not address it.
I was going to say, in terms of competing narratives, you also had the Japanese prime minister say that she received a call right after that China-U.S. call from the president. But we didn't really hear about it from the side of the U.S. Kellyanne, what do you make of that?
Yeah, clearly there is a tremendous amount of tension right now between Japan and China. China's threatening to cut flights. There is a huge diplomatic row right now over the prime minister's comments about the existential threat to Japan of any sort of military incursion by China into Taiwan. I think what the United States president is showing is solidarity with the prime minister. I think this is about saying that we are with you. We stand with our ally. I don't think the president needed to issue any sort of statement to make that point. The fact that that phone call happened was the message. And so I do think that the United States and Japan are united. But again, this issue of Taiwan is increasingly on President Xi's mind. And I think this will be a real point of tension, particularly going into those April meetings. And I expect President Xi to try to squeeze the president for something on Taiwan. And that's when we'll see what the U.S.'s real position is here.
Kellyanne, how much is it a tit for tat, this idea that if the U.S. does shift away from hardcore rhetoric around Taiwan, that China will help with the Russia-Ukraine war and potentially bringing an end to it sooner?
Look, I think that China is likely to use all of its leverage points in terms of trying to push issues that are so important to it. And Taiwan is issue number one in terms of the things that President Xi wants to do. But look, I do think that the U.S. position is strategic ambiguity. I don't think that the fact that the president hasn't departed from that, or at least said anything from that, indicates a different pivot point in U.S. policy. But again, the rubber is really going to meet the road come April, when I fully expect President Xi to push the president on this issue. And then again, we'll see what the result is. But the U.S. position, as far as I'm aware, has not changed. I think strategic ambiguity continues to be the U.S. view.
Former senior White House trade advisor Kellyanne Shaw, thank you so much for being with us. Definitely the two different readouts were notable, given the idea that people were wondering, what exactly is this phone call and what exactly will this meeting be in April?
Right. And what did President Trump say about Taiwan? What was his response? Because the Chinese angle was very clear. To them, it's a matter of sovereignty. And for the White House's response, just question marks at this point.
Yeah, and question marks around AI and just how much the U.S. was willing to sell chips into China. Coming up next, John Bilton of J.P. Morgan Asset Management, Jeanette Lowe of Strategas, Lauren Murphy of Wells Fargo, and Samantha Dart of Goldman Sachs as we get retail earnings, as we parse through the day ahead with Google very much front in focus.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Indonesia holds 40% of the world's geothermal potential. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking these resources with continued investment.
What I am a little bit worried about is that the Fed is kind of dragging its feet.
It's sort of confusing what you're hearing out of the Federal Reserve.
You might not want to hold the Fed to the same standard as in normal times.
It's certainly a much more rowdy and disorderly process from the Fed than what we're accustomed to.
We will get 3 rate cuts over the next 12 months, but December's still a toss-up.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Stocks meandering after the biggest two-day pop since May, taking some heat out of that today in futures. Retail sales trickling out for the likes of Burlington earlier, Kohl's and Dick's Sporting Goods as the holiday shopping season kicks off, with traders awaiting September retail sales data in about 90 minutes' time. And Alphabet becoming the U.S.'s third most valuable company, approaching $4 trillion in market capitalization as it presents stiff competition to both OpenAI and NVIDIA. Danny, this question of disruption very much roiling the artificial intelligence space.
It does. There is so much churn underneath the surface as the market hasn't fully decided on who's the winner. We're going from the yay, everybody's a winner that does anything with AI and spends money to, hey, maybe not everybody is going to be okay. But one of the interesting things is, despite how volatile that sort of back and forth has been, it is the Fed that's dictating the overall directions of markets. It was yesterday in hopes of a cut that was lifting us up. Weeks before, it was doubts of a cut that was pushing us down.
Yeah, and this is really going to the bifurcation that you're seeing in the market. So even though we did just see the biggest two-day pop going back to May, there was, again, that bifurcation, this tale of two halves within the market, with about half the market not participating. The consumer-facing stocks not exactly rallying. You saw, for example, Carnival shares falling quite considerably. And it goes to this question, how long can the AI trade continue unless you get participation of the rest of the economy? And is the Fed too late to turn around the weakness that we've seen in certain pockets, akin to what we were hearing yesterday from Neil Dutta?
I also think that's why what El Hudsaini told us from Threadneedle was so interesting, because the idea that a productivity boom is going to come to the rest of this market and to save us, even if AI spending slows, he cast doubt on that. And that's a real problem for those that say, yes, the AI trade, but all these other companies are benefiting from it too. What happens if they don't? And what happens if that happens at the same time of a slowing consumer?
Meanwhile, this is the shopping season, and that's the reason why the retail earnings have been so interesting. We saw from Burlington, they did raise their full year forecast, still taking a beating on comp sales. Kohl's, just take a look at that, jumping 15% after their comp sales beat estimates in the third quarter. This is a company that just had a new CEO come in, but those shares really rallying after seeing full year operating margin significantly above where it previously expected, and just beats pretty much across the board, Danny. This to me is really interesting.
It is fascinating. And the margin story, which you just pointed to, again, this is a sector that we assumed margins would be really bad. We assumed that they'd be paying more and they'd have to move it along to the consumer. That's not what's playing out. They're finding clearly efficiencies from somewhere else. And for a company like Kohl's that has been in such need of a turnaround plan, the idea that they're able to do it in this environment with a new CEO at the helm, again, is getting greatly rewarded by this market.
The word efficiency keeps coming back to that, and we will keep looking at that. Right now, the efficiency in market is just slightly lower after yesterday's rally. You're seeing equity futures lower by about, it was 0.2%, reprising some of that as we do get some of these earnings now basically unchanged. We are seeing unchanged on the 10-year. Wow, this is not a very active board today. Coming up this hour, John Bilton of JP Morgan Asset Management, as investors maybe tap the brakes, maybe just take a pre-Thanksgiving pause. Jeanette Lowe of Strategas as Ukraine peace talks gain momentum, and Samantha Dart of Goldman Sachs on why energy is the key to winning the AI race. We begin this hour with stocks sort of meandering following yesterday's tech-fueled rally. John Bilton of JP Morgan Asset Management seeing potential for positive returns, writing, the recent pullback is presenting a buying opportunity, and we feel the gloomy narrative on tech is somewhat overdone. John joins us now. John, thank you so much for being here. I could use a little bit of excitement and optimism this morning. I'm wondering why you think that any kind of rally is going to come on the heels of people watching the AI space and gaining enthusiasm about it again, rather than focusing on the transformation and the competitive landscape that we're seeing, certainly on a morning like this one.
Well, I think we've got to remember what tech actually is. It's about innovation. It's about the next new idea, and it's about continually challenging itself. Think back to, I think it was February time, when, of course, we had DeepSeek suddenly appeared on the horizon, and everyone thought, oh, my goodness, what does this mean for US tech? You know, it's all over. Was it? Absolutely not. We've got the strongest rally out of tech that we've seen in an awfully long time from April onwards. So I think what we're beginning to see is something of a maturation. We're seeing competition begin to come in. We're seeing different opportunities using different technologies for different purposes, etc. There's a lot of money going in. This third quarter's results from the tech leaders show huge capital spending commitments, which will continue to boost the investment share. Open question on productivity. Longer term, we've looked at this in our long-term capital market assumptions work. We do feel that productivity is set to gain, but it's a long burn. It requires the investment first. And so we think that there's reasons to be positive, and we think that with this cycle of investment happening now, there's reasons that we will see dips bought.
Is there enough cash and enough investor enthusiasm to supersede any kind of hiccup that would come from, say, just theoretically, a company that's worth about $500 billion and is private, that has a lot of loans, that's sort of trying to grow into the image that it has for itself, OpenAI? If you do get some sort of blow up of one of these companies that has been more speculative?
Well, look, take a step back from the individual companies themselves. There's a lot of capital in motion right now. There will probably be winners and losers out of that. I'm not a stock analyst. I wouldn't want to project as to who's who. But with the amount of capital being spent, we know that up to around 80% of total factor productivity gains typically can be explained by the upfront investment. Bigger issue we have right now, actually, again, if we take the long view, we know that the input of labour into growth going forward is going to shrink. We've got bipartisan support for clamping down on migration, and it's a global factor, by the way. It's not just a US thing. So it amplifies the impact of an ageing population. So as my colleague Dr. Kelly likes to say, someone who I know is on this show quite a lot, productivity is what happens when you run out of workers. And guess what? So we are constructive there, but we're tracking a chain of events from the investment being made to the technology being built to the adoption taking place and then the full deployment. No prior tech cycle, mainframe, e-commerce, mobile telephony, and now AI, has not gradually broadened out through time. So we are optimistic about the overall technology cycle here, and still in the early stages, we think.
It's incredibly complicated, though, and I was joking with Lisa earlier that, I, for some reason, spent a huge chunk of my day yesterday understanding the differences between TPUs and GPUs. You say you're not a stock analyst, and you're certainly not a tech-specific one at that, but is there a sort of sense that in order to be an active investor, in order to actually understand who are the winners and losers, you need to have a technical know-how that most people don't have? Does it pay to be hyper-specialized on tech in this kind of environment?
Well, I think the same is true on any sector. If you get down into the depths, if you don't know the difference between an oncology drug and a therapeutic, you're not going to be a very good pharmaceutical analyst.
But this is a sector that dominates the market, though, whereas you can't say the same for pharma.
But fair point. But if we think about it, you can break it down into the jobs that tech is doing. Highly specialized functions need that real top-end, cutting-edge innovation. That's where your GPUs are coming in. Your TPUs, which are much more, brute force, can apply a lot of processing power to a more single direction. I think the ability to be able to scale and learn fast about what one is investing in. Actually, funny enough, if you think about it, that's an amazing AI use case. So I think what we can see is how we stratify different uses of AI. Are we automating simple tasks? Are we doing large modeling of very unstructured data? Those are two different endpoints. But just having that basic understanding of what's leading where, I think, is reasonable as a financial analyst anyways.
To that point, there was the dream of agentic AI and superintelligence, and it's something that Sam Altman talked about, Jensen Huang, and it's a thing that really built up stocks and had this, I don't know if you want to call it bubble, but anyway, high valuations because of this far promise in the future. Has something changed? Have we decided that we care less about what's happening in the future and more about the here and the now in terms of profitability and actual use cases of AI?
Well, I think there's a little bit of both, really, because I think that we always want innovation. It's one of the reasons why we continue to see that the US carries on dominating global market capitalization, even out 10 to 15 years from now, when we look at the work we've done in our capital market assumptions. So that innovation cycle is incredibly important. But at the same time, this is what separates in our mind from the dot-com era to where we are now. We've got high-quality, cash flow generative companies making investments that actually have real-world gains. And once more, I'd come back to that point. Productivity is what happens when you run out of workers. And that's the biggest driver to us. It's not the robots coming for our jobs. It's the fact that there are fewer of us. and we still want to be able to sort of develop processes and growth around that.
This is the reason why people are having such a hard time getting a handle on what exactly is going on with the economy during this transformation that has a very different kind of time frame. We're going to be getting ADP payrolls numbers coming up on their weekly at 8:15. At 8:30, we're going to get backdated, stale data from September. We are getting details from some of the retailers who are reporting earnings today. I'm not going to have you comment on them because I know you're not a single stock analyst, but it's been generally a positive read. It hasn't been gloom and doom, and yet what we're hearing from a lot of people is that there is a lot of gloom and doom, and you are seeing that in the bifurcation of market performance. Do you think that is overstated in the non-tech names or not tech-obvious names, the idea that the consumer really is a lot weaker than it might seem?
Well, I think there are differences in the consumer as you look across income cohort, for instance, but we know that the dominant piece of retail sales of any sort of activity in the consumer space is driven by the upper income brackets. Where we will get some impact, though, of course, and this is the delayed impact of the Fed, will be on gradually lowering those costs for consumers across the board. We're also seeing oil prices reasonably stable, which is great for households at the end of the day. These operate with a lag. Right now, if we had a very exuberant consumer, I'd feel much more concerned about the outlook for the economy. When you've got the consumer, when you've got consumer sentiment really, really weak. In Europe, 15.3% household savings rate. It's the highest we've seen outside of the pandemic. The consumer has actually a surprising amount of coiled up sentiment and coiled up savings as we look around the globe more generally to put to work. We get big issues, a thawing between Washington and Beijing, as we've seen a little bit of. Possibly, and we hope, perhaps steps towards peace between Russia and Ukraine. As we get some of these big sort of geopolitical overhangs working their way through, the potential for a pickup in sentiment could be quite powerful from the consumer's perspective.
And a lot of retailers are trying to get ahead of that and build up their portfolios. John Bilton, thank you so much for being with us. Have a wonderful Thanksgiving, if you celebrate. John Bilton of JP Morgan Asset Management. And we are seeing certainly coal shares absolutely surging now, up more than 20% after those earnings. But what you can see across all of the earnings is a tale of different corporate execution. And this question of efficiency, this question of market share, this question of which goods they can actually raise prices on. And Danny, to me, that's the reason why it is so hard to get a more macro read from some of these micro earning reports versus just corporate strategy to adapt and adjust. It's such a good point because you've seen it all throughout earnings season. Does the fact that all of a sudden the fast casual restaurants are doing really poorly, does that mean everybody is doing poorly, but TJ Maxx is doing well, Kohl's is doing well, Walmart is doing well? Is that a good thing or a bad thing? It is a choose your own adventure, depending on what company you pick and what narrative you want to build around it. Just give more protein. That's, I think, what we've learned. Anyway, we'll get into that, or we won't get into that. Let's get to an update on stories elsewhere this morning. Here's your Bloomberg Brief with Vonnie. Vonnie, thanks so much.
Lisa, thank you. Tensions rising between China and Japan over the status of Taiwan. President Donald Trump holding back-to-back phone calls with the leaders of both countries. China's foreign ministry saying the U.S. initiated the hour-long call with President Xi Jinping. Trump then called Japan's prime minister to reaffirm their ties. Any sign that the U.S. is siding with Japan on Taiwan could jeopardize its trade truce with China. A federal judge has thrown out the criminal charges against former FBI Director James Comey and New York Attorney General Letitia James. The judge ruling the prosecutor who brought the cases had been illegally appointed. And nearly 2 years after the mid-air calamity that plunged Boeing into crisis, the company says it's making progress in its war against defects at its 737 jet plant factory. The company's efforts include weekly meetings where employees discuss on-the-job impediments and irritants. Boeing says it's seen encouraging results and is planning to increase 737 output to 60 jets a month. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, bringing the war to a close.
The idea that the United States of America is not engaging with both sides equally in this war to bring it to an end is a complete and total fallacy. That could not be further from the truth.
Jeanette Lowe of Strategas joins us next. This is Bloomberg Surveillance.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Less than an hour till ADP Tuesday. It kind of doesn't have the same kind of ring, and yet we are going to get ADP payrolls data coming out at 8:15 that might give us a little bit of a current look at the underlying economy. Right now, stocks doing nothing. Futures basically unchanged. On the S&P, we're tracing losses from earlier this morning. We are seeing 10-year yields marginally higher, but lower versus where they were this time yesterday, 4.03%, and crude just off by about 0.4%. Under surveillance this morning, bringing the war to a close.
The idea that the United States of America is not engaging with both sides equally in this war to bring it to an end is a complete and total fallacy. That could not be further from the truth. I have watched as the president and his team have worked around the clock overnight with both sides on endless phone calls, endless meetings to try to bring this war to a close.
Here's the latest. Peace talks between Russia and Ukraine gaining momentum. Sources telling us here at Bloomberg, a U.S. official is meeting a Russian delegation in Abu Dhabi ahead of President Trump's Thanksgiving deadline. Bloomberg's Mika Solner joins us now. Mika, what's your sense of where we are? It's gotten from a 28-point now to a 19-point. How close are we actually getting to some resolution in this push for a peace negotiation?
Well, the White House is very adamant to bringing this war to an end, but they have softened that Thanksgiving Day deadline, which is obviously just a couple of days away. But I know that, that they're really trying to stress and emphasize. We just heard White House Press Secretary Caroline Leavitt say that they're negotiating strongly with both sides. Now, this is to say the White House is also facing some criticism, saying that they're playing too much into what Russia wants. So we're going to see what they're doing there, and they're trying to work out those kinks now.
Mika, do we have a sense of what Europe's role is in trying to negotiate this and get back on the stage when it comes to trying to understand what the discussions are, who's having discussions with whom?
Yeah, I think that the White House says that they're working very closely, trying to keep everybody in communication. I know that there is a consensus that everybody wants this war to end, and I think that the U.S. is working strongly with European allies in terms of rebuilding Ukraine. But right now, they're still negotiating out a lot of this. The deal keeps changing and shifting. And so we're really going to see what comes. But I know that these talks are ongoing, and the administration believes it's making strong progress here.
Mika Solner, thank you so much for being with us. Jeanette Lowe of Strategas writing, it remains a question as to whether negotiated changes can hold and if Putin will agree to the ultimate plan. Jeanette joins us now. Jeanette, what do we know about what's been taken out of the initial 28 points that could potentially bring Ukraine closer to agreeing to this?
So, there's a couple of things that definitely started to push things a little bit more towards Ukraine's favor versus Russia's favor. That would be things like allowing Ukraine's military to be larger than it was under the 28-point plan, the potential for it to still be allowed to enter into NATO at some point if there is agreement, to allow NATO troops to be in Ukraine, but not on a permanent basis. So those were some things that allows Ukraine to have a little bit more stability with regards to its military, but then also having more security guarantees longer term. So we'll see if that holds. I think one of the issues has always been whether or not Putin really will agree to a deal. He came to the Alaska summit, made it seem like there was going to be progress made with President Trump, and then basically the talks went nowhere. So I think that remains to be seen. We hadn't seen Putin specifically say that this would be something he would agree to even when it was the original 28-point plan, whereas there was much more pressure on Ukraine to actually agree, and it was left to kind of see then what would happen with Putin on the other side.
Given that after this, or as this negotiation has been going on, we had the call yesterday between Presidents Trump and Xi. What role will China play in this? Do you think that they will be able to exert pressure on Russia to accept any sort of deal?
It's interesting because I think one of the things that we've been watching too is what's been happening in Venezuela, and could that be an effort to try to put more pressure on Russia to accept a deal? I think there could be some pressure with regards to China to try to get them to get Russia to accept a deal as well. It also could be just China watching what's happening. Maybe they hadn't been involved in these discussions and wanting to make sure that they were at the table and kind of seeing what might be at play with Ukraine and thinking that there might be some similar tactic that might be taken with regards to Taiwan Taiwan, since that obviously was a piece of the conversation that they held yesterday. But I do think Trump is really trying to push Russia to get to a deal. We'll have to see if that ultimately is successful, but he does want the war to end. He does kind of want lower oil prices, getting that geopolitical premium out of the oil prices. He probably also wants to separate Russia and China and having some those linkages during the war, breaking those apart a little bit, as he is trying to really remove the strength of China overall, kind of also focusing on decoupling the US from China. All of those things are coming into play here. So I do think that ultimately it was probably more still about trade and Taiwan and issues with Japan at this point, and maybe even less so about Ukraine.
I was going to say, when it comes to trade, does it make any difference that these Ukrainian negotiations are happening at the same time that you have Trade Representative Jameson Greer and U.S. Commerce Secretary Howard Lutnick in Brussels trying to negotiate yet again with the Europeans on trade deals with the U.S.?
Yeah, I mean, it was obviously interesting that the Europeans were a little bit caught off guard by the original 28-point plan. So things are also within the administration kind of focused on very separate tracks at the same time. Things are definitely in their own lane, and then they do have spillover effects. But obviously, this has been something with regards to the EU and the US that there has been a little bit of tension with the Europeans thinking that with the steel and aluminum derivative products and things like that nature, that it seems like the 15% tariff rate that they've ultimately had is not going to hold and is not going to be as beneficial to them. They're obviously also looking for other tariff exemptions, thinking about things like wine and spirits and pasta. So there's also that very separate thing. But I think those I would probably tease apart. I think this is much more focused on there was the effort in Gaza that was relatively successful. The administration wanted to take that momentum and put it towards getting some sort of deal with regards to Ukraine. And there's obviously this piece about trying to put a little bit more pressure on Russia with regards to oil, with Venezuela. And I think now there's just trying to see if we can actually get to a deal. But I do think Putin is probably the bigger question mark here.
There's a potpourri of issues here, and I'm trying to parse out how much is cost of living issues, how much is some sort of domestic win to celebrate international victories, and how much is an effort to work with allies and really get some sort of understanding that can hold. How much of it do you think is a cost of living issue that makes the U.S. more amenable to potentially lowering tariffs or being more cordial in some of the discussions in order to at least lower anything that people pay back home?
Yeah, I mean, I think the one thing here is that the oil piece, even before this affordability issue has really kind of come to the fore over the past few months, the oil premium that, him trying to say, I want to end wars, I want to lower oil prices. This was something that Trump pointed out early on in his administration before he came in, and then early on in the beginning weeks and months. So this has always kind of been his goal here. So I think this is less about affordability and more about getting the war ended, but still having lower oil prices. The tariff exemptions, obviously, to some extent, were about lowering prices, but the administration had also flagged this early on. You've always had Secretary Lutnick talking about the fact that the U.S. doesn't grow mangoes and that we'll probably have to exempt goods like that from the tariffs. So that is where we have ultimately ended up. Of course, it's happened as the conversations about affordability have really grown. So there is that component to it. But the fact that they've decided to make the exemptions across the world for all of those goods. But even if you get some additional exemptions, let's say with Europe, and there's a cost coming down in some of those things, it's really not significantly large. We looked through all of the tariff exemptions that came out, and it only really reduced tariffs on an aggregate basis by $7 billion. And we still have nearly $380 billion worth of tariffs in place. So it's really not going to lower overall prices. It's really much more targeted at specific food items and that affordability aspect.
Jeanette Lowe of Strategas, thank you so much. Currently, affordability very much front focused during the retail season, and we've heard from some retailers about how they're handling it. A real motley picture here. I got to say, Danny, I mean, you look at the performance of these shares after they report earnings, and it's, again, choose your own adventure. It seems like everything is, as you were saying earlier, with some really delivering and some talking about efficiencies, Dick's potentially closing some Foot Locker stores.
And they're saying that even though they've boosted their outlook for a second quarter, and shares are being punished because everybody's looking for cracks, and the fact that they might need to turn to efficiencies maybe that's a crack for Dick's Sporting Goods.
And this is the reason why so many people say this idea that AI made us cut jobs isn't really the story. It's actually we're just looking to cut money, to cut costs and preserve our margins. Coming up next, we'll be talking about that with Lauren Murphy of Wells Fargo as holiday shopping offers a fresh read on the consumer. This is Bloomberg Surveillance.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
About 2 hours away from the opening bell, and you can see futures just trying to find some kind of direction after being down as much as 0.2% on the S&P, now essentially flat. Even NASDAQ futures have really retraced. Yesterday was the biggest one-day pop going back 6 weeks, biggest two-day pop for both the S&P and the NASDAQ going back to May. The Russell 2000 turning around up 0.2%, possibly on the heels of some comments from Fed officials yesterday. Take a look at 2s, 10s, and 30s, and you can see in the bond space, particularly on the front end, a bid. And this really comes after we saw San Francisco Fed President Mary Daly in an interview with the Wall Street Journal say she would support a Fed rate cut next month. She is not a voting member, but definitely is considered an ally of Fed Chair Jay Powell. There also has been Chris Waller, who wants to go. Of course, John Williams has also indicated, which is the reason why you are seeing a bid into that space. Here are your morning movers with Vonnie Quinn with 2 hours away from the cash open.
Well, Lisa, one of the narratives that's going to dominate today is TPU versus GPU, right? What are the switching costs? Would companies want to even switch? And that's because Apple is in the news, obviously up 4.25%. Meta is in talks, according to the information, to buy billions of dollars worth of Google's TPUs. Now, it could have gone the other way. It could have gone and bought Nvidia's GPUs. It didn't. And the question is, are TPUs better for inference? Are they more energy efficient? What would it mean down the road? Does it mean the beginning of the end of the Nvidia dominance? It's a big question. So you can see Nvidia down about 3.5% off its lows of the session, AMD down 3.8%, and those Alphabet shares rising. Let's get to some of the retailers now, because we had many report today. One of the better stories, Kohl's up 22%. That stock already up about 12% this year. So the interim CEO, Michael Bender, who was put into the position in May, has really proven himself in the third quarter, definitely stabilizing Kohl's. He has now been named full CEO. He is in that position from now on, and today bears him out. So sales were still down, but only by 1.7%. The estimate was for a decline in the third quarter of 3.9%. And for the full year, the outlook is now comp sales being down 2.5% to 3%, as opposed to down 3% to 4%. So you can see the ranges are a lot better. Different story at Dick's Sporting Goods. So Dick's down about 10% on the year, down another 8.5% today. It did raise its outlook for a second straight quarter, citing sales from existing stores. But consumer sentiment down in November, as we know. And this, how does it, bring Foot Locker into the equation? Well, CNBC is saying that it's actually going to sell some of the existing Foot Locker stores. And so that's one of the parts of this story. Adjusted earnings per share missed at $2.07. The full year forecast did get boosted, though, but obviously investors not buying this particular idiosyncratic retail story.
Thank you so much, Vonnie. There is this question of Abercrombie and Fitch as well. Those shares popping more than 10% after reporting better than expected earnings across the board. We'll get to that in a bit. What you are seeing, though, is, Danny, a sense that their third quarter comp sales came in not exactly well. They came in actually below, but you did see overall net sales increase and a sense going forward, some commentary saying people are really buying more strongly heading into the holidays.
It does contrast with what we've heard elsewhere, to be fair. You've had, Vonnie was just talking about Dick's Sporting Goods trying to close some of their Foot Locker locations. It speaks to this moment where if companies do innovate, and Abercrombie & Fitch has really changed their lineup, or you look at Gap, who's leaned into celebrities and different collaborations, that there is money to be spent. It's a story that's been evolving for the past few years. It's a consumer that has money to spend, but it's choosy, which makes it hard to develop an overall narrative about where we stand.
Yeah, the commentary coming from the C-suite. We achieved 3 years of consecutive quarterly sales growth, delivering record third quarter net sales with 7% growth to last year. The strong finish to back to school and fall seasonal transition very much front and focus. Meanwhile, spending on other things is on our radar this morning. Meta reportedly in talks to use Google's AI chips in data centers. According to the information, the agreement would help establish Google's chips as an alternative to NVIDIA's. The deal hinges on whether the chips demonstrate power, efficiency, and computing muscle. That is what Bonnie was talking about with TPUs and GPUs. Meanwhile, Apollo CEO Mark Rowan saying, quote, people have really just lost their minds when it comes to concerns over private credit. Rowan rejecting the idea that adding private assets to retirement and insurance portfolios can pose a systemic risk. Danny, this is what we've heard from so many of the titans of the private asset management world.
Yeah, because it's really hurt them. I mean, you look at the share price of these publicly traded companies of private credit, private equity, and they have been really damaged by it. I think it's a fair argument to make that it's not systemic. There can't be a run on the bank with these kind of companies. But maybe what some of the wobbles do demonstrate, and Mark Rowan has talked about this, that we are late cycle dynamics. So much money has been poured into the sector. It's no longer a niche corner of finance because of insurance money, because of the move into wealth. And that money has to be put at work. So has due diligence softened? Has it been moved to the wayside? And does that mean the certain blow-ups or at least stress you've seen just does become more commonplace?
So late cycle in private credit, early cycle in the economy, early cycle in some sort of downturn. I'm getting lost in terms of what inning, what cycle we're in, because I've heard 5 things this morning alone, Danny.
Yeah, maybe we're just, the cycle is dead. Maybe that's the answer, that the cycle doesn't exist.
Well, maybe we'll get some inclination from U.S. economic data. It is getting back on track. Sort of. Delayed September PPI and retail sales due this morning at 8:30 a.m. September PCE now set to be released on December 5th. Meanwhile, a slew of results from the retailers, as we've been talking about, continue to give insight into the U.S. consumer. And sticking with retail, just days away from Black Friday and the unofficial start of the holiday shopping season. Lauren Murphy, Retail Finance Managing Director of Wells Fargo, writing, holiday shelves are full, but prices may rise in 2026. Lauren joins us now for more. Lauren, thank you so much for being with us. We've been trying to get a read on the holiday shopping season this morning in an ad hoc way with all of the earnings reports that have been coming out. Do you have a better sense of exactly any consistent themes running throughout the retailers?
Yeah, so I think the good news is retailers, as I mentioned, are well stocked. The inventory is on the shelves. They're ready to meet their consumer where they're at. I think the constant theme is just this question of consumer sentiment and really what is going to be needed to get that consumer and traffic in the door this holiday.
Lauren, there have been various notes this morning. One from UBS Securities saying that consumers' willingness to spend has waned and they expect a mediocre finish to the U.S. holiday season. BMO on their survey saying that consumers are going to raise their spending on the holidays more moderately than they have in the past. What are you seeing? Are you also seeing that softening around the edges of a consumer spending this holiday season?
Yeah, so Wells Fargo economists are forecasting that holiday sales will be between 3% and 4% increase year over year. However, that is not accounting for inflation. So I do think that consumers are seeking out value, they're seeking out discounts, and they're really mindful of their wallet this holiday.
A lot of what we've heard from the retailers, too, Kohl's being one of them, having a really good quarter. Best Buy, another one that's lifted their outlook because everybody's buying the new iPhones. Lauren, if there is this concern, is there a scenario where people have spent all of this money because they're concerned about the future? They're concerned about where prices go, where employment goes. So past strength can't necessarily be indicative of future strength.
That's right? This is still the prime time spending season between November and December. And we think retailers did a really good job trying to keep prices low heading into this holiday, pulling up forward inventory purchases ahead of price increases. I think we're seeing that in the results. We haven't seen the margin hits that we were probably anticipating. However, what we're hearing from our retailers is that may be coming in 26, right? They're trying to hold the line right now. However, the question is if they're going to have to increase prices just because they can't sustain it any further heading into 26.
And this goes to a question a lot of people have been asking. Have we already felt the ramifications from the tariff costs? Have they already been borne by a lot of these companies, or are they yet to come? Are you saying that they're yet to come?
Yeah, I think what we're hearing is there is a lag, right? Where people are, what we're seeing in the margins today are still at that pre-price increase because they pulled forward so much inventory in the first quarter. However, what we're hearing is that we do think that there will be further margin prices heading into Q1, Q2 next year.
Do you have a sense of how much prices will increase? Is it just commensurate with inflation? Is it beyond that? I mean, is there a range that retailers are getting a sense of during the holiday season based on what they can pass along and where now?
Yeah, I think that's a great question. I think what we're seeing, at least in this holiday season, is that there is a mixed bag of discounting strategies, right? And I think how that falls into price increases, where you're seeing retailers capping markdowns on well-selling items that still may have value that the consumer is still going to show up and buy, or they're trying to expand their discounting strategy to make sure that they're getting that more consumers are getting value for a particular product. So I think it's a mixed bag, and that's more on the margin side. But as you relate to the price increases, I mean, I really think it's going to see where they have to hold the line and making sure that they're hitting their margin forecast, because they're all worried about their bottom line P&L.
What about within the subsectors, Lauren? Are there certain parts of retail that are facing price increases more than others?
Yeah, I would say right now, most immediately, we're seeing it in home furniture, home goods, right? I think because there was such a high preponderance of sourcing in China in those industries, the price increases were just too swift, and they're already being passed through. However, I think we're seeing better resiliency in apparel and some specialty items as well. So I do think consumers are going to hopefully benefit from that this holiday season.
Is the home goods also an issue, just the fact that we've seen some of the big box home improvement stores that they continue to lag because of issues within housing? How does that trickle down to a home goods sector, for example?
Yeah, I think furniture is a good example, right? We're seeing a little bit more distress in that sector, knowing that just consumer spending, discretionary home sales, et cetera, right? People aren't going out purchasing houses, therefore they don't need to furnish these new houses. And so I do think that we are seeing the immediate impact of that across the sector.
Lauren Murphy of Wells Fargo, thank you so much for taking the time. And Danny, do you go to the store ever on post-Thanksgiving and celebrate by shopping?
As a creature who has a natural level of built-in anxiety, I can't do it because it skyrockets. I am one of the ones comfortably on my computer, like a cup of hot cocoa on one hand, scrolling through the deals. That's more my speed.
I think that you're more the common denominator than you are the exception at this point, given how many deals and offers I've been getting in my inbox. But it seems like people definitely decked out. Interesting to see some of the retail earnings that have come out this morning. A more positive tone than not, aside from Dick's Sporting Goods, but a sense that if you have a product that people want to buy with efficiencies, a lot of them are resurrecting some of their post-pandemic malaise.
But that's also why I'm kind of scratching my head, looking at, again, the notes that I mentioned from BMO and from UBS Securities saying that this is a consumer whose spending is waning. You're not necessarily seeing that across the board, but maybe it gets back to this issue we've been dealing with. People will say one thing, and then they still buy when faced with deals.
Yeah, this has been the conundrum. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Vonnie Gwynn. Vonnie.
Lisa, thank you. The European Union is rejecting the US's demand to ease tech regulation in return for lower steel tariffs. The EU's antitrust chief says the bloc's digital rulebook is, quote, not up for negotiation. The comments came after Commerce Secretary Howard Lutnick told Bloomberg his administration could relax levies in return for the rollback. President Trump signing an executive order on Monday establishing the, quote, Genesis mission, a federal effort to boost innovation using AI. It aims to coordinate research done by government agencies to integrate AI tools. Officials say the push will accelerate scientific discoveries in engineering, health, sciences, and energy. In sports, the San Francisco 49ers beat the Carolina Panthers on Monday Night Football. 49ers running back Christian McCaffrey had over 140 yards from scrimmage and a touchdown, while the San Francisco defense held Bryce Young and the Panthers to just 9 points. The Niners improved to 8-4 on the season, and Carolina falls to 6-6. That is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, powering the AI build-out.
We are in the midst of a major technological transformation that sure requires a lot of chips and requires a lot of data and data centers, but also requires a lot of energy.
Samantha Dart of Goldman Sachs joining next. This is Bloomberg Surveillance.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Make it day 3 of a rally after 2 straight days of gains that were some of the biggest that we've seen since the post-Liberation Day rally. We are seeing an S&P futures, at least, that are turning around after being down as much as 0.2% earlier. NASDAQ also turning around as people get a little bit more optimistic about the efficiencies and some of the new progress and new developments going on there. You are seeing a little bit of a lift in longer-term yields, but just 4.03% on the front end of the yield curve. You do see a bid with the Fed very much in focus. San Francisco Fed President Mary Daly endorsing the idea of a December rate cut. Under surveillance this morning, powering the AI build-out.
Everything is about energy, right? Energy and technology are the main drivers of productivity. And we are in the midst of a major technological transformation that sure requires a lot of chips and requires a lot of data and data centers, but also requires a lot of energy. So the technology and the energy are combining.
Here's the latest. Electricity demand set to surge as the race to revolutionize AI calls for more energy. Samantha Dart of Goldman Sachs writing, as AI demands massive power, a reliable and ample power supply is likely to be a key factor shaping this race. Samantha joins us now. Sam, thank you so much for being here. Let's start there. The idea of a race against whom? Is this China versus the U.S. and a question of who can get the most computing power and then who can actually power said programming?
Yeah, these are the two front runners. You have today the U.S. holding over 40% of all data centers in the world right here. But China's number 2, a little over 20%. And when we look at what's ahead, do we have the capacity to keep this going? I think that's where the differences really start to show, because in the U.S., we're already seeing about 8 out of the 13 power markets, regional markets in the U.S., already strained during peak summertime. Whereas in China, spare capacity is not only much larger, but we estimate it will get even larger over the next 5 years.
So without the U.S. building massive amounts of power the next 5 years, which is really going to be the time when AI is really ramping up, this really comes down to efficiency and how much more efficient can chips get, which is the reason why everyone's focused so much on Google today and this idea of their TPUs, the idea of a more efficient chip that uses less energy versus NVIDIA's GPUs. How much is that important and a necessary ingredient for the AI race to really continue in the United States?
I think it's key, because otherwise we're just not going to be able to add enough capacity to continue to fuel this. So, for example, already this summer, we saw the Eastern Atlantic market in the U.S., the power market, really tight. We saw real-time power prices spiking to reach record highs. We saw capacity auctions reaching record prices. So it's the market positioning not just to price your peak summer price very high, but hey, we're going to need to pay utilities a lot more to build additional capacity in the long run, because what we have is just not sufficient. So either we get more efficient, or we're going to start to see bottlenecks, or at least a slowdown in the addition of data center capacity in the U.S.
How much is there a timing mismatch? Because everybody's running to the gold rush, the field of dreams, build it and they will come, trying to build more energy capacity. Presumably it takes some time for these to get online. Is there a concern that we are ramping up so much with our demand of AI and what we're expecting versus the ability of these projects to come online?
Yeah, it's almost like you have two lines. The data centers are coming in troves, and on the power generation side, it's not that it would normally take so long. You would ordinarily build a natural gas-fired power plant in 2 years if you had the turbine. But we have a 4 to 5 year queue to get a new turbine if you want to start a project today. So you're having to rely on other sources. And what do you have? Well, we're still building a lot of renewables, but they are intermittent, so they are not always there. You need something to back it up. We can't build nuclear because every time we try, it takes many, many more years than planned, and it costs a lot more. So we're sort of running out of options if we don't have that efficiency gain in the very near term. And the result ends up being that our peak summer periods are going to be tighter and tighter in power markets and giving room to price spikes and potentially even outages.
All this conversation also just always leads me to think, what does Europe do? Europe already faced an energy crisis. They're still trying to wean themselves off of Russian energy. Can they compete when even without data center demand, they struggle to get the capacity that they need?
Yeah, I think it's unlikely they can compete. And a lot of that is because they haven't even secured their energy sources. So when we think about who has enough energy to power all of this, and the U.S. has already become an energy net exporter. But if you look at Europe, even though a lot of Europe is not using Russian gas, for example, anymore, that dependency just switched to imported liquefied natural gas. You still have to import it. So almost 50% of Europe's energy has to be imported. So that dependency is still there. The grid is very old. They don't have rare earths. They don't have uranium. So it's a very vulnerable place to be.
So let's start talking about some price levels. Liquefied natural gas, how much do you see prices increasing, say, in the next 12 months?
Actually, we're now starting a wave of supply growth in liquefied natural gas, and the U.S. is a big driver of that. The U.S. is going to drive more than 50% of global growth in LNG supply. So that's the bright side for Europe, if I can find one, is that their access to energy is likely to become more affordable over the next several years.
So this is the conundrum. You have on one hand the liquefied natural gas prices going down because of supply. You have actual gasoline, diesel, also diesel I guess less so, but prices going lower because of the supply glut that you're seeing coming out of the Middle East and other places. So where is the crunch going to happen, right? Where are the prices going to go up so materially that people are going to really feel the pain?
Yeah, I think at least in the U.S., what we're seeing so far is that the bottlenecks and the price pressure points, I think, are more likely to show when it comes to power price than, for example, natural gas prices or even gasoline prices. So it's really a power story a lot more than gas.
This is an administration that's increasingly been focused on affordability in recent weeks. If the net result of what you're talking about is everyday consumers also feel that higher energy price, is there anything the administration can do to solve these bottlenecks, or do they just need to be worked out?
That's a great point, because we're here talking about potential bottlenecks on infrastructure. But if it becomes a political issue because electricity prices are rising, that becomes another type of bottleneck. And because we can't really fix infrastructure building that fast, the only thing that policy can do is just make permits come a little faster. But if we can't get a turbine in less than 5 years, we still have a problem.
How much is this ultimately going to rest with the hyperscalers having to pay for the power themselves and create their own power plants themselves, which to some degree they're doing off the grid to some degree that could essentially become stranded assets? But how much is that kind of the path of travel going forward?
That seems to be the path of travel, but they will face those same bottlenecks. They still need the gas turbines for their own power generators, even if those are off the grid, right? If they are separated from the grid. And by the way, even if you have a generator off the grid, as your capacity grows, if your power demand grows with it, by the time you reach that generator capacity, guess what? You need to connect to the grid eventually anyway.
So what's the trade? I mean, if you're going to advise investors on what to invest in to capitalize on the demand outstripping supply, where do you go?
So there are a couple of things to think about. I think from a U.S. perspective, we think the trade is much more focused on power prices. So one thing that we have raised to clients is, hey, look at the back end of power price curves, because we're going to need to incentivize more build out, and that's going to show up in the back end of the curve. But if you turn around and look at Europe, for example, we were talking about all that vulnerability. You need to import a lot of materials. You don't have rare earths. You don't have this. You don't have that. So we have been recommending that investors in Europe in particular hold commodities in their portfolio as a hedge to all of this going wrong.
Samantha Dart at Goldman Sachs. Thank you so much for being with us. Really appreciate it. Sam Dart there, talking about the power demands. And this is going to be an affordability issue. And Danny, I'm so glad that you brought that up, because increasingly there was a chart that I saw that prices for energy have remained steady because gas prices have come down so much that's offset the increase that so many people have already felt in their electricity bills.
And what happens if that reverses? And how does politics get involved? It's happening in multiple sectors, this idea of crowding out. It's happening in electricity, also in manufacturing. A really great Bloomberg story a couple weeks ago that manufacturing spending, not AI related, has started to trail off. So a lot of the capital, resources, energy increasingly going to the dominance of AI.
Yeah, and to retailers, which is what we've seen this morning, which we'll be talking about coming up as we get some retail sales data from September, as well as, of course, ADP numbers coming out at 8:15. Coming up, Joe Amato of Neuberger Berman, Tracy Chen of Brandywine, Pooja Sriram of Barclays, and Krishna Namamani of Lafayette College. This is Bloomberg Surveillance. Good morning.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
We have in Singapore the state-of-the-art technology, and then we export that technology into our Meta plant in Georgia.
The Smart Factory brings software-defined manufacturing to life using digital twins, AI, and automation.
Our Meta plant was the largest investment of the company outside of Korea, at 3,000 acres, with an investment of $12.6 billion for a capacity of 300,000 cars a year.
The reality is the fundamentals are still sound.
I don't think we have yet seen the real bubble trade in AI.
The market's done a little bit of work here to take some of the froth out.
I think you could have a situation where the Magnificent Seven become a little less valuable and the rest of the market becomes more valuable.
We think there's a broadening out.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. U.S. retail sales and inflation data on deck in about 30 minutes as retailers kick off the holiday shopping season, with more Fed officials signaling a willingness to cut rates next month. The real question of the consumer in focus, and Alphabet displaying new market dominance on both the software and the hardware sides of the AI story, with the latest reports saying Meta may buy Google's AI chips in the years to come. Danny, showing the evolution of the AI trade into efficiencies and winners and losers.
It's not all tides are rising, or at least all rising at the same rate. But what does it mean for an industry that started to get very reliant on NVIDIA, not just their GPUs, but the funding that they're doing? OpenAI has that relationship with NVIDIA. Anthropic has the relationship with NVIDIA. If all of a sudden they're thinking, we need to change to different chips, NVIDIA starts to suffer. What does that mean to the interconnected web that it is woven?
Yeah, and is this part of the natural transition that actually is healthy, with people moving from AI is everything and superseding any kind of weakness you're seeing in the underlying economy or the consumer to, okay, let's figure out what's going on with the consumer, the underlying economy, and cater to it? It seems like right now that's the question that's bearing out in markets where you didn't see participation of the past 2 days of the rest of the 493. This morning, maybe we're seeing a little shift in tone.
Because of the earnings, it is kind of remarkable to look at the companies that have reported this morning. Best Buy lifting their outlook. Burlington, those shares dropped because apparently it wasn't good enough, but Kohl's soaring. It is some real dispersion among the retailers. The takeaway, though, is people are buying. They are buying goods, but will that strength continue? With, again, I saw a lot of bearish notes this morning. Maybe not outright bearish, but basically saying that some of the consumer is going to wane this holiday season and the pickup in spending won't be as big as we're used to.
Yeah, bearish, talking about 7,500 rather than maybe Binky Chada's 8,000 from Deutsche Bank for year-end 2026. Right now, we're seeing some of the tepid losses turn into tepid gains on S&P futures, unchanged on the day. You are seeing a bit of a bid into the bond space across the board as people start to look to the Fed to potentially cut next month. 10-year yields now below 4.02%. In the day ahead, we get ADP payrolls number coming out at just about 13 minutes time. Then at 8:30, we do get retail sales as well as PPI. And then, of course, tomorrow we do get the beige book as well. Watch for that as we try to get a sense of sentiment. Coming up this hour, we've got Joe Amato of Neuberger Berman with the latest stock rally, sort of trying to find direction. Tracy Chen of Brandywine as Google's chip challenge has NVIDIA shares falling, and Pooja Sriram of Barclays as we break down the latest, or maybe not the latest, but at least the latest that we get economic data. We begin this hour with stocks just about flat following Wall Street's best day in 6 weeks. Joe Amato of Neuberger Berman writing this: AI is a double-edged sword. Diversification across asset classes put a focus on quality, plus a focus on quality could help mitigate shocks stemming from AI-related disruption at the macro or micro levels. Joe joins us now. Joe, thank you so much for being with us.
Good to be with you.
This really goes to the heart of the question, right? Is it a feature or a bug that AI kind of marches to its own drum at a time when there are so many questions about the underlying economy? Do you think that this is a feature in a place that can actually keep equities charging higher into 2026?
I think AI is going to be a massive creative destruction process. So you're going to see a lot of winners and a lot of losers. So those companies that are able to adopt AI techniques to help protect margins, enhance their own earnings, I think are going to be the real opportunity, right? You've had the enablers rally in a big way over the course of the last number of quarters and years for that matter. So the first and, as I call them, the first and second derivative AI stocks. But now as that gets dispersed through the broader economy, you're going to see the benefits of that, as you saw in the early 2000s when more and more companies adopted the internet and got the margin enhancement from that.
Well, the rest of the economy feel it, right? I mean, we're sitting here trying to assess the state of the U.S. economy and how much you can get this divergence between AI and everything else. Will you get a convergence as you see a broadening out of the AI-related gains in non-tech companies?
I think that's what we expect. I mean, that's what drives this broadening out theme that we're seeing. And, you're already seeing it in the context of companies talking about use cases to gain efficiencies, whether it's Walmart talking about on their quarterly earnings about not really increasing headcount over the course of the next couple of years, yet showing good earnings and good margin improvement, right? So they're figuring out ways to get that efficiency from adopting these technology tools.
There was a study I was looking at from Kyndryl. It's a spinoff from IBM, which does consulting for different companies, saying that 62% of companies who are trying to implement AI are in pilot purgatory, as in they're trying to find ways and experimenting with ways, but haven't actually cracked the nut. If we are going to see productivity play out, how long is the timeline? Is this something you expect to be adopted and put into motion very quickly, or is this a multiple years long trajectory?
I think it's going to happen faster than the integration and adoption of the broad-based internet, we think, which took a good decade or so. But that said, it's a challenge, right? We see it in our own firm, right? There are use cases we develop for our investment professionals that can be quickly implemented and find real efficiencies in their investment processes. At the same time, when you're changing workflows and you're affecting multiple areas of, in our case, our firm, or the examples you're using, it's a little harder. It's going to take some time, but I think it's coming. And some of the studies that we've all read about, seen, whatever, around questioning the return on investment or the efficiency gains, it's just too early to tell. I mean, we see it, like we've been in what I would consider an early adopter at our firm. I mean, we were pushing out these tools in the summer of 23 for folks to start using. Yet we're still in the, I would say, early innings of really having it more integrated in the entire firm.
So does that mean you're not in the camp of, oh no, the financial services industry is about to lose all of its junior employees because ChatGPT is going to develop some model that takes away the grunt work?
I do think that AI is going to put pressure on low-end, white-collar services jobs, and that's a lot of what the folks coming right out of school. So what you're seeing now, college grads are struggling to find a job. Right? We're all seeing that the level of youth unemployment is higher than it's been. So that's worrisome for the labor market, right? At the same time, from the financial services industry, they can gain those efficiencies where you didn't need to necessarily have as many young folks as you needed before.
How are you understanding the recent declines that we saw before 2 days ago, before last Friday, in the AI space? I mean, is this an opportunity to buy? Is this a sign of tightening liquidity? Is this a sign that maybe people are getting less patient? And how are you sort of using this period to reset going into 2026?
We had a massive rally in those enablers that I talked about, right? The first and second derivative AI stocks. So having a pause, considering the challenges, the question whether, the pace of AI investment is going to continue at that level. What are the hurdles, right? I heard your last guest talking about power. Power is going to be, I think, an important element of the AI trajectory. But, as we move into 26, we're optimistic. I think we see the economy running, particularly here in the U.S., at a reasonable clip. Third quarter could be in the 3+ range for GDP growth, which is pretty remarkable. And when you think about the level of job growth that we've seen in the third quarter, it tells you something's going on with productivity, because we had it seems we'll have reasonable economic growth, yet modest amount of job growth. But as we move into 26, earnings are in good shape. Economy seems to be running at a decent clip. And we think the Fed directionally is cutting rates. And that's a good foundation moving into the new year.
Your characterization is different than what we heard yesterday from the likes of Mike Wilson over at Morgan Stanley, as well as Oh-Sung Kwon over at Wells Fargo, who is talking about a real tightening in both liquidity as well as a sense that the economy was flagging and that it wasn't necessarily productivity. Sort of the jury is still out about why we haven't seen more job growth and why we have seen ongoing earnings from corporations. They were saying they expect aggressive rate cuts, quantitative easing, essentially, by another name, and fiscal stimulus coming in. How much is that part of your thesis for 2026?
Well, I think the fourth quarter is probably going to be a little bit of a soft patch because of the government shutdown. So it won't, we don't think the run rate of the economy in the third quarter is going to continue in the fourth quarter. But I think we do expect to pick up in 26 based on rate cuts, based on the stimulus in the bill, which is very much front loaded in calendar year 26, purposefully so by the administration. Surprise, surprise. So I think that builds, again, a foundation for a better environment. This is what makes markets. People have different views on the pace of economic activity. I mean, we're reasonably sanguine about where things are right now.
When it comes to what makes markets and the structure of it, do you take anything away from the last 2 weeks where you had a risk off that really felt to be led by high momentum names, by crypto investments, and it had a spillover effect in the whole market? Is there some sort of fragility or at least concern you can take from that and extrapolate into 2026?
I think we saw a fair amount of frothiness, and I don't think you have a market rally as hard as it has, or in every bull market, you're going to have some level of excess excitement, if you will. So that coming back to reality is a good thing in our view, right? And again, it also plays into the notion that it's not just about those AI technology stocks that are where you want to be. I think you want to think about how that broadening out it becomes an opportunity from an equity market standpoint.
A lot of people, though, have been punished, either one, missing some of the AI stuff or trying to outright bet against it. Michael Burry is traded in his hat as a hedge fund manager to be a Substack writer, apparently, because of it. And there's this really interesting Goldman note I was reading. People who want to short this market seem to be playing it through utilities. 3.2% of free flow to short interest isn't a huge amount, but apparently it's one of the highest on record. And they reckon that it's a way to play against AI. If someone were to come to you and say, Joe, I'm nervous about AI, what would you tell them to do? Can you be short this market, or do you need to turn somewhere else?
I would be careful shorting this market. I think because of the foundations that we talked about in the expansion that we see in the broadening out. But you're going to see a lot of this, as I referenced, this creative destruction process. You're going to see a lot of winners, but you're going to see a lot of losers, and it's going to happen faster than people think about. So does it create an opportunity to short individual names versus, the losers that you think versus the winners? I think it does. That level of dispersion and single stock volatility, I think, creates those opportunities. But from a broad-based standpoint, I'd be careful to be short.
Yeah, it might make people feel more confident, actually, to be long. Joe Amato, thank you so much for being with us. Joe Amato of Neuberger Berman. That's what a lot of people have been saying on the show, right? Danny, the more people talk about bubbles, the better they feel that there isn't one.
Well, also, if you're in the beginning stages of a bubble, the best thing you can do is buy and to ride it to the top. But yeah, a lot of people have been punished betting against it. Michael Burry, kind of a poster child at this moment, I think, for that.
But Substack, a warm and fuzzy place. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Kohl's shares jumping in the pre-market after it reported third quarter earnings that topped analysts' top and bottom line estimates. The retailer also posting better than expected comp sales and raising its full year outlook. Best Buy shares also rising. The tech retailer reported strong third quarter earnings that beat estimates. The company boosting its full year adjusted earnings per share guidance and projecting higher comp sales and revenue for the fiscal year. And in tech, shares of Google parent Alphabet rising in the pre-market on reports Meta is in talks to spend billions of dollars on the search giant's AI chips. The information is reporting Meta plans to use Google's Tensor processing units, or TPUs, in data centers from 2027. An agreement would help establish TPUs as an alternative to NVIDIA's AI chips. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vani. Up next, we'll be breaking down the ADP employment report. Plus, Tracy Chen of Brandywine as Alphabet has its sights set on $4 trillion. That's next. You're watching Bloomberg Surveillance.
The AI theme has just come to the investment grade market. One of the risks is it starts to lift yields across the board and starts to make the cost of capital more expensive for other companies. That ultimately could be a drag on growth down the line. The investment grade market was, practically invented for this. It's going to be a while until we get to a point where it starts to degrade.
That was Ed Al-Husseini of Columbia Threadneedle speaking just moments ago. As we head to the market open, we are looking for those economic data points, including ADP. We will bring them to you when we get them. Right now, I believe that the ADP numbers just crossing. Let's head over to Bloomberg's Michael McKee. Mike.
Good morning, Lisa. Well, this is not good news considering it's the second week in a row that we see a decline in ADP. Average 13,500 jobs a week were lost in the 4 weeks to November 8th. Now, remember, this is a 4-week moving average, and it's also a couple of weeks behind, but it is the latest information that we have from ADP, and it isn't particularly good news. We will get the monthly numbers next week, and that may give us a better clue as to where the labor market is. But it certainly looks like the weekly ADP numbers, to the extent you can trust them, are making the case that the doves were making the last couple days and suggesting that the Fed might want to cut rates again.
The idea that private payroll losses are accelerating in the past 4 weeks, Mike, speaks to what we heard in the Wall Street Journal article with San Francisco Fed President Mary Daly when she was talking about how she has seen a real-time deterioration in the labor market. How much is that sort of coalescing, that idea kind of bringing together a lot of the Fed members based on just what's happening on the ground over the past few weeks?
Well, you look at the number of open market committee members who have said they are open to or want to cut rates. And you can see that there is a trend that has solidified since the last Fed meeting when Jay Powell told us it was not by any means a foregone conclusion that they would cut. It seems that a lot of these Fed officials talking to businesses around their districts have seen that companies are going ahead. And this was always a question out there, would be when do companies have to make a decision one way or another about personnel while they wait for the confusion about Trump's economic policies to clear up? Hasn't cleared up, and they do seem to be making some decisions now.
Thank you so much, Michael McKee. We are seeing just a little move in bond futures, although not significantly. 2-year yields lower now, more significantly to 3.47%. Now the bonds across the maturity spectrum getting a bid. Time now for the morning calls. First up, BMO Capital lowering its price target on Novo Nordisk to $46, expecting negative headwinds for 2026. Next up, Mizuho lowering its price target on Tesla to $475. Noting weaker electric vehicle makers in China and the U.S., those shares essentially flat. And finally, D.A. Davidson keeping a neutral rating on Alphabet, seeing increasing demand for Google's TPUs following a report from the information that Meta is in talks to spend big on the company's AI chips, and Google shares up 4.3% in early trading. Sticking with tech, NVIDIA, the other side of that, shares falling following that report from the information. Tracy Chen of Brandywine Global writing, the winner takes all mentality in the the United States has led to aggressive capex spending and hoarding of computing capacity, which is gradually diminishing free cash flow. Tracy joins us now. Tracy, thank you so much for being with us. I want to just start with a question of how much we're seeing the winners and losers shake out now, or were they just getting a hint of what it's going to look like, say, in 6 months?
Good morning, Lisa. I think we are still in the early stage of this AI investment or AI arms race. Right now, we are still getting some little hint about this winner and loser because today you can see Google share up and NVIDIA share down. I'm not saying who is the winner, who is the loser, but you start to see this differentiating market response to this AI development. Because before we have seen anything that touched AI, we will see the stock up, right? But now we can see the differentiation, and which is a healthy development.
Does that mean, Tracy, it doesn't pay off to play this passively? Considering we're starting to see some of the differentiations between companies, do you want to be actively managed, not even only in just picking sectors, but within some of the hyperscalers and big tech concentrated around AI?
Definitely. So if you look at their capex spending as a share of the free cash flow, you can see a divergence among the Magnificent Seven or AI 30. You can see some companies already over 100%, meaning their capex spending already exceeding their free cash flow. But some companies, the percentage is still below 20%. So you can see who is really stretching and who is still having a lot of free cash flow room for expansion.
So, Tracy, year to date, it's a market that the best performing sectors have been anything AI related. Communication services is number one, then infotech, then utilities, then industrials. Again, those last two you could argue about AI. The thing that's been left behind and has barely inched to a year to date gain is consumer staples and consumer discretionary stocks too. We have a whole host of earnings coming out this morning of some of the retailers. Some of them are strong, some of them aren't strong. Tracy, when can you jump in and buy these parts of the economy that don't touch the AI related story?
I think next year we should see a broadening of this AI theme, especially if you look at the key shape economy of the U.S., especially the consumers, the haves and have-nots. I would think that if you look at the consumer discretionary, that has been outperforming the consumer staples, and that I think next year would probably will accelerate this kind of dispersion. But if Trump is tackling the affordability problem, we will see this trend probably reverse a little bit, and the AI expansion theme or broadening theme should continue next year.
There's been about $200 billion of debt sales tied to AI in just the past couple of months alone. I mean, I feel like it's been an absolute bond bonanza over the past couple of weeks. And I'm just wondering at what point you say no mas. I mean, as an investor, are you buying or are you saying, I don't really want to get stuck with this stuff?
Yeah, I think I'm more optimistic of this AI investment theme. I think we're still in the early stage. As an investor, you just can't miss this secular trend. AI revolution is so massive, right? It's arms race not only within the U.S., but also between China and U.S. And the government will support this investment. So I think the market actually give the message that the hyperscaler or hyper spender, you have to slow down. And this kind of winner-take-all mentality might not work out as well because in China we see it's not winner take all, it's winners share all, right? So there are several companies they share with each other their know-how and they build something together. But in the U.S. You can see this aggressive competition because of the winner take all mentality, and this aggressive new issuance in the IG corporate market definitely get some pushback from investors, right? Investor will give them more scrutiny to see the monetization pace, right? Whether the monetization will go well or not, and they start to differentiate between among different players. And I think we are going to see some spread widening next year in the IG corporate market, and this will actually have some pressure on the long end of the treasury curve. That is my view. But as an investor, you can still play some short duration like data center ABS, and it has a structural protection as well. So you can diversify your portfolio and be very active and have some active selection, and you should have an attractive return.
Tracy Chen of Brandywine, thank you so much for being with us. Just digging into some details now from the ADP report. Joining us again, Bloomberg's Michael McKee. Mike, we've got some more details about what potentially is causing the deceleration and where the bright spots are and where the weak ones are.
Well, we don't really have any particular bright spots other than healthcare, which has been normally the biggest job creator. The weaknesses have been concentrated in manufacturing and construction. And those don't seem to be improving. And what's interesting is that ADP had previously reported a gain of 42,000 jobs in their monthly report for the month of October. And this report that's out today covers the 4 weeks up until November 8th and suggests a collective weekly average loss of 13,500. So those two don't square exactly. And this is much more of a gloomy report. This would take you into the first week of November and the last 3 weeks of October. So it's hard to get a clear reading on where the economy is at this point. But it does suggest there's some question about how strong the economy, the labor market is.
Michael McKee, thank you so much for that. You do see two-year yields falling in response to this report, leading into the data that we get just in about 5 minutes' time right now. You're looking at a decline of about 3 basis points, not that much drama in the two-year yield, but nonetheless, Danny, definitely raising questions about the trajectory and just how stale September data is in a very rapidly moving labor market.
And that's why you care more about data points like this, and also feeds into the Mary Daly argument that the labor market is more concerning because if there should be a linear move, that's more difficult to control than inflation is.
Yeah, coming up, we are going to be speaking about retail sales and PPI. That's due in less than 5 minutes' time. Pooja Suram of Barclays joining us to react to the ADP figures as we do see a shift, at least in tone, from the jobs landscape. This is Bloomberg Surveillance. 25 seconds away from retail sales and PPI data from September. Right now, the state of play is lining up like this. You are seeing a bit of a lift in equity futures, S&P futures higher just a touch by less than a basis point. Meanwhile, you've got NASDAQ futures just meandering. Again, you are seeing the Russell 2000, though, with a lift of half a percent, which really comes in the heels of the rally that we're seeing in the bond market, 2s, 10s, and 30s. You are seeing that bid. Right now, we are getting that data. Let's head over to Michael McKee with retail sales and PPI. Mike.
Oh, Lisa, we've got a little bit of a disappointment in terms of retail sales. Headline retail sales come in up 0.2%. They were up 0.6 in the month of August. Now, remember, this is September data. The expectation was for a 0.4 rise. Ex-autos were up 0.3, which is what was forecast. But the control group, we don't have that number yet, hasn't come through yet. We'll get that for you in just a second. But ex-autos and gas up only 0.1%. So a lot having to do with prices there. In terms of PPI, the headline PPI comes in up 0.3%. It was down 0.1 in the month of August. So there's a little bit of an inflation issue there. The core rate up 0.1%. PPI on a year-over-year basis is up 2.7%. That's a tick up in September from August. And PPI core on a year-over-year basis falls by 0.2 to 2.6% from 2.8%. Retail sales control group comes in down 0.1% after a 0.6 rise in August. So retail sales weaker than expected. Inflation a little bit hotter than expected, but mostly in the headline groups, which probably suggests the same thing as retail sales, that gasoline prices, energy prices, and car prices may have played the role there.
We've seen a little bit of a build on the market moves that we saw after ADP. We see the bid into the front end of the yield curve continuing with 3.4668 if you want to go out to the fourth decimal. The sense that the Fed is going to be prompted to cut rates based on the fact that heading into this holiday period back in September, there wasn't that much momentum, or at least as much as people had expected. And that, yes, inflation maybe at the headline level a little concerning, but under the hood, not so much. Mike, how important is data from September that we're getting now? How do you understand this in the scheme of understanding an economy that seems to be rapidly moving?
Well, I think you hit the major problem there, Lisa, by saying the economy is rapidly moving, because the Fed can't take a lot of comfort in this data one way or another, even having it, because it just tells you where we were 2 months ago. And that is way behind where we may be now. The real question is, what, in terms of retail sales, are we going to see in this holiday period? We've got Black Friday coming up to kick it off. And when you look at what we saw in the retail sales numbers, car sales down 0.3%. Gasoline stations were up 2%, but that was after a 3.1% gain. So gasoline and food, part of the problem here. Clothing and accessories down 0.7 in the month of September. And the sporting goods, hobbies, toys down 2.5%. General merchandise up only 0.1%. People weren't spending money on the things that we're going to see them, in theory, spending money on for the holidays. So it is a bit of a warning that consumers are a little concerned. We've seen that in the consumer expectation numbers as well.
Maybe, which is why we're seeing Dick's Sporting Goods shares falling and them closing some Foot Locker stores. Bloomberg's Michael McKee, thank you so much. I'm sure there is more to it. Let's head over to Pooja Shriram of Barclays, who joins us now here in studio. Pooja, thank you so much for being here. What's your initial read on not just the numbers that we just got, but the importance of them based on the fact that they're pretty old?
Yeah, I think, look, in a situation where we haven't been getting a lot of fresh data, some data is useful. I would say this helps sort of fill in the gap between what happened before this holiday season. And if anything, it's slightly useful. You're able to build on a trend in terms of what was happening in the economy heading into the holiday period. But I would not deny that it is a bit backward looking.
Is there a little bit of a tension between Mary Daly, someone who's very close to Chair Powell, saying that she is more concerned about the labor market, John Williams saying that he would endorse something of a cut, again, the top lieutenant at the Fed, versus the last time we heard from Chair Powell talking about this data fog, saying that when you're in that fog, it makes sense to move slowly. Is there tension in those things?
I don't think so. Look, I think one thing that seems to be clear is everyone is having a hard time figuring out if policy is generally restrictive, and people have very different views on that. In addition to that, like you said, the data fog makes it difficult, but the doves have something to pick on, and that would be the rise in the unemployment rate that we saw last week, maybe even this morning's weak ADP data, although I do think it's somewhat of a noisy signal. And on the other hand, you have some of the others, the hawks on the committee, who are generally worried about inflation and would like to see more contemporaneous data, perhaps, before making the move. So I think there's just a genuine difference of views.
And do you think that genuine difference of views continues on because of the fog, or has something fundamentally shifted at the Fed, especially as you get more politics injected into it? Do you expect that, regardless of how some of the data shakes out, that just lack of consensus is the new normal?
Well, I wouldn't go as far as saying that politics is coloring how the Fed is thinking. It's just, we need to recognize the fact that the data that we've been getting, paints a picture of a slight tension between the two mandates of the Fed. You do have a world where labor market momentum has clearly slowed. Downside risks have emerged. On the other hand, we haven't really seen much progress on the inflation front. I think the last time I was here, we were discussing core PCE inflation has been stuck at 2.8, 2.9 since, a while now. And so I think there is a legitimate reason for hawks on the committee to be worried about the inflation side of the mandate.
How important is this holiday shopping season?
Well, usually it is reasonably quite telling of consumer momentum, the health of the consumer. Again, how much we're able to capture in the official data is questionable, just given we're coming out of a long government shutdown. But usually it's something that people look at quite closely.
I guess, how accurate can we get a reading when we take a look at something like holiday shopping? And I was struck by an essay that started to talk about how the poverty line was really referencing 3 times the average family's food bill, and that food now comprises 5 to 7% of a budget rather than a third of the budget. And so it's completely changed the equation. And what people are feeling on that lower end is a lot of significant pain that is not being reflected in any of these numbers. Can that persist? Can you have a universe where there is a growing cohort of people who are feeling a lot of pain and are not able to afford things and are forgoing a lot of basic purchases, but you have wealthier individuals that continue to spend and prop up retail spending? The holiday season does fine. Can you have that indefinitely?
Yeah, I think it's hard to answer. Indefinitely doesn't seem like it's a reasonable assumption to have, but that K-shaped economy has been going on for a while now. I think it's, it comes down to some very basic statistics, like the top 20% of your income group drives more than 40% of consumer spending. And I think that's your point, that you could have data that looks absolutely fine, even when you have a lower income group that's clearly feeling some pain. Now, just coming back to your holiday season shopping, there's also a view that consumers are now being very intentional spenders. So one of the things that some of the credit card data show is consumers have not really done off-season shopping as much this year, but it's really been a lot of shopping that's been reserved for promotion periods. So think about the July Amazon Prime Day sort of an event, and perhaps coming into the holiday season, spending may look fine.
That doesn't sound like the healthiest of developments, though, that everybody's just waiting for value or a deal. When does that become something worse? That, okay, yeah, spending's still happening because they find deals, but that in itself suggesting that there is a little bit more tension.
Yeah, I think a lot of it is also tied to the labor market, right? We've been in a labor market that seems very stagnant so far. Yes, we're not seeing as many layoffs, but there's not been too much hiring as well. That's also likely to feed into consumer thinking and sentiment. So to the extent that the labor market is just about stuck in this phase, I think caution is perhaps where the consumer is headed towards. It depends really on developments on that front.
What about then some of just the headlines coming through, Verizon letting go people, Amazon letting go people? Does that have a measure of just denting sentiment, even if people themselves haven't lost their job, but just seeing these headline figures? Does that also cause some pullback in people's willingness to spend money?
Perhaps. I mean, absolutely. The media narrative around this has been, quite immense. A lot of the headlines clearly grabbing attention. And these are big companies we're talking about. So, it can't go unnoticed.
And right before Christmas, too.
Yes. And I'm sure it is feeding into sentiment. It's making people a little more reticent to spend. But again, I think in the grand scheme of things, the extent of layoffs that we've seen are still not alarming. Yes, they've come from big companies, but I would say it's about the usual amount of friction that you would see in a labor market, which is in the state that it is right now. But surely something that we need to keep watching.
Pooja Sriram of Barclays, thank you so much for being with us this morning, and have a wonderful Thanksgiving. Let's head back to Michael McKee, who has some details after parsing through the latest retail and PPI data that we got out of the United States government.
Well, Lisa, I want to look at a little bit of the PPI here. When you look at the breakdown of goods versus services, the index for final demand goods increased 0.9%, but services were flat. And it's the service price increases that have been worrying Fed hawks. So maybe this gives them a little bit of reassurance. 60% of the September rise in the index, the headline index overall, is traced to gasoline, which is what we thought when we first saw the numbers there. Gasoline and cars. Indexes for meat, residential electric power, motor vehicles and equipment all went up. And that's what you've been hearing pretty much from everybody these days in terms of inflation. So the Fed is seeing a picture that it basically understands, it appears. So now the question is, what kind of data do they have that tell us where we've gone from here? We do get the GDP report on now December 23rd for the third quarter. It should be relatively strong given the numbers that we have gotten. But the Fed is more concerned with where we are at the moment in the fourth quarter. And that we're going to have to wait on.
Michael McKee, thank you so much for all of that. Right now, priced into Fed funds futures is an 80% chance of a December rate cut. That is up from 35% last Thursday. So a sense of how much the market has really shifted its perception of how the Fed is going to respond. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Bonnie Quinn. Bonnie.
Lisa, thank you. So recapping that data we got moments ago, U.S. retail sales in September rising just 0.2%, half the estimate for 0.4% of an increase. Producer prices rose 0.3% month over month, which met expectations, but ticked up to 2.7% from a year earlier, which was above estimates. And in the labour market, ADP private payrolls fell an average of 13,500 per week over the 4 weeks ended November 8th. Apollo Global Management CEO Mark Rowan saying people have, quote, lost their minds over private credit fears. Rowan rejecting the notion that adding private assets to retirement and insurance portfolios could pose a systemic risk. According to the Apollo executive, most private credit held by insurers and by pension fund buyers is rated investment grade. Apple cutting jobs across its sales organization in rare layoffs. Sources telling us here at Bloomberg, the iPhone maker has eliminated dozens of roles in a bid to streamline the way it offers products to businesses. The affected positions include account managers and staff who operate Apple's briefing centers and product demonstrations. That is your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. Up next, Krishna Mamani of Lafayette College as traders add to December rate cut bets. Plus, Vonnie Quinn comes back with your morning movers. Kohl's and Abercrombie shares soaring following strong earnings results. This has been quite the initial read on the holiday shopping season. This is Bloomberg Surveillance.
This third quarter's results from the tech leaders show huge capital spending commitments, which will continue to boost the investment share. Open question on productivity. Longer term, we've looked at this in our long-term capital market assumptions work. We do feel that productivity is set to gain, but it's a long burn. It requires the investment first. And so we think that there's reasons to be positive.
That was John Bilton of JP Morgan Asset Management joining the crowd of investors who are seeing a better 2026, potentially even another year of double-digit gains. This morning, you are seeing a lift pretty much across the board, although S&P futures going nowhere at this point, essentially flat. You are seeing, though, a bid into bonds after data that really pointed to ongoing softness, particularly in retail spending. 10-year yields now almost at that 4% level, a little bit of dollar weakness. Euro strength 115 with an increasing number of investors gaming out the idea of ongoing dollar weakness. Under an hour away from the cash open, here are your morning movers with Vonnie Quinn. Vonnie.
Well, Lisa, one of the stories out there today is when will NVIDIA's prevalence in the GPU space be undermined? And today might be the beginning of that because we are seeing the information reporting that Meta is buying billions of dollars worth of Google's AI chips. Now, they're TPUs, right? So if people start buying TPUs instead of GPUs, then that might be a problem for NVIDIA. So we're seeing the stock suffer, AMD suffer a little bit as well, and Alphabet continue its rise. The thing is, it's a very, very big question, right? NVIDIA has been the market leader for so long now. What would switching costs be? Would companies even be able to get out of contracts? It's a very open question, and we'll be getting lots of analysis on that throughout the coming days. But let's take a look at some retailers, because here are two turnaround stories, and boy, are investors rewarding these companies. Kohl's essentially continuing the same strategy as the new CEO's predecessor. So the new CEO is Michael Bender. He's been in the job on an interim basis since May. Well, the third quarter really bore out that strategy, which was to focus on jewelry and to focus on petites. And it beat and raised, even though it was still seeing lower sales year over year and on a quarterly basis. But that said, investors rewarding that stock. Now, Abercrombie & Fitch, the same thing. Fran Horowitz really delivering there as well. For the Hollister brand, mainly, same sales, comp sales for Hollister up 16% as opposed to a forecast for up 6 to 7% for the whole company. So not a bad story. The reverse is Burlington, right? Burlington used to be known as Burlington Coat Factory, and of course warmer weather stymied Burlington in many of major cities. At least that's what Burlington is saying. It didn't beat, it didn't raise. In fact, it missed estimates, and investors are really punishing that stock. Although, to be fair, Abercrombie was down 56% year to date before today's move. Burlington was actually flat year to date.
Thank you so much, Vonnie. I appreciate it. Have a wonderful rest of your day. Counting down to the opening bell. Here's a trading diary for the week ahead. After the closing bell, earnings from Dell and HP. Wednesday, another round of jobless claims, durable goods, and the Fed releases its beige book. Thursday, U.S. markets are closed for Thanksgiving. And finally, Black Friday, the unofficial start of the holiday shopping season, although perhaps this is a Black Week because it is clearly a full week affair. Turning to the economy, Krishna Mamani of Lafayette College writing, before the shutdown, stronger hard data anchored the market expectations. The lack of hard data is giving vibes a freer space. Krishna joins us now with his vibes ahead of Thanksgiving. Krishna, why is this problematic given the fact that people have learned to depend much more on alternative data sources, whether it's ADP or whether it's some of the corporate executives on their earnings calls?
Well, I think people talk a good game, but if you go back and look at how the markets have reacted over the last 4 or 5 quarters, the vibe data has been reasonably soft, and then hard data comes out and kind of gets it out of that particular funk. So, yeah, I mean, alternative data certainly is helpful, but I don't think they tell you the whole picture. That has been the case for a while. So, if third quarter GDP, as Michael Key says, is going to be reasonably strong, and the underlying deficit situation hasn't changed that dramatically, at least not yet, then it's kind of unreasonable to expect for things to slow down massively despite the vibes.
Does that mean, Krishna, those on the Fed that are arguing for a cut are making that argument based off of vibes? Is that a problem if they are?
Well, I mean, part of it is vibes, but I think the labor market is certainly softening, and therefore, getting ahead of it makes a little bit of sense. I was a little surprised as to how hard Jay Powell pushed against that cut in the last meeting. So he clearly had a bit of a situation in the committee. And I think with everyone else kind of lining up, or at least the voting members lining up, he's in a much better situation. So that is getting reflected in the market prices. But there is softening in the labor data without any doubt. Not much layoffs, but not much hiring either.
So, okay, we have to read the tea leaves to understand where this economy is. And then when it comes to the Fed, Krishna, we've gotten to a place where we're counting each vote. Who's on the hawkish side? Who's on the dovish side? Who has an ear to Powell? Who's the top lieutenant that could sway things? Is it a problem that you don't have that clear message coming out from the Fed? Because as we've seen, it transmits into markets, and there's been a lot of volatility from that. In this new era where the economy is confusing and there's a divide among the Fed, is that problematic for the transmission of policy?
Well, so, if you think about it, you have 2 separate blocks forming on the committee. And those blocks are, the presidents on one side and the committee, the FOMC members on the other side. The challenge is when Jay Powell was in charge and there weren't all sorts of politicking going on, it was easy to kind of get it to a consensus. And right now, you can't get to that consensus. So I think until the new chairman is announced, that particular challenge will probably persist with us, and we'll have to kind of slog through it somehow. That being said, I think, as I said before, the labor market was slowing, continues to slow a little bit, not catastrophically so. So I think the pushback for the last cut, for the future cut, that Jay Powell provided maybe was slightly misplaced, and the markets are basically calling him out on it.
Krishna, heading into 2026, since this is the moment of year-ahead outlooks, and everyone seems to be giving one, how are you seeing the year shape up in terms of risk-reward for the stock-bond allocation, and just, what are you baking in terms of Fed action behind that?
Well, so I think if you look at the market projections, there are a few more cuts coming down the pike. But the key thing with cuts is even if they do come, I don't think they change the tone of the market meaningfully. It'll still be driven by growth. It'll still be driven by what happens in the labor market. I think 1 or 2 cuts in the front end of the market, you look at 10 years. Hasn't really moved much despite all the talk of Fed cutting and Fed not cutting. So I think that sort of tells you how it will persist. And that's the environment where inflation is still up, so 10-year cannot drop too much, and growth is slowing down, so at least modestly anyway. And that's not an environment where risk assets do fabulously well off of very high valuations. I think that is really the challenge for the market right now.
So you see kind of a middling 2026 in terms of returns for both stocks and bonds?
Yeah. Again, there are people out there saying that it'll be another double-digit type of, a high double-digit type returns. I can't square that with what I see there. For that, everything, all this AI-related stuff has to come much before than it is likely to come. So I think the profitability outlook is decent, but it is not as superlative relative to current valuations. I think that's the biggest challenge for the market.
Krishna Mamani of Lafayette College. Have a wonderful Thanksgiving. Thank you so much for joining us. It feels like a Rubik's Cube right now. It feels like people are picking up different threads of the narrative, pointing to the idea of rate cuts along with AI escalation and saying it's going to be a really good 2026. And other people saying, watch the economy and it's not so hot. What are you focused on in the next couple of hours? I know you're going to be heading over to do another 2 hours of television.
I am indeed, and it has to be the churn underneath the surface of these big tech players because it kind of dominates all these themes because it's an economy that's becoming more reliant on the AI spend. So if NVIDIA is kind of losing some of its throne to Google, what does that mean for all the spending, the investments, and thus the American economy?
Yeah, this is what we'll be talking about for many days and weeks to come. Coming up tomorrow, Amy Wu Silverman of RBC Capital Markets, Dan Ives of Wedbush, Deborah Cunningham of Federated Hermes, and Vinu Krishna of Barclays. This was Bloomberg Surveillance. Good morning.
इस क्रूड ऑयल को देखोगे, क्रूड ऑयल स्टिल कंप्लीटली साइडवेज। देखते हैं अब 630 होने वाला है। 630 पे एक बार न्यूयॉर्क सेशन ओपन होगा, फिर कुछ मोमेंटम आए क्रूड ऑयल में। नेचुरल गैस में कल याद होगा एक ब्रेकडाउन किया था, मैं कल आप लोगों से कह रहा था, उस समय ब्रेकडाउन हुआ था, रीटेस्ट का प्लान कर रहे थे कल 15 मिनट टाइम, बट याद होगा वो 15 मिनट टाइम फ्रेम पे रिवर्स आ गया था, थोड़ी बहुत सेलिंग वापस आई, बट वो वापस नीचे नहीं गया। ठीक है, फेक ब्रेकडाउन था, ट्रैप किया यहाँ पर आप कह सकते हो। उसके बाद देखो मोमेंटम में ही है, अपसाइड, बिल्कुल अपसाइड, कंप्लीट फेक ब्रेकडाउन। सात बजे अनएम्प्लॉयमेंट क्लेम्स का डेटा आएगा, थोड़ा बहुत इम्पैक्ट करेगा। क्रूड ऑयल और नेचुरल गैस की इन्वेंट्री दोनों ही आज है, 9 बजे क्रूड ऑयल की और 10:30 पे नेचुरल गैस की। उसके बाद फिर कल आई थिंक परसों, क्योंकि ब्लैक फ्राइडे है, फिर 29 और 30 को मार्केट वैसे ही बंद है, तो कल थोड़ा बहुत मोमेंटम होगा, क्योंकि कल रात को छुट्टी पे चले जाएंगे यूएस मार्केट के लोग मोस्टली। फिर 28 को ऐसी ब्लैक फ्राइडे है, यूएस में वॉल्यूम वैसे ही कम रहता है छुट्टी की वजह से। बाकी इंडियन मार्केट ने क्या रिबाउंड किया है, मज़ा ही आ गया, मतलब कोई एक्सपेक्ट नहीं कर रहा होगा जिस तरह से कल मूव किया। कल एक्चुअली जो क्लोजिंग आई थी ना, दैट इज़ अराउंड 25,900 के अप्रॉक्सीमेटली एक सपोर्ट था। कल क्लोजिंग उसके नीचे आई थी, मतलब सपोर्ट के हल्का सा नीचे क्लोजिंग दी थी, निफ्टी फ्यूचर की मैं बात करूं। रीटेस्ट नहीं किया था कल, ब्रेकडाउन जरूर, क्लोजिंग आ गई थी 25,900 के नीचे, तो ऐसा लग रहा था कि आज अगर रीटेस्ट करता तो और नीचे जाता, बट यहाँ पर भी एक फेक ब्रेकडाउन कल, और कंप्लीट गाढ़ा गैप अप एंड देन कंटिन्यूसली अगेन अपने ऑल टाइम हाई की ओर भी। निफ्टी भी एंड बैंक निफ्टी एज कंटिन्यू सेम, बैंक निफ्टी भी कंटिन्यू करता हुआ अपने ऑल टाइम हाई को। सो काफ़ी अच्छा डे कह सकते हो। इवन मैं कोई एक्सपेक्ट नहीं कर रहा होगा इतना बड़ा मोमेंटम डाउन साइड से आएगा निफ्टी में स्पेशली। बैंक निफ्टी फिर भी बुलिश ही है, उसमें कोई अभी तक बेरिसनेस आई नहीं है, मंथली वीकली डेली और इवन 4 आवर टाइम फ्रेम तक तो कोई बेरिसनेस नहीं है। बट निफ्टी में थोड़ा बहुत 4 आवर में दिख रहा था कि ब्रेकडाउन हुआ है, बट गैप अप, कंप्लीट रिबाउंड। मंथली टाइम फ्रेम की कैंडल भी क्लोज होगी, तो देखते हैं, अभी 2 दिन है, कहाँ ऑल टाइम हाई के ऊपर क्लोज होती है या फिर नहीं होती है। 26,290 के नीचे अगर मंथली की क्लोजिंग आती है ना, तो फिर मजा आएगा। 2 दिन बचे हैं, देखते हैं निफ्टी में। एमसीएक्स में आर्ली का व्यू सिल्वर में, या सिल्वर और गोल्ड में ना, मैं सजेस्ट करूंगा आज, आज कल भी है क्या, नहीं कल नहीं है ना, नेक्स्ट नेक्स्ट वीक यूएस रेट कट का डिसीजन आने वाला है नेक्स्ट वीक। नेक्स्ट वीक नहीं, नेक्स्ट मंथ। ठीक है, दो दो वीक्स के लिए कर सकते हैं, देख लेते हैं। ठीक है, 2 वीक्स के लिए देख लेते हैं, एक सेकेंड। बाकी कल क्रूड ऑयल में एक बड़ा सेल ऑफ आया था कल, उसके बाद से रिकवर कर गया था बाइंग में, आज तो भी साइडवेज ही है, कुछ मोमेंटम भी नहीं हो रहा है। थोड़ी देर पहले क्रेमलिन, जो आपका रसिया का की कैपिटल है, एक तरह से उनकी गवर्नमेंट ही मान लो, वहीं से ऑपरेट होती है, तो उनके ओर से स्टेटमेंट थोड़ी देर पहले आया था। उन्होंने कहा था कि जो यूक्रेन के साथ वॉर एंडिंग के लिए बातचीत चल रही है, उसमें हम ज़्यादा अभी इंटरेस्टेड है नहीं, ऐसा उनकी ओर से स्टेटमेंट आया था। अब लेट्स सी ये कितना सही है कितना नहीं है, तो ये उनकी ओर से स्टेटमेंट आया था इंडियन मार्केट क्लोज होने के बाद। लेट्स सी कैसा रिएक्शन देता है इस पर क्रूड ऑयल वैसे, बाकी और तो कोई न्यूज़ है नहीं। एमसीएक्स में कह रहा हूँ ना, 2 वीक्स के लिए, या 2 वीक्स के लिए यस, क्रूड इन्वेंट्री आज ही है. क्रूड ऑयल इन्वेंट्री एंड नेचुरल गैस इन्वेंट्री बोथ आर टुडे. वो है ना आपका ब्लैक फ्राइडे, तो उस वजह से यूएस में बंद रहता है. इंडियन मार्केट तो ओपन रहेगा, तो वहाँ वॉल्यूम कम हो जाएगा. नेचुरल गैस भी ठीक ही चल रहा है. मॉर्निंग पे ओपनिंग के बाद देखोगे कंटिन्यूसली बुलिश ही है. कल फेक ब्रेकडाउन देखी, लिक्विडिटी ली थी एंड देन इट इज कंटिन्यू नाउ अपसाइड. एक सेकंड दो. तो सिल्वर एमसीएक्स में 2 वीक्स तो ज़्यादा हो जाएगा. मैं 1 वीक के आसपास ही देख पाता हूँ कि अगर आपको 2 वीक्स का देखना है ना एनालिसिस, तो आई विल सजेस्ट आप थोड़ा सा 1 डे या फिर 4 आवर का देख लो. 2 वीक्स बहुत हो जाता है ना. 2 वीक्स इज़ अ वेरी हाई, वेरी लॉन्ग टाइम एक्चुअली. सो फॉर एटलीस्ट अगर 2 वीक्स का देख रहे हो या उससे ज़्यादा का, तो 4 आवर में देखो. बाकी मैं 1 आवर के अकॉर्डिंग देख ले रहा हूँ, बट उसको 1 आवर को वीकली में मत लेके जाना. वीकली अगर एनालिसिस कर रहे हो, 4 आवर एंड अबव, 4 आवर या फिर लाइक वन वन डे टाइम फ्रेम, दैट विल बी वेरी गुड. 1 आवर टाइम फ्रेम पे प्राइस के पास ऊपर एक रेजिस्टेंस जोन है क्रिएट ऑलरेडी, पुराना है. हाँ, इसमें देखो फिलहाल के लिए 1 आवर टाइम फ्रेम पे, वैसे मैं इसको जैसे मैंने बताया वीकली में मैं आपको सजेस्ट नहीं करूँगा. थोड़ा सा राउंड फिगर में देख सकते हो नंबर. ठीक है, ऊपर अभी फिलहाल के लिए जाओगे तो ऊपर आपके पास 1,62,000 से लेकर 1,63,300 के आसपास ये रेजिस्टेंस जोन ही है. और नीचे 1,53,300 से लेकर 1,52,800 तक एक सपोर्ट जोन है. बीच में कि यहाँ पर गैप है वो अभी पेंडिंग है, वो भी थोड़ा बहुत रोकेगा प्राइस को. तो 1,57,500 के अप्रॉक्सीमेटली एक पॉइंट ऑफ इंटरेस्ट ले सकते हो. दैट विल बी अ सपोर्ट जोन एज वेल. तो ये लेवल है, बट एज आई सेड वीकली में मत लेना इसको. मैक्सिमम वीकली लेना. 2 वीक तो बहुत ज़्यादा हो जाएगा. उसके लिए 4 आवर टाइम फ्रेम का यूज़ करो अगर एमसीएक्स यूज़ कर रहे हो तो. ठीक है, ये एमसीएक्स 1 आवर टाइम फ्रेम सपोर्ट रेजिस्टेंस. नेचुरल गैस में ऐसा कोई रेजिस्टेंस है ही नहीं, वो ऑल टाइम हाई का ही हायर टाइम फ्रेम पे ही रेजिस्टेंस है, 4 आवर टाइम फ्रेम वाला। 15 मिनट पे ऐसा कोई सच रेजिस्टेंस नहीं बना वहाँ पे, उसी को लगा देते हैं फिर से, पूरा रिबाउंड कर गया बिकॉज। रेजिस्टेंस है बट याद रखना ये 4 आवर टाइम फ्रेम का रेजिस्टेंस है, तो वो बहुत पहले से ही हम यूज़ करते हुए आ रहे हैं उसे, वहाँ तक जाने में काफ़ी टाइम लगेगा। बेस्ट है कोई 15 मिनट में रेजिस्टेंस फ्रेश बना दे, क्योंकि ऐसा नहीं है कि इस रेंज के अंदर नहीं हो सकता 15 मिनट का रेजिस्टेंस, बट पीछे इतना 15 मिनट में चार्ट शो नहीं कर रहा है। सो बेस्ट के सिनेरियो कि 15 मिनट में प्राइस थोड़ा सा कोई नया रेजिस्टेंस क्रिएट करे, और जो लेवल लगाया हो दैट इज़ अ 4 आवर टाइम फ्रेम रेजिस्टेंस न्यू। बार सेलिंग आई है बस वहाँ से अभी, दूसरी बार आएगा तो आएगा प्राइस, एक बार और आया है, नॉट एग्जैक्ट, नॉट एग्जैक्टली, नॉट एग्जैक्टली। इसमें वही है, इसमें कुछ लेवल थे ही नहीं, कल भी याद होगा आप लोगों को हाई लेवल पे लगाया था 4 आवर में, एक रेजिस्टेंस है, कल यहाँ पर याद होगा वो एक सपोर्ट था, ब्रेक डाउन किया, हम रिटेस्ट का प्लान कर रहे थे, मैंने फिर मना कर दिया था, फेक ब्रेक डाउन किया उसने, वो गारंटी लगी, कल थोड़ा सा लग गया था, फेक ब्रेक डाउन ही था, रिकवर कंप्लीट हो गया। नीचे सपोर्ट जरूर है बट वहाँ तक आने में टाइम लगेगा। क्रूड ऑयल भी वही कल की तरह ही कर रहा है, कल भी सेम ही किया था, पूरा दिन भर साइडवेज, फिर एक बड़ी कैंडल बनी नीचे, आज अभी पूरा साइडवेज ही है, अब सडनली कहीं कैंडल बनेगी, पता नहीं क्या हो गया क्रूड में। आई थिंक ओपेक की मीटिंग भी है, संडे को ओपेक की मीटिंग है, ओपेक और जेएमएमसी की, और फिर उसके बाद ओपेक की मीटिंग है संडे को, तो 26 आज हो गया, 29 30 को तो वैसे ही मार्केट बंद ही है, 28 को गुड फ्राइडे हो गया, मोमेंटम ऐसे ही नहीं आने वाला, कल का ही दिन है मेनली मोमेंटम के लिए। कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ सकते हैं। बाकी कोई न्यूज़ वगैरह भी नहीं है फिलहाल। Witkoff advised Russia on how to pitch Ukraine plan to Trump. Reveals cures larger than expected physical buffer in UK budget.
Lloyds, Vanguard and Barclays have signed up to launch new online hubs to help people invest here in Britain. At this budget, consistent with the commitments in our corporate tax roadmap, I will retain our competitive corporation tax rate, the lowest in the G7, and retain our generous full expensing offer for business investments. I will also introduce a new 40% first-year allowance so that businesses can write off more of the cost of their investment up front, while reducing main rate writing down allowances in line with fiscal constraints. Private investment is the lifeblood of economic growth, but growth needs public investment too. When faced with challenges, previous chancellors have chosen to decrease, delay or cancel capital spending. But low investment is the cause of our productivity problem, not the solution. So my choice is not cuts, not stagnation, but to maintain the additional £120 billion of investment that I provided at the spending review. In transport, to link our towns and our cities, energy infrastructure to power our businesses, and housing, so people can live near good jobs, paying decent wages and growing businesses. That is the Labour choice. I'm grateful to the Financial Secretary to the Treasury for his work in driving our growth agenda forward. As we allocate investment for the infrastructure that is the backbone of economic growth across our country, today I will commit investment for the Lower Thames Crossing. And we're continuing to drive investment in city-region transport, in the Midlands Rail Hub and the Transpennine Route upgrade, along with our commitments to the Northern Growth Corridor, including Northern Powerhouse Rail. It is this Labour government that has overhauled our planning system, and I will today provide further funding to increase planning capacity through a new skills offer, as called for by the British Chamber of Commerce and the Confederation of British Industry. It is this Labour government that has invested in nuclear power, in Sizewell C and in Culham. We are taking forward our commitment to slash electricity prices for thousands of manufacturing businesses, as Make UK and many others have called for. And today I'm pleased to welcome John Finkelton's report, an ambitious plan to cut the red tape that has tied our nuclear industry in knots for decades. And within 3 months we will set out our plan for delivering his recommendations. We are proud of our industrial heritage, and we are determined to build the industry of the future so that we buy, make and sell more here in Britain. That's why, as we increase defence spending, we are investing in Portsmouth, in Barrow and in Plymouth, And I'm pleased to be supporting Team Derby, an initiative to drive growth in one of our defence industry hubs. It's why we stepped in to save British Steel in Scunthorpe and invested in Sheffield Forge Masters. And it's why we've changed government procurement so we can buy British when it is crucial to our national security. For steel, for shipbuilding, and today for AI, driving innovation and building that great industry here in Britain. But it's not just what we invest that matters, it's how we invest. Putting money and power back in the hands of local and regional leaders. Today, we are devolving £13 billion of flexible funding for 7 mayors to invest in skills, business support and infrastructure. I'm extending the business rates retention pilots in the West of England, Liverpool City region and Cornwall until 2029. I'm providing £30 million for the Kernow Industrial Growth Fund for sectors like critical minerals and marine innovation. I am establishing the Leeds City Fund, a long-term agreement to retain business rates to fund local regeneration projects like the development of Leeds South Bank, and I am allocating £20 million for the new Peterborough Sports Quarter and £16 million for a science centre in Darlington from the Growth Mission Fund. The benefits of investment the benefits of investment and growth must be built and felt in every part of our United Kingdom. So we are providing an additional £370 million for the Northern Ireland Executive, £505 million for the Welsh Government and £820 million for the Scottish Government over the spending review period through the Barnett formula. And I am making... Sorry, I didn't quite catch that from the SNP. Did they not? Perhaps, Madam Deputy Speaker, they didn't hear. £820 million for the Scottish Government over the spending review period because Anna Sawa asked us to. And I'm making targeted investments in our industrial strategy sectors across the UK. In Northern Ireland, I am providing £17 million to support businesses and strengthen the UK internal market, and backing advanced manufacturing through the Northern Ireland Enhanced Investment Zone. Wales will be the host for 2 AI growth zones, creating more than 8,000 jobs, supported by a £10 million investment in the semiconductors critical for that industry. And we are building the UK's first small modular nuclear reactors with Rolls-Royce at Wilfer in Anglesey. 2 Labour governments working together in Wales to deliver for the people of Wales. And in Scotland, I'm committing over £14 million for low-carbon technologies in Grangemouth, £20 million to renew infrastructure at Inch Green in Inverclyde, and £20 million to redevelop Kirkcaldy Town Centre and Seafront, with construction starting next year. And that's on top of the UK's biggest ever warship export deal with the Norwegian government to build frigates in Glasgow, supporting 4,000 jobs. Investment opposed by the SNP, jobs opposed by the SNP, defence opposed by the SNP, but secured by this Labour government. A growing economy needs strong foundations of economic stability, with borrowing, inflation down and investment up. That is good for business, and it is good for working people, so they have more money in their pockets. Economic stability, safeguarded by ironclad fiscal rules, is our best defence against rising prices and the best way to improve living standards. We've all seen the alternative. 3 years ago, in their clamour to cut taxes for the richest, the Tories under Liz Truss crashed the economy and sent mortgage rates spiralling and brought pensions to the brink. Being so loud, Madam Deputy Speaker, and yet I can't even hear them now. Now, I know I know that the leader of the Green Party is a keen hypnotherapist, and he believes that he can achieve remarkable things using only the power of his mind. Unfortunately, the only things getting bigger under his approach would be the deficit and the rate of inflation. And for all the damage that the Conservative cuts did to our schools and our hospitals, they also doubled the national debt. Our net financial debt this year will be £2.6 trillion, 83% of GDP, meaning that today, 1 in every £10 that government spends is on debt interest. Not on paying down that debt, but just on paying the interest on the debt that we inherited from the Conservatives. My fiscal rules will get borrowing down while supporting investment. The stability rule, that day-to-day expenditure must be met through tax receipts. And the investment rule, which allows me to increase investment whilst getting debt on a downward path. Those fiscal rules are non-negotiable. I met them at the budget last year, I met them in the spring, and I have met them today. While the current budget balance is in deficit by £28.8 billion in 26-27 and £4.6 billion in 27-28, it moves into a surplus of £3.9 billion in 28-29, £21.7 billion in 29-30, and £24.6 billion in 2030-31, more than doubling our headroom against the stability rule and meeting that rule a year early too. And our net financial debt is 83.3% in 26-27, 83.6% in 27-28, 83.7% in 28-29, falling to 83.0% in 29-30 and 82.2% in 2030-31. Madam Deputy Speaker, I said we would cut the debt, and we are, with debt down by the end of the forecast. And going forwards, to support our commitment to a single fiscal event and further strengthen our economic stability, I will follow the recommendations of the International Monetary Fund by assessing the fiscal rules just once a year at the budget. Despite the challenges we face on productivity, the path of our deficit reduction remains broadly the same as in spring. Public sector net borrowing is due to be £112.1 billion, or 3.5% of GDP in 26-27, 3% in 27-28, 2.6% in 28-29, 1.9% in 29-30 and 1.9% in 2030-31, ending at £67.2 billion, translating into an increase in the net cash requirement next year of £4.2 billion, taking the total to £133.3 billion. According to the IMF, we are due to reduce borrowing more over the rest of this Parliament than any other G7 economy. The Conservatives crashed the economy, we are protecting it. The Conservatives lost control of debt, we are getting debt down. The Conservatives let inflation and interest rates go through the roof. But, Madam Deputy Speaker, since Labour took office, the Bank of England have cut interest rates 5 times. I've made my choices. Not reckless borrowing, not dangerous cuts, but stability for our economy, security for our public finances, and security for family finances too. Those are the Labour choices. Madam Deputy Speaker, Tory austerity left classrooms crumbling and waiting lists sky high, weakened our productivity and choked our economic growth. And now they propose a further £47 billion of cuts to our public services. Well, that is equivalent to cutting every police officer in our country twice over. And then there is Reform, who promise more than £100 billion of cuts, with no details of where those cuts will come from or who will pay for them. A recipe for devastating damage to our public services. People voted for Labour because they wanted roads that aren't full of potholes. They want police on our streets and they want an NHS that is there when they need it. And we're delivering that. Waiting lists down by 230,000. And not just the 2 million additional appointments we promised, but an additional 5.2 million appointments already delivered since the general election. I joined the Labour Party almost 30 years ago because I could see that the Conservative government that I grew up under didn't care much about schools like mine. Textbooks were rationed. I know that many of you won't have schools like mine.
There is far too much noise, far too
Exchanges
much
on navigating macro uncertainty.
calm down.
Exchanges on the forces shaping global markets. For the sharpest analysis on finance, business, and the economy, count on Exchanges, the Goldman Sachs podcast. Listen now.
News when you want it with Bloomberg News Now. I'm Lisa Mateo.
And I'm Karen Moscow.
Karen, we begin with the latest efforts to end the war in Ukraine. A Kremlin official says U.S. presidential envoy Steve Witkoff will visit Russia next week, along with other American officials. This comes as Bloomberg has learned that Witkoff held a phone call last month with a senior Kremlin official to suggest they work together on a plan for Ukraine, similar to the Gaza peace deal, and that Vladimir Putin should raise it with Donald Trump. In an October 14th call that lasted a little over 5 minutes, Witkoff advised Yuri Yushakov, Putin's top foreign policy aide, on how the Russian leader should approach the issue with President Trump. Now, his guidance included suggestions on setting up a Trump-Putin call before Volodymyr Zelensky's White House visit later that week and using the Gaza agreement as a way in. And according to transcripts obtained by Bloomberg News, Witkoff advised Russia on how to bring up the topic with President Trump.
Well, Lisa, Kremlin spokesman Dmitry Peskov did not immediately respond to comment. However, when asked about Witkoff's approach while on Air Force One, President Trump said he had not reviewed the call, but that he heard it was a standard negotiation.
He's got to sell this to Ukraine. He's got to sell Ukraine to Russia. That's what a deal maker does. You got to say, look, they want this. You've got to convince them with this. And I would imagine he's saying the same thing to Ukraine, because each party has to give and take.
And in a separate social media post yesterday, President Trump wrote that there are only a few remaining points of disagreement with tremendous progress made over the past week.
In Europe, Karen, UK Chancellor Rachel Reeves will set out her budget later today as she tries to win over her party, the public, and the markets. Let's go to London and get the very latest with Bloomberg's James Wolcott. Good morning, James.
Good morning, Lisa and Karen. Look, elusive economic growth has helped make Rachel Reeves the most unpopular chancellor since polling began, with UK government bond yields also hitting multi-decade highs. Today, she's widely expected to announce a range of tax hikes to fill a £30 billion fiscal hole, a year after raising taxes and promising she wouldn't come back for more. Bloomberg Economics says the risk for this government is if revenue and GDP projections are too optimistic, traders will question the credibility of long-term projections and keep demanding a risk premium on gilts. In London, James Woolcock, Bloomberg Radio.
All right, James, thank you. Back here in the U.S., the government's latest round of negotiated drug pricing could save you big bucks. And Bloomberg's Dan Schwartzman explains.
The U.S. government says it has negotiated a 71% discount off the list price for both Novo Nordisk's obesity drugs Ozempic and Wegovy for Medicare patients. The latest round of Medicare price cuts affect 15 drugs in total, with discounts ranging from 38 to 85%. The Trump administration says the lower prices would add up to $12 billion in savings compared with what Medicare spent on those drugs last year. Trump has argued that pharma companies have been charging Americans more for drugs than elsewhere. Dan Schwartzman, Bloomberg Radio.
All right, Dan, we now turn to the latest on the race to be the next chairman of the Federal Reserve. White House National Economic Council Director Kevin Hassett has emerged as the frontrunner. Bloomberg News has learned the economist would be a close ally to President Trump and implement his approach to interest rate cutting if he were to lead the central bank. Hassett said he would accept the position.
If he were to ask me to be Fed chair, then of course I would have to say yes, because I want to serve my country and I want to serve my president. But we'll see how it goes. There are a lot of great candidates.
Kevin Hassett made the comments on Fox News. Treasury Secretary Scott Bessent has run the selection process, interviewing candidates to replace Jerome Powell.
Let's turn to the markets now, Lisa, where futures are higher once again after 3 straight days of gains on Wall Street. A rebound in tech has led to a 3.5% gain over the most recent rally. Nadia Lovell is senior U.S. equity strategist at UBS.
It's not all about tech, but tech is an important part of the story, just given the overall weight in the index. We do expect as we get into 2026 that we'll start to see a broadening out in the market into things like healthcare, which we're already seeing that's underway. We also like areas like financials as well as utilities. So while tech will remain important, it won't be the whole story in 2026.
And UBS senior U.S. equity strategist Nadia Lovell and J.P. Morgan predict stocks will head even higher. Strategists expect the S&P 500 to trade around 7,500 points by the end of 2026, and that's about 11% above current levels.
Some stocks on the move this morning, Karen. Shares of Dell, they're up 3%. The computer maker company is raising its annual projections for the key artificial intelligence server market.
Well, shares of HP, Lisa, they're down about 5%. The PC and printer maker gave a profit outlook for the current year that fell short of estimates. HP also said it will cut 4,000 to 6,000 employees through fiscal 2028 by using more AI tools.
And there's also job cuts at McKinsey. The consulting firm says it's eliminated about 200 global tech jobs in the past week. McKinsey is joining rivals in using artificial intelligence to automate some positions.
Warner Brothers Discovery, Lisa, has asked potential buyers to submit new sweetened offers after receiving an initial round of bids. Sources say the parent of HBO and CNN asked bidders to provide improved offers by December 1st. Paramount, Skydance, Comcast, and Netflix are looking to buy some or all of Warner Brothers. Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. An 18-team college basketball tournament ends tonight in Las Vegas. The Players Era Festival championship game will be Michigan against Gonzaga. Michigan beat Auburn in a battle of ranked teams by 30. Gonzaga beat Maryland by 39. The Lakers beat the Clippers 135-118. Luka Doncic 43 points, 13 assists, 9 rebounds. Orlando with a 51-point second quarter. The Magic won by 41 in Philadelphia. Just the second win of the year for the Wizards. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Lisa Mateo.
I'm Karen Moscow, and this is Bloomberg.
Chancellor.
They don't want to hear what the Tories did to schools like mine, but I will tell them. They vanish without paying their taxes. And I'd like to thank my honourable friends, the members for Great Grimsby and Cleethorpes, Lee and Atherton, and Kensington and Bayswater for their representations on this subject. And I'll take further steps to prevent and track down unpaid tax, which will together, these reforms will raise nearly £10 billion a year by 2030, including through new powers for HMRC to pursue the promoters of tax avoidance schemes. I am building on our successful use of targeted checks on welfare claims to root out fraud and error and prevent public money being paid to people who are not entitled to it. And I would like to thank Tom Hayhoe, the COVID Corruption Commissioner, for his work in helping to chase down nearly £400 million from dodgy pandemic spending and contracts. Tory contracts handed out by Tory ministers to Tory peers and Tory friends. Well, that money belongs in our schools and in our hospitals.
Order. It is so noisy now, we can barely hear the Chancellor. Everybody needs to calm down. Chancellor.
Well, I wouldn't want any honourable member to miss this. So we are chasing down that money, and we've got almost £400 million back from dodgy pandemic spending and contracts. Tory contracts handed out by Tory ministers to Tory peers and Tory donors. Well, that money belongs in our schools and in our hospitals, and we are getting that money back. And finally, Madam Deputy Speaker, we are ramping up sanctions on Russia, and we are freezing known Russian assets. But let me be clear, I don't actually mean the honourable member for Clacton. Under the Conservatives.
Order. You don't need commentary from the backbenches, and Mr. Dewhurst, you are so loud. It's remarkable how far your voice carries. Chancellor.
Under the Conservatives, the cost of our welfare system increased by nearly 1 percentage point of GDP, equivalent to £88 billion in just 5 years. The broken welfare system that we inherited wrote off millions of people as too sick to work. And we will reform that system so that it is a system that does not count the cost of failure, but one that protects people who cannot work and empowers those who can. We have brought back face-to-face assessments for disability benefits. Those are the face-to-face assessments that the Shadow Chancellor got rid of when he was Work and Pensions Secretary. And our changes to universal credit will get 15,000 people back into work, a figure confirmed today. The former Health Secretary, Alan Milburn, will review the causes of rising youth inactivity, and we are already taking action. I'm grateful to the Federation of Small Businesses and Small Business Britain for their representations on apprenticeships. And today I am announcing funding to make the training for under 25 apprenticeships completely free for small and medium-sized enterprises. And funding our new youth guarantee, providing £820 million over the next 3 years to give young people who are let down by the Conservatives the support and the opportunity that they deserve. Guaranteeing every young person a place in college, an apprenticeship or personalised job support. And after 18 months, 18 to 21-year-olds will be offered paid work, not benefits. The Motability Scheme was set up to protect the most vulnerable, not to subsidise the lease on a Mercedes-Benz. And so I am making reforms that will reduce generous taxpayer subsidies, and Motability have confirmed that they will remove luxury vehicles from their scheme, getting the scheme back to its original purpose of offering cost-effective leases to disabled people. And taxpayers' money should not be spent on pensions for people abroad, who only lived here for a couple of years and may never even have paid a penny in tax. The Conservatives allowed thousands of people living abroad to buy their way into the state pension for as little as £3.50 a week, debasing the purpose of our pension system. And so I will abolish access to Class 2 voluntary national insurance contributions for people living abroad, increasing the time that someone has to live or work in Britain to 10 years and increasing the contributions that they must pay. These reforms improve our welfare system. They support our young people, protect those who need it most, and put an end to Conservative waste and unfairness. Madam Deputy Speaker, to break the cycle of austerity, we need a fair and a sustainable tax system, one that generates revenues to fund the public services that we all use, and supports investment to grow our economy. That does mean that today I am asking everyone to make a contribution. The previous Conservative government froze personal tax thresholds from 2021 to 2028. And today I will maintain all income tax and equivalent national insurance thresholds at their current level for a further 3 years from 2028. While ensuring that people...
Order! The noise is far too high. Chancellor.
The Right Honourable Lady supported these freezes when her party made them. She might want to forget about it, but the British people never will. At the same time, we are ensuring that people only in receipt of the basic or new state pension do not have to pay small amounts of tax through simple assessment from April 2027. I will also keep the Plan 2 student loan repayments threshold at its 2026-27 level for 3 years. Madam Deputy Speaker, I know that maintaining these thresholds is a decision that will affect working people. I said that last year, and I won't pretend otherwise now. Madam Deputy Speaker, I am asking everyone to make a contribution, but I can keep that contribution as low as possible because I will make further reforms to our tax system today to make it fairer and to ensure that the wealthiest contribute the most. The Conservatives knew that our tax system didn't work. Time and time again, they ducked the necessary reforms, leaving a system unfit for a changing economy, with unfairness that they refused to address. Currently, a landlord with an income of £25,000 will pay nearly £1,200 less in tax than their tenants with the same salary, because no national insurance is charged on property, dividend or savings income. It's not fair that the tax system treats different types of income so differently. And so I will increase the basic and higher rate of tax on property, savings and dividend income by 2 percentage points, and the additional rate of tax on property and savings income by 2 percentage points. Even after these reforms, 90% of taxpayers will still pay no tax at all on their savings. As well as narrowing the gap between the tax on income from assets and income from work, I also believe that a fair society is one where the wealthiest pay their fair share. The reforms I made last year will raise an additional £8 billion a year by 2020-30 from wealth. I increased taxes last year on private equity, private schools and private jets. I abolished the non-dom tax regime. And this year, I will make 2 changes to cap trust charges and prevent avoidance. I reformed inheritance tax on agricultural and business assets. And this year, I am aligning those reforms with wider inheritance tax rules by allowing the transfer of the 100% relief allowance between spouses, balancing the taxation of these valuable assets with the realities of family life. In this budget, I will take further steps to deal with a long-standing source of wealth inequality in our country. A Band D home in Darlington or Blackpool pays just under £2,400 in council tax, nearly £300 more than a £10 million mansion in Mayfair. And so, from 2028, I am introducing the high-value council tax surcharge in England, an annual £2,500 charge for properties worth more than £2 million, rising to £7,500 for properties worth more than £5 million. This will be collected alongside council tax, levied on owners, and we will consult on options for support or deferral. This new surcharge will raise over £400 million by 2031 and will be charged on less than the top 1% of properties. Madam Deputy Speaker, reliefs in our tax system cost the taxpayer billions of pounds a year, but many of them no longer serve their original purpose. The government rightly provides generous tax relief for people paying into a pension, relieving income tax on all contributions and on the investment itself, as well as national insurance relief on employer contributions, at a cost of over £70 billion a year to the Exchequer. This budget makes no changes to those reliefs or to the tax-free lump sum. But salary sacrifice for pensions, which was intended to be a small part of our pension system, is forecast to almost treble in cost to other taxpayers, from £2.8 billion in 2017 to £8 billion by 2030, with the greatest benefit going to the highest earners, or to those in the financial services sector putting their bonuses into pensions tax-free, while those on the minimum wage or those whose employers don't offer salary sacrifice don't benefit at all. That is not sustainable for our public finances, putting pressure on the tax that everyone else pays. And so I am introducing a £2,000 cap on salary sacrifice into a pension, with contributions above that taxed in the same way as other employee pension contributions. That is a pragmatic step so that people, especially on low and middle incomes, can continue to use salary sacrifice for their pension without paying any more in tax than they do now, and to give individuals and employers time to adjust to these new arrangements. These changes will come into effect in 2029. The coalition government introduced 100% relief from capital gains tax on business sales made to employee ownership trusts, creating a route for gains to go completely untaxed when businesses are sold. I will reduce that relief to 50%, retaining a strong incentive for employee-owned companies. And as we work towards doubling the size of the cooperative economy, the Department for Business and Trade will launch a call for evidence on how we can better support co-ops to grow. Because of the changes that I have made to capital gains tax this year and last year, receipts are forecast to increase from £14 billion this year to £30 billion by 2030. To support our high streets, I am announcing a package of regulatory changes as called for by UK Hospitality and the British Retail Consortium. And I will support the Great British Pub through our new national licensing framework, encouraging councils to back our pubs and to back late-night venues with greater freedoms. For business rates, I will introduce permanently lower tax rates for over 750,000 retail, hospitality and leisure properties, the lowest rates since 1991, paid for through higher rates on properties worth more than £500,000, like the warehouses used by online giants. Alongside this, I will introduce a package of support worth over £4.3 billion over the next 3 years for a property of any size seeing a large increase in their bill. And to support a level playing field in retail, I will stop online firms from undercutting our high street businesses by ensuring customs duty applies on parcels of any value. I will reform our motoring taxes, exempting search and rescue vehicles from vehicle excise duty as called for by my honourable friends, the member for the Western Isles and for Whitehaven and Workington. And because all cars contribute to the wear and tear on our roads, I will ensure that drivers are taxed according to how much they drive and not just by the type of car they own, by introducing the electric vehicle excise duty on electric cars. This will be payable each year alongside vehicle excise duty at 3p per mile for electric cars and 1.5p for plug-in hybrids, helping us to double road maintenance funding in England over the course of this Parliament. And alongside this, I am providing support to boost our British car industry, increasing the threshold for the expensive car supplement on electric vehicles to £50,000, saving over 1 million motorists £440 a year. Providing £1.3 billion additional funding for the electric car grant, extending it to 2030 and taking total funding to £2 billion, as well as delaying changes to the employee car ownership scheme. In addition, we're investing a further £200 million to accelerate the rollout of EV charging, as well as 100% business rates relief for EV charge points for the next decade, with thanks to my honourable friend, the member for Camborne and Redruth, for his representations on this policy. And I will improve competition in our taxi industry by ending ride-hailing companies' use of a discount scheme intended for coach tours, as called for by Steve McNamara, the General Secretary of the Licensed Taxi Drivers Association, legislating to restrict access so that everyone pays fairly and protecting £700 million of tax revenue each year. I am responding to our consultation on landfill tax, and listening to representations, particularly from our house building industry. I will not converge towards a single rate, but I will prevent the gap between the two rates from widening to balance the need to address tax avoidance in the current structure. I will today publish Ray McCann's report into the loan charge along with the government's response, setting out a new settlement opportunity that will finally allow people to finalise their position and draw a line under this long-standing issue. And I'd like to thank my honourable friend, the member for Milton Keynes Central, for her representations on this subject. I will continue with the planned uprating for tobacco duties that I set out last year and uprate alcohol duties by inflation, along with our plans to introduce a vaping products duty in 2026 and changes to the soft drinks industry levy announced by my right honourable friend, the Health Secretary, yesterday. And I'd like to thank the Exchequer Secretary to the Treasury for his work on all the tax measures in this budget. I will also reform gambling taxes in response to the rise in online gambling. Remote gaming is associated with the highest levels of harm. And so I am increasing remote gaming duty from 21% to 40%. With duty on online betting increasing from 15% to 25%. I am making no change to the taxes on in-person gambling or on horse racing. And I am abolishing bingo duty entirely from April next year. Taken together, my reforms to gambling tax will raise over £1 billion per year by 2031. As a result of the tax reforms I have made today, I can confirm that I will not be increasing national insurance, the basic, higher or additional rates of income tax or VAT. And I have kept everyone's contribution as low as possible through reforms to make our tax system stronger, closing loopholes, ensuring that the wealthiest pay their share, and building a tax system that is fairer for the future as our economy changes. On the day I became Chancellor, I said that I would judge my time in office a success if I knew that ordinary children from working-class backgrounds were living more fulfilling lives. Their horizons expanded, their potential realised. I joined the Labour Party, I came into politics, because I believe that every child has equal worth and deserves an equal chance to achieve their promise. The biggest barrier to equal opportunity is child poverty. Because for every child that grows up in poverty, our society pays a triple cost. The first and the heaviest is to the child. Going to school hungry, waking up in a cold home or in another B&B. While other children enjoy the advantages of parents with time to help with homework, the quiet space at home to work in, too many go without. And there is also the cost of supporting a family in poverty, which ends up in the lap of overstretched councils, who can do no more than shunt them into temporary accommodation at huge cost to local taxpayers. Then there is the future cost, to our economy and to our society, of wasted talent and a welfare system that bears the cost of failure for decades to come. Young people with so much to contribute, but whose potential is suffocated early by limited life chances and missed opportunities, struggling to make their way in a society that did not look out for them. I don't intend to preside over a status quo that punishes children for the circumstances of their birth and demands that we all pay 3 times over for it. Since last July, we've rolled out free breakfast clubs in schools. We're expanding free school meals to 500,000 more kids, lifting 100,000 children out of poverty as we do it. We've passed the Renters' Rights Act and we've extended the childcare offer. And I'm proud of all of that. But it's not enough. Because there is one policy that pushes kids into poverty more than any other. It was introduced by the party opposite. They said it would save money and that it would bring about behavioural change, disincentivising poorer families from having more children. Well, even on its own terms, it failed. The welfare bill has continued to rise, and there's been no difference in the size of families. But what it has done is to push hundreds of thousands of children into poverty since it was introduced. They said they were punishing parents' choices, but it's the kids who have paid the price. They've paid the price for the policies of a party which opted for cynical gimmicks over real savings in our welfare system. I understand that many families are finding times hard and that many kids have had to make difficult choices when it comes to having kids. And there are many reasons why people choose to have children and then find themselves in difficult times. The death of a partner, separation, ill health, a lost job. I don't believe that children should have to bear the brunt of that. And neither can I, in good conscience, leave in place the vile policy known as the rape clause, requiring women to prove if their child has been conceived non-consensually to receive support. I'm proud to be Britain's first female Chancellor of the Exchequer. I take the responsibilities that come with that seriously. I will not tolerate the grotesque indignity of women of the rape clause any longer. It is dehumanising, it is cruel, and I will remove it from the statute book. And so because I am tackling fraud and error in our welfare system, because I am cracking down on tax avoidance, because I am reforming gambling taxation, I can announce today, fully costed and fully funded, the removal of the two-child limit in full from April. This side of the house. It's amazing what people get so angry about, and we've seen their true colours today. The thing they get angry about is lifting children out of poverty.
Order! Order. Our constituents will want to hear the Chancellor.
I think our constituents have heard all they need to from the party opposites today. We on this side of the House do not believe that the solution to a broken welfare system is to punish the most vulnerable. We are lifting 450,000 children out of poverty with the end of the two-child limit. And, Madam Deputy Speaker, combined with other actions we are taking, this Labour government is achieving the biggest reduction in child poverty over a parliament since records began. That is the difference that this Labour government is making. Madam Deputy Speaker, I know how worried families are about the cost of everything. Worried that their money won't stretch to the end of the month. Worried that price... I think if you've got a house that's worth £5 million a year, you can probably afford it. But you get more exercise about reducing child poverty than you do about the richest paying more. Under this government, wages have risen by more since we were elected than in 10 years under the last government, with lower interest rates already saving families £1,200 a year off a typical new mortgage, compared to that to when Liz Truss was Prime Minister. But I know that people still face pressure on their budgets day to day and week to week. And where there is more to do, where we can provide relief, we are doing it. Extending the bus fare cap, cracking down on rip-off price hikes, freezing prescription charges and freezing rail fares for the first time in 30 years. I am increasing the basic and new state pension by 4.8%, an increase of £440 per year for the basic state pension, and an increase of £575 per year for the new state pension, in line with our commitment to the triple lock. At the election, we promised a genuine living wage, and we are delivering it. At the budget last year, I increased the national minimum wage and the national living wage, and I am doing the same this year too. Accepting the recommendations of the Low Pay Commission in full and increasing the minimum wage for 18 to 20-year-olds from £10 to £10.85 an hour, and increasing the living wage from £12.21 to £12.71 an hour. Under current plans, the temporary 5p cut to fuel duty that was introduced during the pandemic will come to an end in April, and fuel duty will be uprated in line with inflation. But I know that the cost of travelling to and from work is still too expensive. And so I am extending the 5p cut until September 2026. And because I know that changes in wholesale prices are not always passed on to motorists, I am bringing in new rules to mandate petrol forecourts to share real-time price rises through a new fuel finder, empowering drivers to find the cheapest fuel, calling out rip-offs and strengthening competition, saving the average household £40 a year. Madam Deputy Speaker, one of the greatest drivers of the rising cost of living is the cost of energy prices. The cause of high energy bills must be tackled at source, and so we are investing in energy security, in nuclear and renewable energy, and in insulation through our Warm Homes Plan. But that's not enough when people are struggling with energy bills today. The Conservatives' Eco Scheme was presented as a plan to tackle fuel poverty. It costs households £1.7 billion a year on their bills. And for 97% of families in fuel poverty, the scheme, get this, has cost them more than it's saved. It is a failed scheme, and so I am scrapping it, along with taking other legacy costs off bills. And as a result, I can tell you today that for every family, we are keeping our promise to get energy bills down and cut the cost of living. With £150 cut from the average household bill from April next year. Money off bills and in the pockets of working people, that is my choice. Not to neglect Britain's energy security like the Tories did. Not to leave working families to bear the brunt of high prices like the Tories did, but to get energy costs down now and in the future. That is the Labour choice. And Madam Deputy Speaker, one more thing. Because of our action on bills and on prices, as a direct result of this budget, the Office for Budget Responsibility confirmed today that inflation is coming down faster and will be a full 0.4 percentage points lower next year. That's the benefit of a Labour government cutting the cost of living. Madam Deputy Speaker, this Labour government is changing our country. In the face of challenges on our productivity, I will grow our economy through stability, investment and reform. I've met my fiscal rules and built our economic resilience for the future. I have asked everyone to contribute, yes, for the security of our country and the brightness of its future. But I have kept that contribution as low as possible by reforming our tax system, making it fairer and stronger for the future. I have protected our NHS, maintaining public investment and driving efficiency in government spending. I've taken action on our broken welfare system, rooting out waste and lifting children out of poverty. And I have cut the cost of living, with money off bills and prices frozen, all while keeping every single one of our manifesto commitments. Those are my choices.
Mr. Rankin, Ms. Moulton, your voice carries right across the chamber. Right across the chamber. Try and take a breath every so often. Chancellor.
Those are my choices. Not austerity, not reckless borrowing, but cutting the debt, cutting waiting lists and cutting the cost of living. Those are Labour choices, promised and delivered by this budget, promised and delivered by this Labour government. And, Madam Deputy Speaker, I commend this statement to the House.
Under Standing Order number 51, the first motion entitled Provisional Collection of Taxes must be decided without debate. Will the Chancellor of the Exchequer please move formally? Chancellor, please move formally.
Formally.
The question is that pursuant to Section 5 of the Provisional Collection of Taxes Act 1968, provisional statutory effect shall be given to the following motions. Stamp duty reserve tax, UK listing relief, motion number 60. Rates of tobacco products duty, motion number 65. As many of their opinions say aye. Aye. Of the contrary, no. The ayes have it. The ayes have it. We now come to the motion entitled Income Tax Charge. It is on this motion that the debate will take place today and on the succeeding days. The questions on this motion and on the remaining motions will be put at the end of the budget debate on Tuesday, the 2nd of December. I call the Chancellor of the Exchequer to move the motion formally.
Formally.
The question is that income tax is charged for the tax year 2026-27, and it is declared that this and is expedient in the public interest that this resolution should have statutory effect under the provisions of the Provisional Collections of Taxes Act 1968. I now call the Leader of the Opposition. Leader of the Opposition.
Thank you, Madam Deputy Speaker. And may I congratulate the Right Honourable Lady on delivering her second budget. I hope she enjoyed it, because it really should be her last. What a total humiliation. A total humiliation.
Can colleagues who are exiting the chamber do so swiftly so we can focus on the Leader of the Opposition? Swiftly exit, quietly. Right. Leader of the Opposition.
It's a total humiliation, Madam Deputy Speaker. Last year, she put up taxes by £40 billion, the biggest tax rate in British history. She promised that she wouldn't be back for more. She swore it was a one-off. She told everyone that from now on it would be stability and she would pay for everything with growth. Today, she has broken every single one of those promises. If she had any decency, she would resign. At the last budget, she said she was proud to be the country's first ever female Chancellor. After this budget, she will go down as the country's worst ever Chancellor.
Order. And the Chief Whip in particular knows that we don't allow clapping in the chamber. Leader of the Opposition.
Today she has announced a new tax rate of £26 billion. They're all cheering. Household income is down. Spending policies in this budget increase borrowing in every year. That smorgasbord of misery we just heard from her can be summed up in one sentence. Labour are hiking taxes to pay for welfare. This is a budget for Benefit Street, Madam Deputy Speaker, paid for by working people. This budget increases benefits for 560,000 families by an average of £5,000. They are hiking taxes on workers, pensioners and savers to pay for handouts to keep their backbenchers quiet. These are the same, yes, they can chanter all they like. These are the same backbenchers, Madam Deputy Speaker, who cheered last year when she taxed jobs and left more than 100,000 people without an income. They cheered because they didn't understand the consequences of what they were doing, and they still don't. Madam Deputy Speaker, it's not been an easy time for the Chancellor. No one liked seeing her sitting on those benches as it dawned on her that her own backbenchers were going to do to her political career what she's done to our economy. But she could have chosen today to bring down welfare spending and get more people into work. Instead, she has chosen to put up tax after tax after tax, taxes on workers, taxes on savers, taxes on pensioners, taxes on investors, taxes on homes, holidays, cars, I think even milkshakes, taxes on anyone doing the right thing. She and this government have lost what little credibility they had left, and no one will ever trust her again. What's amazing, Madam Deputy Speaker, is that she has the nerve to come to this House and claim this is all someone else's fault. A laundry list of excuses. Yes. Madam Deputy Speaker, they blame the Conservatives as if we've been sneaking into the Treasury under the cover of darkness to give pay rises to the unions. She inherited an economy with inflation at 2% and record high employment. She has tanked it in just over a year. Endless excuses. She blames Brexit. She blames Donald Trump. She needs to blame herself. And I've got some news for her. The Chancellor didn't seem to understand what the OBR was saying. Inflation is up, not down, and that inflation was stoked by her tax and spend decisions. The economic fiscal outlook says that they expect inflation to stay higher for longer. Everybody else has read it. She still hasn't read the OBR analysis. She blames higher than expected borrowing costs. Where does she think they came from? Those borrowing costs are driven by her lack of grip. She is paying more, you're saying us, she's paying more to borrow than Greece. She is paying more to borrow than at any point under the 14 years of Conservative government. Perhaps if Labour MPs read a book sometimes, they would know something. That includes an energy crisis. Madam Deputy Speaker, under us we had an energy crisis sparked by a war in Ukraine and a global pandemic. What is her excuse? What is her excuse? She is taking the public for fools, but they are under no illusions whose fault this is. The fact is, the bad choices she is making today, choices to break promises, choices to put up taxes, choices to spend more of other people's money, are because of the bad choices she made at the last disastrous budget. If you want growth, you need to start with knowing what kind of country you want to be and make a plan to get there. Create certainty for the people and businesses who will drive growth. There is no growth and no plan because Labour focused on settling scores and scratching the itches they had in opposition. She promised stability, she delivered chaos. Just look at the circus around this budget. First the leaks, then more leaks to try to undo the damage. Calling panicky press conferences, U-turning on her U-turns, rolling the pitch one day only to plough through it the next. She had the cheek to talk about stability, Madam Deputy Speaker. She has become the first Chancellor in history to release the whole budget ahead of time. This is extraordinary. It tells you everything you need to know about her grip on the Treasury. She's making the UK a shambolic laughingstock to international investors, and if she doesn't resign for breaking her promises, she should sure as hell go for this. But, Madam Deputy Speaker, what have we got for all this chaos and disorder? There are 1 million more people claiming universal credit than there were at the time of the last budget. Government spending, up. Welfare spending, up. Universal credit claimants, up. Unemployment, up. Debt interest, up. Inflation, up. And what about the things that you want to go up? What about the things you want to go up? Growth, down. Investment, down. Business confidence, down. The credibility of the Chancellor, and not just down, through the floor. These figures are shocking. Does she really think that anyone will be confused by the sleight of her hand that she had in her speech? Her speech today was an exercise in self-delusion. Today, she had an opportunity to apologize and show some humility. Instead, we've been fed puff pieces in the Times and the FT showing a woman wallowing in self-pity, whining about mansplaining and misogyny. Madam Deputy Speaker, let me explain to the Chancellor. Woman.
Order. Colleagues need to simmer down, most definitely, and just breathe a little and allow the legal opposition to be heard. Legal opposition.
All we've had is wallowing in self-pity and whining about misogyny and mansplaining. So, Madam Deputy Speaker, let me explain to the Chancellor, woman to woman. People out there aren't complaining because she's female. They're complaining because she is utterly incompetent. Real equality means being held to the same standard as everyone else. It means being judged on results. Take her bright idea, the Office for Value for Money. It's been closed down because it didn't save a penny. In fact, it cost the taxpayer £1.6 million. You couldn't make this stuff up. Madam Deputy Speaker, I've identified a way to save taxpayers huge amounts of money by sacking just one person, the woman sitting opposite. The ex-chief economist of the Bank of England was not mansplaining. He wasn't mansplaining when he said the uncertainty around today's budget is the single biggest reason growth has flatlined. What did the Chancellor think would happen when she went on breakfast telly to do an emergency public service announcement? I interrupt your Cheerios to bring you this frightening message about income tax. And then, unbelievably, she changed her mind 3 days later. No wonder people are in despair. She says she wants people to respect her.
Order. Conservative colleagues are drowning out the Leader of the Opposition speech, so just be mindful nobody will be able to hear her at home. Leader of the Opposition.
Madam Deputy Speaker, she says she wants people to respect her. Respect is earned. She apparently told Labour MPs this week, I'll show the media, I'll show the Tories, I will not let them beat me. Show us what? Making stuff up at the dispatch box, incompetence, chaos, and the highest tax burden in history. She said to them, Madam Deputy Speaker, I'll be there on Wednesday, I'll be there next year, and I'll be back the year after that. God help us. She is spineless, shameless, and completely aimless. Talk to any business. Talk to someone looking for a job. Unemployment is up every single month since Labour have been in office. They don't want to hear it, but it's true. They're shouting and complaining they cannot create jobs. It is the worst year for graduate recruitment on record. Are they proud of this? Companies like Merck and Ineos slashing investment plan.
Order. If you're on the front bench, I can obviously see you, Mr. Kyle. And there's no need for you to be chuntering this loud. They can see and hear you as well. Leader of the Opposition.
Thank you, Madam Deputy Speaker. They don't want to hear the truth, but I'm speaking for all of those people out there who are sick of this government. Companies like Merck and Ineos are slashing investment plans. The construction sector has shrunk. How is that house building target going, by the way? I'll tell you, Madam Deputy Speaker, they are miles behind and won't even come close to what we achieved. Business confidence is at record lows. No wonder today future growth has been revised down in every year of the scorecard. The papers are reporting that 1 in 8 business leaders is planning to leave Britain. Even one of Labour's biggest ever donors, Lakshmi Mittal, has fled the country.
Fled with a passport.
What we have in front of us is a budget littered with broken promises. She stood on a manifesto which promised better returns for UK savers. Today, she's putting up taxes on savings, on salary sacrifice even. She promised to give pensioners the security and retirement they deserve. Today, she slapped higher taxes on people saving for their pension. She promised to make Britain the best place in the world to invest and do business. Today, she has raised the dividend tax rates. She and the Prime Minister had already broken their promise to freeze council tax, but today she's decided to go even further, introducing a new property tax clobbering family homes that will only raise small amounts. is Labour's Britain. This is Labour's Britain. People who work hard, Madam Deputy Speaker, people who work hard and save hard to buy their homes get taxed more, while those who don't work, who in some cases refuse to work, get their accommodation paid for by taxpayers. And then to top it all off, because taxing your home, your car, your savings and your pension wasn't enough, she has, by her own admission, broken her manifesto promise on income tax. Because in the last budget, she said, and I quote, "I am keeping every single promise on tax that I made in our manifesto, so there will be no extension of the freeze in income tax thresholds." She said in that budget that extending the threshold freeze would hurt working people and take money out of their payslips. But today, she has done exactly that. Why should anyone believe anything she's promised in this budget? And so where is the money going? Small changes to rail fares and prescriptions, these are distractions while she steals your wallet. The real story here, Madam Deputy Speaker, the real story is that Labour have lost control of welfare spending. Not only will working people have their tax thresholds frozen while benefits go up in line with inflation, not only have Labour abandoned reforms that would have saved the taxpayer £5 billion after pressure from these backbenchers, today they have added another £3 billion to the bill by scrapping the two-child benefit cap. We introduced that cap, Madam Deputy Speaker, because it means people on benefits have to make the same decisions about having children as everyone else. Even Labour voters know that it strikes the right balance between supporting people who are struggling and protecting taxpayers who are struggling themselves. Just this summer, the Chancellor admitted that lifting the two-child benefit cap was not affordable. But that was before the Prime Minister accidentally fired the starting gun on the race to replace him. So now he and the Chancellor are buying the votes of their own MPs with taxpayers' money. If she wants to reduce child poverty, she should stop taxing their parents and stop destroying their jobs. She congratulated herself on a new tax on landlords. Let me tell her this. Hiking tax on landlords will only push up rents. It will push landlords out of the market. The people who will suffer are the tenants. And then she talks about taxes on electric vehicles. These changes will hit rural drivers the hardest, but we know that Labour don't care about rural people. All this budget delivers is higher taxes and out-of-control spending. Nobody voted for this. The Chancellor must take responsibility. She chose to impose the jobs tax, driving unemployment higher month after month. She chose to abandon welfare reform, meaning the benefits bill is spiralling. She chose to spend more and more money she didn't have, leaving taxpayers to foot the bill. She is out of money, out of ideas, out of her depth, and she has run out of road. The country simply cannot afford a Chancellor who can't keep her own promises. Her position is untenable, and she knows it. She's talking to the Chancellor. Is he mansplaining to you, by the way? Is he mansplaining? Do you want some help? Would you like some help? Would you like some help? What the Prime Minister should do is grow a backbone and sack her. But he won't, because he knows if she goes down, he goes down with her. So we're stuck with them both, Laurel and foolhardy. Does she have any sympathy for the people facing Christmas without a salary because of her jobs tax? For the retailers who are suffering sleepless nights because of their plummeting Christmas sales? People out there are crying. Last year, we had the horrors of the Halloween budget. This year, it's the nightmare before Christmas. And as for her, she's the unwelcome Christmas guest, 10 minutes through the door, and she's eaten all the Quality Street, Madam Deputy Speaker. But let me tell the Chancellor something she has forgotten. Behind every line in today's Red Book is a family, a home, a lifetime of work and sacrifice. People are frightened, and they have every reason to be. The Chancellor has spent the last year terrifying them. Every decision that she and the Prime Minister make puts more pressure on the people who keep this country going. If Labour are the party of working people, why is it that every day under them, thousands more people are signing off work and onto benefits? It's Conservatives who are the party of work. The Labour Party should be renamed the Welfare Party. And they are making a mistake. The British public don't want higher welfare spending. They want people in work providing for themselves. They want to live in a country where hard work pays, where what you put in reflects what you get out. And we agree with them. There is an alternative. We Conservatives have set it out. This budget could have saved £47 billion, including £23 billion from welfare. She could have applied our golden economic rule, allocating half of those savings to cutting the deficit and using the rest to cut taxes. Oh, they're all pretending they're not listening. It's the shame of the mess they've made. It's the shame of the mess they've made.
Order. Mr. Vince. Mr. Thompson, you're so enthusiastic. I was worried you're going to knock Mr. War off his chair a moment ago, so we need to calm down and breathe, and we need to ensure that we can hear the Leader of the Opposition. Can we wait up?
Even the dog is laughing at the Chancellor, Madam Deputy Speaker. She could have applied our golden economic rule, allocating half of those savings to cutting the deficit, using the rest to cut taxes. She could have abolished stamp duty on homes to get the housing market moving, abolished business rates on shops to breathe life into our high streets. She could have introduced our cheap power plant. It saves a lot more money than what she announced would bring down energy costs for homes and businesses. That's what she should have done. She should be on the side of people who get up and go to work, people who take a risk to start a company, people working all hours to keep their business afloat. She should be on the side of the farmer, trying to hand something over to the next generation, the investor deciding whether to spend their money in the UK or elsewhere. She should be on the side of the young person looking for their first job, the saver doing the right thing and putting money away for a rainy day, the pensioner trying to enjoy a decent retirement. This country works when you make the country work for them. Only the Conservatives are on their side, Madam Deputy Speaker, and our plan for them is simple. Bring down energy costs, cut spending, cut tax, back business, and get Britain working again.
Colleagues are exiting. Can they do so quietly and quickly before we come to our first backbench contribution? Quietly and quickly. Other colleagues who are trying to catch my eye should return to their seats. I have noticed them bobbing. And we come to the chair of the Select Committee. We come to Dame Meg Hillier.
Thank you, Madam Deputy Speaker. Madam Deputy Speaker, it seems like some ways a very long time since 2022. Remember that, where we had a Prime Minister and a Chancellor who put this country in hock to the bond markets, made mortgages rise and put the British public through living hell. What a contrast with my right honourable friend today, who has put money into the NHS, is backing investment in our country, supporting start-ups and supporting the British public in a difficult cost of living crisis caused by the party opposite. And while I want to go into what the Chancellor said today, I cannot let go without making some comments about the Right Honourable Member for Essex, the Leader of the Opposition. Who was shambolic, Madam Deputy Speaker? Them. Under them, mortgages went up. And we saw children entering in poverty in greater numbers. So who is the party that created child poverty? Them, not us. And who is the party that has consistently talked down this country since the election, being negative on every stage and downgrading people's confidence in our country? Who is the party of 0 hours contracts? The party opposite. And who is the party that failed consistently to invest in our schools, the party opposite, and the NHS, and our prisons, and our justice system? Under them, the country spiralled. And I spent a decade under the last government looking at public spending in the privileged role of chair of the Public Accounts Committee. I saw those mistakes close up. I saw the big nasties left, whichever government was elected in July last year. And I commend my right honourable friend for tackling those challenges. And the productivity that we've seen challenges on as a result of the OBR's decisions has been low since 2010. And who was in government since 2010? The party opposite. So they left the legacy, they left the big nasties, and it's now this government's job to clear it up. But amid all the noise, Madam Deputy Speaker, we must remember that the markets are listening, and we need to all be responsible. Government, opposition, every member of this House. And while speculation always swirls around a budget, and that is inevitable because we're all lobbying on behalf of our constituents, our local businesses and every other group that we represent, quite rightly, to persuade our government to do the things that we want to see. And we're all impatient to see those things happen yesterday. That's why we got elected, to make change. But the leaks that have happened around this budget have been very unfortunate. And I do hope my right honourable friend will grapple with this and make sure that it doesn't happen again. And the most recent leak of the OBR data, moments before her budget, is undermining for us all. So we will be raising that with the Office for Budget Responsibility when they appear in front of the Select Committee next week. But the Treasury Select Committee looked at a number of the issues that were being speculated around the budget: child poverty, gambling tax, cash ISAs, and others. And I'm grateful that my right honourable friend has tackled some of these. I wanted to touch first on cash ISAs. We, in a report, recommended that the Chancellor didn't reduce the limit on cash ISAs from £20,000, and she's reduced it not from the 10 that was being mooted, but to 12. The concern is that for short-term savers, there can be a real issue there. And with targeted support coming next year and work on the advice guidance boundary, there is an opportunity to bring the British public into a more investing environment and to make them invest or encourage them to invest more. But after so many years, when we've all been warned that your capital is at risk, like on the cigarette packets, that you might die if you smoke, it takes a long time to turn that culture around. I do want to pay tribute to the financial inclusion and literacy campaign that the Financial Times backs, which is running a programme in Shoreditch Park City Academy in my constituency over 3 years, with years 7, 8 and 9, to encourage them to teach them about financial literacy. Yeah. They will be the investors of the future, but it will take some time for those young people to get to the point where they invest. So I am pleased that the Chancellor did exempt over 65s from this limit, because that short-term saving is important, and particularly for that age group that is planning for retirement or indeed in retirement. Yeah. I really welcome her support for start-ups. In my constituency, this is a huge issue, and widening enterprise support, something that I know my sister committee, the Business and Trade Committee, will no doubt be looking at. And encouraging companies to list in London, absolutely right. The 3-year stamp duty relief will hopefully be enough to encourage that. We've seen too many companies listing elsewhere, and we need them here in the UK to grow our economy and create those jobs. There's a lot of technical issues around reviews of business tax, which I'm sure we will be looking over. We're putting our slide rule across all of the measures in the budget today. I note that the Chancellor is talking about 4.9 million of efficiencies by government departments by 2031. That is going to be a potential challenge, and so I think the Public Accounts Committee, another sister committee, will no doubt be looking at that alongside the Treasury Select Committee. But I'm really pleased that she's giving HMRC more powers to pursue promoters of tax avoidance schemes. We know what the problems have been there, and the Treasury Select Committee has the privilege and responsibility of challenging His Majesty's Revenue and Customs regularly, and they will be in front of us in January, and we'll be able to ask them more about that then. But for me, one of the central planks for me as a constituency MP of why we needed a Labour government, because of what the other party did to children living in poverty. There are 4.5 million children in poverty in this country. That's gone up by almost 1 million since 2012. 2 million of them are in deep poverty, and that's 1 in 3 children living below the poverty line in 2025 in the United Kingdom. Children are sharing beds with their siblings or parents turning up to school tired. And every weekend I visit people in my constituency and I see this challenge. Just last weekend, a woman showed me the bedroom she shares with her now disabled husband because he had a stroke 3 years ago. And she has a curtain between their double bed and a narrow space so her daughter can share their room. While in their case, luckily, they have a second bedroom where her 2 sons sleep in a bunk bed. That is the reality for so many children, and the poverty impacts their learning and their ability to perform in the world. And it is a shameful stain on this country that when this government entered power, the UK ranks 37th out of 39 advanced economies on child poverty. I will certainly go away.
Really grateful to it. I agree with everything she just said about child poverty and welcome the lifting of the cap. But is there a little bit of a blind spot for this government on rural poverty? Government figures themselves show by the end of next year the average hill farmer will earn barely just above half the national minimum wage. Is she as disappointed as I am that the government has not tackled this in the budget and indeed got rid of the family farm tax, which is going to tax many of them out of existence altogether?
The honourable gentleman is a veritable champion for his constituency and for rural issues. I think there are very big, important changes here in the minimum wage and the living wage, which will have an impact, and there's lots that could be welcomed for rural areas too. But I recognise that his constituency and mine sometimes have very different challenges, and I welcome the fact that he does champion that here. Obviously, I haven't had a chance to look through the Red Book and the Blue Book at this point, but we will bear that in mind on the committee. But 70% of children in poverty are in working families, so the idea that the chutzpah of the Leader of the Opposition to stand up and say this is a lifestyle choice for people really makes my blood boil. 60% of households hit by the limit are in work, and 15% of affected families are mothers with babies too young for work. And then, and my right honourable friend said it better than any of us could, the Victorian rape clause, the humiliation that women face, that affects notionally 3,600 women, but we heard evidence in the Treasury Select Committee of women who will not put themselves or their children through that humiliation. And any policy that required a workaround like that is outdated and long needed to be gone, and I commend my right honourable friend. And there's been further investment in young people. Certainly.
I thank her for a forensic analysis of our budget, but will she take an intervention from the Leader of the Opposition so she can apologise for this awful policy and its impact?
Well, it is interesting that they're doubling down, the opposition is doubling down on this policy, which is humiliating people. And let's be clear, the birth rate in this country has fallen year on year for the last 3 years. It is well below where it needs to be. I think only in Luton is it actually at 2.1%, which is about where it needs to be. Well, actually, it's a bit lower than where it needs to be. This is a real crisis for this country in the long term. So it's absolutely right that my right honourable friend is investing in the future of Britain. These young people may be poor. In my constituency, they're poor, but they are no poverty of ambition there. Children I met when I was elected 20 years ago are now doctors, are barristers, are enterprising business people. In spite of the challenges they face, just think about the ones who didn't get there because they didn't overcome the challenges of deep-seated poverty. So we should invest in our young people, and that is what this government is doing, including with the apprenticeships and the youth guarantee and the 9 youth hubs in London, and one of which is in my constituency. And I really welcome that my right honourable friend listened to the Treasury Select Committee on the gambling taxation regime. We're a cross-party committee, but we had a unanimous report saying that there was a real issue about the lower tax on online gaming and because of the relative harm that that caused compared to going to the races or popping along to your local betting shop. So I very much welcome my right honourable friend's decision to do that, which is contributing to that, the payment to take out those children out of poverty. I do on the lifetime, the ISA changes. I just wonder, and I caution to my right honourable friend, that I hope that the Treasury is watching very closely the impact on mortgage lending by building societies, because in the evidence we heard that was a concern. And if we want to get people into their own homes with the building that's going to be going on, we need to make sure that those mortgages are available to them. So I hope that the Treasury is in ongoing dialogue on that issue, despite this change having been made. But we now need to recognise some of the challenges as well about green taxes. And I haven't had a chance to go through the Red Book in the time since the Chancellor sat down. But I very much welcome my right honourable friend's bold and necessary decision to take on the challenge of the reduction in fuel duty as people move to electric vehicles. This has been a point of debate for at least the last decade or so. Certainly on the time I was on the Public Accounts Committee, we kept challenging the Treasury about how they're going to fill that gap. And my right honourable friend has been bold and right to challenge that. It's a difficult one to grapple with, but she's great that she's done that, and I think we need to be, we'll look forward to hearing more about that. And in terms of supporting people because of the cost of living, the freeze on rail fares, keeping the bus fare cap, these are things that help people get to work. And the ongoing freeze on fuel duty will help with that too. An increase in the minimum wage and the living wage are vital. In my constituency, some people work 4 jobs over 7 days just to make ends meet. If they're lucky to have a council tenancy, even on those salaries, it's hard to make ends meet. If you try to go into the private sector, completely unaffordable if you're on that kind of income. And yet contrast that with people who earn enough to work 4 days a week because they can afford to do so. I'm not criticising them for that life choice, but that is the challenge and the difference that's faced. So the challenge on, there's been a lot of discussion, of course, about a high value property tax. In my constituency, on a rough calculation, around 1% of properties are worth over 2 million in central London. So when the opposition scream foul on this, I think in zone 1 and 2 in central London, right on the edge of the city, 10 minutes from Liverpool Street, around 1% of people will face that surcharge. That is a small price to pay when next door our families are living in the deepest poverty that I have described. And it's great to see some movement on energy bills, which is having a really, really big impact. There's a lot more detail in this budget, which the Treasury Select Committee will be looking at over the next couple of weeks, and we look forward to welcoming the Chancellor to the committee on the 10th of December, where we will both ask her to explain, but we will also challenge her, as is our proper constitutional responsibility, about the detail of her budget.
I call the Leader of the Liberal Democrats, Sir Ed Davey.
Thank you, Madam Deputy Speaker. And we're looking forward to the Treasury Select Committee challenging the government on the details. But, Madam Deputy Speaker, this government was elected on a promise of tackling the cost of living and growing the economy, and this is the second budget where it's failed to do either. For millions of people struggling with higher bills, all this budget really offers is higher taxes. The OBR sets it out in black and white. Disposable income, living standards are down thanks to this budget. Surely the Chancellor should have learned from her first failed budget that you can't tax your way to growth. Under the Conservatives, the UK's tax burden reached its highest level since 1948 and it hit the economy. Yet under this budget, the tax burden will hit an all-time high. Madam Deputy Speaker, there is an alternative to all these Conservative and Labour taxes, and the shocking reality is the government knows it, and that's a new trade deal with Europe. A major new deal to cut the cost of living and grow our economy. The truth is, Madam Deputy Speaker, Boris Johnson's Brexit deal has cost the Treasury £90 billion a year in lower tax revenue. Imagine if the Chancellor had adopted our plan to reverse those Brexit costs. Imagine how much more we could be helping families and pensioners across our country with the cost of living. Imagine how we could be ending the cost of living crisis today.
Order. I made it very clear earlier on, and you are a senior member of the House. No intervention should be made, nor will be taken.
Thank you, Madam Deputy Speaker. I'm happy to talk to him in the tea room afterwards. Madam Deputy Speaker, the government know the damage the Conservative reform Brexit deal has done to every family and every business across our country. And yet they choose to reject the single biggest policy for ending the cost of living crisis, turbocharging economic growth and boosting tax revenues without raising tax. a new trade deal with Europe, properly fixing our broken relationship with Europe with a new customs union. Growing our economy by freeing British businesses from the costs, barriers and red tape favoured by the Conservatives and Reform. Rather than trying to tax their way out of debt, as Labour is choosing, Liberal Democrats would grow our way out of debt. Now, Madam Deputy Speaker, to be fair to the Chancellor, she has recently spoken about the terrible damage that the Conservatives' Brexit deal has done to our economy. The deal that promised to save us £350 million a week, but ended up costing the taxpayer £1.7 billion every week. But where is the Chancellor's urgency and ambition to fix the problem she rightly identifies? Today she didn't even mention the huge hit to the Treasury from Brexit. She is like a doctor who has diagnosed the disease but refuses to administer the cure. Refusing to take up our plan for a brand new deal with the EU, a much better deal for Britain than anything the government has pursued so far, with a new customs union at its heart. Madam Deputy Speaker, everyone but the most extreme Brexiteers now realise what a costly economic disaster the Brexit deal has been. Whether you're a young family struggling with ever higher food prices, or a high street business just trying to survive the chance of the latest new cost or tax, people are understandably looking for a credible economic policy to change their futures for the better. And it's crystal clear now. Only the Liberal Democrats are providing the leadership on our economy people are crying out for. Now, Madam Deputy Speaker, there are some measures the Chancellor has announced today that we do welcome. At last, she has decided to tax the big online gambling firms by raising remote gaming duty, as the Liberal Democrats have been calling for. Problem gambling is related to hundreds of suicides every year. So, of course, online casinos and the like should absolutely pay more tax on their huge profits. Her decision to scrap the rate clause is an excellent one. And I may not have heard the Leader of the Opposition, but I wasn't sure if she welcomed that. I hope the Conservative Party will welcome that. And the Chancellor's decision to scrap the two-child limit is excellent. It was in our general election manifesto, and I'm glad that she is now enacting Liberal Democrat policy. Madam Deputy Speaker, it's clearly the most effective way of lifting children out of poverty, and it will save taxpayers' money in the long term. And the biggest relief today for millions of families and pensioners is the action the Chancellor is taking to reduce energy bills, and we welcome it. But even after the Chancellor's changes, it will still leave the typical household paying hundreds of pounds a year more on their energy bills than 5 years ago. So more action will be needed. But we need action on energy bills that works. Reform and the Conservative Party pretend that the answer to rising energy bills is to scrap our climate commitments and stop investing in renewables. They couldn't be more wrong. The Conservative reform energy policy would put up bills and just make the UK even more reliant on imported fossil fuels with their volatile and high prices. That would be a disaster for our economy, a disaster for our environment, and a disaster for jobs, and a disaster for people struggling with energy bills. Madam Deputy Speaker, a major winner from reform's energy policies would be Vladimir Putin. Now, that might explain why the honourable member for Clacton is so keen on it. So I urge the government, don't listen to the Conservatives or Reform. Be more ambitious in cutting people's energy bills. Take up our plan to cut energy bills even more right now and to cut them in half within a decade, finally giving families and pensioners the relief they need from this cost of living crisis. Madam Deputy Speaker, while there are some things to welcome, which I've just done, there are quite a lot of measures in this budget that will cause a lot of pain and unfairness, all of which could have been avoided if the Chancellor had gone for growth with Europe instead. Her plans to tax salary sacrifice will be hugely damaging to savings and pensions, And it looks like it's another NI hit on workers, Madam Deputy Speaker. And why, when the electricity vehicle market still needs a boost to get going, is she taxing electric vehicles? And if she wasn't spending £1.8 billion on digital ID, many of these tax rises would not have been needed in the first place. And her failure to U-turn on the family farm tax is a huge error. Madam Speaker, if the Chancellor was really looking to tax those with the broadest shoulders, then why not put a windfall tax on the big banks who are literally making billions at the taxpayers' expense due to side effects of quantitative easing? But the worst tax hike of this budget by far, the biggest tax rise of this budget, is the Chancellor's decision to repeat the Conservative policy of freezing income tax thresholds. Freezing these thresholds reduces the amount people can earn tax-free and hits the lowest paid the hardest. But I have to say, Madam Deputy Speaker, hearing the Conservative leader criticise it now rings incredibly hollow. And I think the member for Berkshire was objecting to her comments. The leader of the opposition cheered Conservative budgets after Conservative budgets that did exactly the same thing as the Chancellor did, raising taxes on the low paid. The Conservatives dragged an extra 4 million people on very low incomes into paying income tax and an extra 3.5 million people into paying the 40p rate. And the OBR says this government is now planning to drag a further 750,000 low-paid workers into tax and nearly 1 million people into the 40p rate. So someone on the average salary is paying an extra £582 this year because of the Conservatives' policy, and under the Chancellor's plans, they will pay an extra £300 a year by 2031. Now, Madam Deputy Speaker, contrast that with our record on income tax. We raised the personal allowance by £4,000. We cut income tax by £825 for millions of people, and took 3.4 million of the lowest paid out of paying income tax altogether. It is clear, Madam Deputy Speaker, the Liberal Democrats are the only party that believes in cutting income tax for ordinary people. Labour and the Conservatives make them pay more. As well as adding income tax pain to families struggling with the cost of living crisis, this budget will also add to the cost of doing business crisis facing Britain's hospitality sector, where she went nowhere near far enough. Our high streets are suffering. Pubs, restaurants, cafes, caravan parks, zoos, even our beloved theme parks. They are struggling against higher business rates and the government's misguided jobs tax. The Liberal Democrats called on the Chancellor to help them with an emergency 5% VAT cut for hospitality for the next 18 months. That would have been a lifeline for some of our most beloved local businesses and for people's jobs, boosting local economies across Britain. And it is very disappointing that the Chancellor hasn't listened to our calls. Finally, Madam Deputy Speaker, can I say how disappointed I am with how little there was for carers in this budget? As a carer myself for much of my life, I'm determined to speak up for the millions of carers less fortunate than I am. Millions of family carers and care workers who make enormous sacrifices looking after loved ones. Carers who keep our NHS going. Carers who keep our society going. They deserve far more support from the government, and I will keep pressing their case. Now, I do welcome the Carers Allowance review, but it confirms our argument that the Carers Allowance system is out of date and is in need of urgent change, and we're yet to hear commitments to those changes. I welcome the decision to reassess cases where overpayment has caused huge hardship, but with the changes not coming to force for another year, the government must instruct the DWP to immediately suspend repayments during that delay and swiftly deliver compensation. More needs to be done to help family carers juggle their jobs with their caring responsibilities. And, Madam Deputy Speaker, we urgently need the Social Care Commission to actually start fixing the system on a cross-party basis and make sure our loved ones get the care they need. The Chancellor cannot claim to be supporting our NHS properly however much money she puts in, while she and Treasury officials keep blocking the social care reforms that alone can transform the health service across the country and boost our economy. Madam Deputy Speaker, a caring society, a growing economy, a plan to drive down household bills, boost high streets and go for growth with Europe. That is the vision the Chancellor should have set out today. Instead, we got a low-growth, high-tax budget from a government that I fear just isn't listening.
Catherine West.
Thank you very much, Madam Deputy Speaker, and it's an honour to follow the leader of the Liberal Democrats in this debate, the member for Kingston and Surbiton. And put very simply, this is a family-friendly budget. Every family up and down the UK will be welcoming this. Gone is the vile rape clause, and an increase in family income is very, very welcome. We've been through many traumatic times together in this House. We've been through the global financial crisis and its long tail. We've been through Brexit, and the right honourable member who spoke before me is quite right to emphasise the vast difference between our economy while we were in the European Union and now that we're not. And I welcome the work being done at Cabinet level and ask Cabinet to redouble their efforts to work on good trade arrangements under the EU-UK Security Pact to improve our economy and enlarge our economy. And of course COVID. We heard of COVID this week with the report. And we all remember not just the impact on the economy, but the terrible impact, particularly on younger people, and the impact that long tail is having on so many of our young people who are still feeling too unwell to work or whose work opportunities have been severely reduced through anxiety, depression and all the other things which not just COVID but that context of fiscal austerity brought down upon them. Madam Deputy Speaker, I represent a multi-faith, multi-ethnic constituency which works really hard on community cohesion. When all is said and done, we rub along well together in Hornsey and Fry and Barnet. From recent rhetoric, it could be assumed that there is deep unhappiness and division. In fact, I want to put on record the opposite. I would like to put on record the contribution to our local economy from all parts of my constituency, regardless of skin colour, faith or school qualifications. Of course, my community also faces challenges. We have unacceptably high numbers of children living in households where incomes don't cover the basics, heating, eating and rent, and I really welcome today's statement on heating, help for households, on eating, school meals, more breakfast clubs and helping in particular secondary school children with their nutrition, and rent, quite rightly introducing a little more tax on some of the landlords who in a wealthy place like London will be making quite a lot and can afford to pay a little more. It's my first budget as a member of the Treasury Committee, and this budget has rewarded those who fought to restore hope, stop the chaos of the 14 years of Conservative governments and deliver change. Remember the election? We promised change. Today we saw change. That change is an end to poverty-line family budgets, and the hope is that we finally see food banks close for good.
I thank the honourable member for giving way, and especially she is a colleague with me on the Treasury Select Committee. In terms of the government delivering hope, a key part of the government's economic forecasting is, of course, the OBR. And a lot of what has driven the budget today is a 16 billion productivity downgrade by the OBR. We heard on the Treasury Select Committee that there was actually very little basis behind that productivity forecast in the first place, basically based on purely what the UK productivity was pre-2008, with not much real depth beyond that. So does the honourable member agree with me that the OBR has serious work to do to look at the robustness of its forecasts?
Colleague on the Treasury Select Committee for that, and I think there was quite a lot in today's budget on skills, on nutrition for children so that they can get their educational qualifications, and quite a lot that will help us to solve the productivity puzzle. But I do look forward to questioning with him the OBR on their data, how they got to that position, and how we can be helpful in pushing the government towards even more investment in skills, apprenticeships, and in deepening our investment in young people so that our productivity can improve over time. I know that so many of us here in the House are in politics because we want every child and every family to have the chance to thrive in school, in work and in life. And let's look back at past Labour governments. In 1945, despair and hunger stalked many communities. London was flattened in the Blitz, and yet rationing would continue for 9 more years. Keynes famously said, anything we can actually do, we can afford. We are immeasurably richer than our predecessors. And then what did Labour do? Went on to build the NHS, built the country, built a welfare state. We can do this. We will make the UK fairer. And today is a really good start on that journey. Very briefly, Madam Deputy Speaker, because I know so many people wish to speak today. As a former borough leader, I introduced school meals for all primary school children. It was a great equaliser and social leveller. Children were more focused, made better progress. Families who were just about managing saved money, and there was no stigma. Everyone sat together and talked with each other. Free school meals for all primary schools were subsequently rolled out across London, and we know from today that more secondary school children will benefit under the government's proposals. We need to continue to restore hope and deliver change. The two-child cap on universal credit, of course, another pro-family measure, the most cost-effective, quick measure to bring up to 500,000 children out of poverty, and paid for by the most addictive forms of gambling, which has been increased. My personal view is we could have gone even further on the gambling, and I hope that it raises between 1 and 3 billion, because I think that remote gambling in your bedroom, on your phone, is deeply damaging to society. The Trussell's September 2025 Hunger in the UK makes for sobering reading. In 2024, 16% of UK households were food insecure, which of course we know is not a food problem, it's an income problem, and this is an issue we must continue to interrogate. I'm very pleased to have secured a backbench debate on food inflation and poverty. So in conclusion, Madam Deputy Speaker, together with school meals, more breakfast club provision, a higher living wage since the general election, slowly the living standards of families will turn around. It's particularly positive to see the first woman Chancellor recognise the impact which the difficult financial climate has had on families. I hope that by this time next year, once these measures are really embedded, we'll begin to see the closure of food banks. I've heard a lot about what we want to see by the end of this Parliament. Let's aim for a closure of food banks in this country by 2029. And we hope to feel that every child and every family will have the chance to thrive.
To help colleagues, they are now permitted to make an intervention, and a backbencher may wish to accept or decline that. And I call Sir Jeremy Hunt.
Budgets aren't easy for chancellors because there are so many things beyond your control, but being forced to make trade-offs reveals priorities. And I'm afraid today's priority was not economic growth, but political survival. That's because there was one central call the Chancellor had to make today. Do we reform welfare or do we raise tax? Getting our welfare bill down to pre-pandemic levels would save about £47 billion a year within 5 years. It wouldn't have been easy, but it would have meant no tax rises and plenty of headroom in public finances. Instead, welfare spend is going up and jobs and growth are going down. In every single day of the government's first year, around 2,200 people have been signed off not just working but even having to look for work. That's 1 million more people on universal credit just in the last year. Most of those claimants cite mental health, but every doctor I ever spoke to as Health Secretary said that people with anxiety and depression need social contact. That means being at work, not being at home. So this could... I will very happily give way to the Chair of the Secretary.
On the point of mental health,
He's absolutely right to point out that that is one of the drivers of people going on universal credit that does need tackling. So does he share my alarm that today in the HSJ it's been reported that this government's planning to water down the mental health investment standard, which starts to reverse the trend that we saw over many years of achieving parity of esteem between physical and mental health?
I absolutely share the Honourable Lady's concern about that. That was introduced when I was Health Secretary. And this could have been the budget in which the Chancellor announced that we will speed up treatment for people with mental illness and not park them on welfare. This could have been the budget that said that we will eliminate fraud by stopping completely benefit applications by phone. It could have been the budget that said that instead of relying on migration to help firms expand, we will make sure that people at home are fit to join the workforce. Instead, the welfare bill is going up by around £14 billion, not least because of the totally unfair abolition of the two-child cap, which I fear will see more children, not less, living in the structural poverty caused when there are no adults in the household at work. And I will happily give way to...
He surely, given his background, must recognise that there is a direct link between social policy and economic policy, that this country needs a working-age population to fund future pensions and welfare bills for generations in the future. How on earth can you do that if you're not encouraging children to be brought up and raised in a household that can afford to feed them?
Order. How on earth can you do that? We can't start off these 4 days of budget debate with the word you and your. So quickly, come to your conclusion with the right language.
Well, I think she brought me to order just at the right time.
I recognise that the honourable gentleman's concern about child poverty is sincere. I just have a totally different view as to how to reduce child poverty in this country. I think financing people to have ever larger families means more children growing up in poverty, not less. And I think the evidence for that is that under the previous Conservative government, we had 1 million fewer children growing up in workless households, and child poverty in absolute terms fell. And he needs to look at that evidence. And the taxes and the price we are paying for this mushrooming welfare bill is that taxes are growing up and they are already starting to destroy growth. 180,000 fewer payroll jobs in the last year. Unemployment up, inflation up, interest rates higher than they would have been. And the tragedy is that absolute poverty, which, as I said, fell under the previous Conservative governments, is now likely to rise under Labour as jobs vanish and welfare rolls soar. I'll give way to the honourable gentleman.
I thank the right honourable member for giving way. I grew up in poverty. 1 in 4 children in Bournemouth, the town that I represent here, grew up in poverty. I can tell the honourable member, growing up in poverty is not a good thing. It's an awful thing for the life chances of the child. It's an awful thing for the family that care for them. It's an awful thing for the community that wraps their arms around the child. But would he agree with me too that he is ignoring the future costs of child poverty? I used to run mental health and domestic abuse services. I can certainly tell him that when children grow up in poverty and then in later life can't find the education, training and support that they need because of their trauma as a child, they cause extra costs for the public services that we then have to meet. Does he not agree with me that we should be preventing those future costs?
I absolutely agree with him, but I profoundly disagree on the way the government is choosing to do that, because by expanding the welfare bill, expanding the number of large families living in poverty, you are making the root causes of poverty worse and not better. And let me say this. The Chancellor says that there is a growth plan. But it was very difficult to discern anything at all in today's budget. We know, for example, that raising public sector productivity to private sector levels would add 0.4% to annual GDP growth. We know that proper planning reforms would add 0.4%. We know that proper welfare reform would add 0.3%. We know that getting energy bills down properly adds 0.3%. We know that AI could dwarf all of that, according to Microsoft and Accenture, potentially adding 1% a year. But we got none of that today. Instead, we had a government arriving in office saying they wanted growth, 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 without knowing how they're going to get there. And growth needs a plan, not a soundbite. And it's that lack of a plan or even a guiding philosophy, which is why today we've ended up with a budget that damages growth, damages investment, damages jobs, and most tragically of all, damages opportunities for young people, of whom there will shortly be 1 million not in employment, education or training. I give way to the Honourable Member.
Respected member of the House, but I think it's really important that we reflect on the facts. The Chancellor announced today, as did the OBR, that growth is up from 1% to 1.5% this year, and he talks about having a plan on planning reform, a subject I'm very interested in. Why then did his party abstain and not back our planning reforms?
I think he's absolutely right. We should look at the facts, and the facts are very clear that the OBR upgraded growth for this year, and then they downgraded it for every single year of the forecast thereafter, and that is why the overall size of the economy is shrinking as a result of the measures taken by the Chancellor in the last budget, and I'm afraid made much worse in this budget. And I agree with him that we do need to go further on planning reform, but I don't think we have any plan for the government for the really substantive changes that would align incentives between local communities and national government when it gets to, for example, planning approval for big infrastructure projects. And I would cheer from the rafters if we heard that from the Chancellor, because it is urgently needed. And please, this is something which I think is most disappointing of all. Please, can the government not tell us that everything is just going to be fine because they're not the evil Tories? Those terrible Tories got inflation down. They got inflation down from 11% to 2%. They saw 4 million new jobs in the economy, 4 million new jobs as opposed to nearly 200,000 fewer. They grew the economy faster than France, Germany, Italy or Japan. And they attracted more foreign greenfield direct investment than anywhere in the world apart from China and the United States. I give way to the Honourable Lady.
I thank the Honourable Gentleman for giving way. Could he remind us which government led to 11% inflation? Could he remind us which government crashed the economy? And could he also speak to the 1,970 children, estimated, in Morecambe and Loonsdale who will benefit from the lifting of the two-child benefit cap, and tell them why they should continue to live in poverty?
Interventions must be short and to the point, and an actual question or a statement. So, Jeremy Hunt.
Thank you. Yes, I'm very happy to tell her which government was responsible for 11% inflation. The Russian government was responsible for 11% inflation, and I will happily look in the eye the 200,000 fewer children in absolute poverty after a succession of Conservative governments because of those 4 million jobs created on our watch. And let me say this, these dreadful Tories increased the number of doctors and nurses in the NHS by a third. Those posh Tories increased standards in state schools to have the highest reading standards in the Western world. And that is because, Madam Deputy Speaker, progressive instincts don't pay the bill for good public services. A strong economy does. I will give way to my Lord.
I'm very grateful to the right honourable gentleman for giving way. During that period, can you remind the House what happened to the deficit, which was inherited at over 10%? And, maybe we'll just deal with that.
Well, absolutely right, because the Chancellor makes a great play of fiscal responsibility. Incidentally, I hope she will correct the record when she said that she was reducing debt, when the OBR's Economic and Financial Outlook says that it's going up from 95% of GDP to 96% of GDP. Exactly. But yes, when the previous Conservative government came to office, the government was borrowing nearly £1 in every 4 that it was spending on public services. We reduced that deficit from 10% to 2%, and the party opposite opposed us every single step of the way. I will give way one last time to my right honourable friend.
I thank him for giving me. I couldn't resist, as we're going down memory lane, to remind him when we came to power in 2010, we had a youth unemployment crisis. Youth unemployment plunged when we were in office. Now Labour are back in office. They've imposed the national insurance contribution tax. Youth unemployment is soaring again. Is that not a damning indictment of the party office?
And they might find that difficult to hear from a former Conservative Deputy Prime Minister, but they might want to listen to the Resolution Foundation, which has been saying exactly the same thing on the airways today. It has been, and no one disputes the progressive credentials of the Resolution Foundation, but they have been warning against this rise in the minimum wage and all the extra workers' rights because they say it will lead to a crisis, or it could lead to a crisis in youth unemployment. I don't want to leave the honourable lady out, but I promise that will be my last intervention.
I thank him very much for giving way. Is the right honourable gentleman proud, and does he find it fiscally responsible that he, in his 2 budgets, left us with the lowest amount of fiscal headroom since the OBR was created, at 8.9 billion in 2024, leaving the current Chancellor and the present Labour government a mountain to climb in order to get us back to 22 billion of solid headroom?
I am proud that I dealt with a real black hole of 72 billion, not a fake one of 22 billion in my fiscal events, that I met the fiscal rules every time. And if she's really concerned about that low headroom, why did the Shadow Chancellor at the time, and now the current Chancellor, not object once to the fact that headroom was reduced to that level? I'll tell you why she didn't object. Because if I had left headroom any higher, I would have had to cut spending more or increase taxes higher, and that would have made the recession that we were heading into deeper and worse, with more unemployment, fewer jobs and more poverty. And that's why I'm proud that I took the right decision. But I want to finish with this, if I may, Madam Deputy Speaker, because even now it may not be too late. A government that tries to do the right thing with the time that it has left is more likely to earn the trust of the British people than one that has given up. Please do not treat government as an exercise in survival. That would be a betrayal. That would be a betrayal of the government's mandate. People with the broadest shoulders, as the Chancellor described them, will be rightly angry today. But the people who depend on public services, people looking for a job, people on the poverty line, they are the ones who need a strong economy more than anyone else. And they will finish today feeling more scared than ever about their prospects.
Abina Apongasare.
Madam Deputy Speaker, I welcome the Chancellor's budget and its message of strong foundations and secure future. It delivers on the priorities that matter most to my constituency of Erith and Thamesmead: economic growth, lower cost of living, investment in families and a stronger NHS. I also fully welcome the Chancellor's commitment of the DLR extension to Thamesmead, which is on page 65 of the budget.
On that point, the Honourable Frankie.
Yep, in a moment. It's a game-changing moment for residents who have waited decades for proper transport links. I give way to my honourable friend.
Thank you, Madam Deputy Speaker, and I thank my constituency neighbour for giving way. Page 104 of the budget book confirms that capital investment to fix more potholes for the Lower Thames crossing to the east of my constituency and for the DLR to Thamesmead to the west of my constituency. So will she welcome me in for thanking the Chancellor for that support, for that capital investment locally for our constituencies?
Thank my honourable friend Betsy in Crayford. We share a similar council, Betsy Council, and I know how important it is to have those potholes, and I also want to thank him for supporting the DLR to Thamesmead. This project unlocks 25,000 to 30,000 homes, and also around 10,000 new jobs, about 11.6 billion economic impact estimated by TfL, as well as a crowd in nearly 18 billion of private investment over 30 years. Transformation of one of London's most underserved communities, and cut commutes by nearly half, benefiting over 500,000 people that live in the area and wider London. This is not just a transport upgrade, it is key to unlocking opportunity and prosperity for generations. It's been a community-led campaign which has had cross-community effort, and I'm proud of the role that my residents have played in getting us here. It has also been a personal priority since I was first elected in December 2019, which I referenced in my maiden speech on the opposite side. And it was also part of my 2019 general election pledge. Peter, my resident, told me last week that he has lived in Thamesmead for over 45 years with promise after promise of a transport hub to London's only postcode without a tube and train station. He and I know that so many thousands more are going to be thrilled that this Labour government is putting investment behind their community so they can thrive. Madam Deputy Speaker, I want to pay tribute to the key supporters whose work have been vital. My Greenwich Council leader, Anthony Okorea, the Mayor of London, Sadiq Khan, my honourable friends for West Ham and Beckton, my Thamesmead councillors, plus TfL, councils, assembly members and members in this place, developers Peabody and Lendlease, and of course my senior parliamentary researcher, Patrick Brown. But most of all, local people and their brilliant campaigning. They never lost faith in this project. This is a collective achievement, and this constituency should be proud of the role it has had towards this budget. I also welcome the Labour government's announcement in September that Thamesmead is one of the 12 areas selected by the New Towns Task Force, further proof of the area's potential and importance. So once the DLR is secured, schools, NHS services, jobs and communities and facilities must grow alongside new homes. This is a start of a new chapter in Thamesmead, and I'm proud to have played a part, and I'm proud of my community who have championed this project from the start. I also strongly support the Chancellor's mission to reduce child poverty, including a nationwide rollout of free school breakfast clubs. I've seen firsthand the benefits in my constituency of Willowbank and Jubilee Primary School, better start for pupils and a real financial relief for families and schools. So I was delighted to see in page 31 of the budget that from September 2026 there will be about 12,000 more primary schools which will offer free breakfast clubs, helping 200,000 more children. And I believe that saves working families around $450 a year and ensures over 500,000 more children do not start their school day hungry. I also welcome the confirmation of further investment to cut NHS waiting times, a vital issue for my constituents. And also welcome that today's announcements of the 250 new neighbourhood health, the one-stop shops, bringing together GPs, nurses, dentists and pharmacists under one roof, starting in areas that need it the most. Madam Deputy Speaker, would you like to give way?
I'm extremely grateful to the Honourable Lady for giving way. On health facilities, would she share my concern that the only thing with more leaks than the budget run-up period is the roof of Musgrove Park Hospital in my Taunton constituency? And does she agree, would she agree that those hospitals in the second wave and third wave programme for rebuild need interim funding to keep them going in the meantime across the country, including in Taunton Wellington?
The honourable member for his intervention has to remind him that this government is delivering more than previous governments. You may remember that his party was previously in coalition with the previous government that caused a lot of damage to this country. Yeah. Madam Deputy Speaker, I want to conclude by saying this budget delivers for the country, and it delivers for my constituency of Erith and Thamesmead. So after decades of waiting, residents will finally have their transport links they deserve and the opportunities that will come with them. And a new chapter begins today. And I will continue to fight for the investment, services and opportunity for my community because they deserve it.
Order of the House, Sir Edward Lee.
The benefit bill is now unsustainable in this country, and really the main purpose of what I want to say today is that I hope that we could try and create some sort of consensus in the House to try and deal with this problem, which is imposing a massive level of debt on families. Now, I'm absolutely sure that the government accepts that this burden is unsustainable, and I'm absolutely certain that if they would come to the House with sensible proposals to try and get people off benefit, Her Majesty's loyal opposition would support the government in that endeavour. The government ducked the challenge early in the year to cut benefits and to try and thereby encourage more people into work. We said at the time that we were prepared to support the government to try and deliver these cuts, and I'm sure that the opposition front bench would repeat that promise. Naturally, yeah.
I thank the honourable gentleman for giving way. I just want to clarify that he's perfectly happy for children to continue to live in child poverty while we try to reform the welfare benefit system. Is that right?
Actually making that point, because what we were discussing earlier in the year were people who were seeking work, and we were trying to encourage people to get back into work. I think the problem that I can understand the political imperative of what the Chancellor has done today to sustain her own position with her own backbenchers, but the problem is that you're going to create a perverse incentive for people on benefit with larger families to stay out of work, and I'm not sure that's good for their morale, good for the economy, good for anybody. So I think it seems a very easy hit for the Chancellor today, but I think there are going to be perverse results. I just want to also say a word about representing a rural constituency of the family farm tax. The budget's extension of inheritance tax to businesses assets over £1 million has imposed, as we know, a major new burden on long-established family farms in my constituency and elsewhere. Now, I can quite understand if the government was seeking to target larger estates, target people who were acquiring estates to avoid inheritance tax. But this new family farm tax affects not just large landed estates, but ordinary farms worked by generations of the same families. And I was actually visiting quite recently a tenant farmer in my own constituency, and this actually affects him because his tenancy, he doesn't own the land, it's only a tenancy, but the tenancy is a capital asset and he will be taxed on it, maybe as much as £300,000, which affects the ability of the family to stay in farming.
But not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Some people travel to see the world. I travel to question the forces that shape entire nations.
How is it possible?
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars.
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm David Weston.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
A cidade estava sitiada.
Nisso eu começo, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives. But it can also hurt them.
Bringing you up-to-the-minute news.
Geopolitical news.
Economic news.
Up-to-the-minute global news. Whenever, and wherever. Wherever it happens. In Washington. Buenos Aires, Argentina. Sintra, Portugal.
Ottawa, Canada.
Bangkok. Tehran.
Jackson Hole, Wyoming.
Windsor Castle, England.
The Circuit de la Sarthe in Le Mans.
And this.
And this.
And this is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did there.
You didn't know he was an actor?
No, I don't know what he doing because I never watched the movies. You know, I was traveling the business. But of course, after people, hey, Nobu, so you must know him, and then I understand.
How is he as a partner?
He's for me, and a great partner. He understands my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He say, hey Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel de Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophy.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Why do the biggest names in business choose
fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. So what we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoin?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need, because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Let's cut right to it. This is Bloomberg's new show, Primer. Technology is a $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on.
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Now, you've written that younger people today are not as happy as their parents were. That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in decline. That's the climate of happiness that's been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new meaning book is about. It's about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home, make sure that people don't interact socially, and that was catastrophic for happiness.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15%. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Tech is integrated into every aspect of our lives, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Tom McKenzie in London. Watch Bloomberg Tech Europe. New episode every month, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more. But I don't think we need 10, because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh, yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
oh boy,
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
When U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
So I know from owning a sports team that owning one team takes a lot of energy and time.
Tell me about it, yeah.
So you decided after you bought the Washington Spirits to buy some other soccer teams. So you bought stakes in a team in England, is that right?
Yes. I bought a team called London City Lionesses, and that is the only one of the 2 teams in the entire, potentially Great Britain, that are independent. 99% of the teams in Europe are part of the men's team. But this is one of the only 2 teams that was independent.
So now you have 2 soccer teams, one in England and one in the United States. So I would think for most people that might be enough, but you decide to buy a team in France as well?
Yes. Olympique Lyonnais Féminin is actually the best women's team in the history of women's football. In terms of how many trophies the team has won, they are the 8 times champions of the Pan-European League. And I can't even count how many times they won the French domestic league, the most successful team. I want to professionalize women's sports, right? I don't want people to think that somehow women's sports is a charity or a corporate DEI project. This is a legitimate entertainment product, and it is a business.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Some people travel to see the world. I travel to question the forces that shape entire nations.
No, is it possible?
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at the front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
A cidade estava sitiada.
Isso, ao começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Bringing you
up-to-the-minute news,
geopolitical news,
economic news,
up-to-the-minute global news,
Whenever, and wherever it happens.
In Washington, Buenos Aires, Argentina,
Sintra, Portugal,
Ottawa, Canada,
Bangkok,
Tehran,
Jackson Hole, Wyoming,
Windsor Castle, England,
the Circuit de la Sarthe in Le Mans,
and this is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first lessons opened. He asked me to.
इन्वेंट्री आने वाली है क्रूड ऑयल की, थोड़ा ध्यान रखना। ये क्रूड ऑयल के ट्रेड में हाँ वही लोग लेना है स्ट्रेट को जो इन्वेंट्री को देख सकते हैं। इन्वेंट्री अगर अपोजिट आई तो प्राइस शूट अप भी कर सकता है अपर साइड की, और इस तरह से इन्वेंट्री इज देयर। क्रूड ऑयल इन्वेंट्री आ गई है, बेरिसी है, कैप डाउन तो ओपन हुआ है। तीनों इन्वेंट्री देख लेते हैं। 3 इन्वेंट्री आती है, क्रूड ऑयल की खुद की इन्वेंट्री आती है, गैसोलीन की और ईआई का डेटा आता है। ठीक है, आ गए हैं। ईआई का डेटा बेरिस है, गैसोलीन की इन्वेंट्री भी बेरिस है, क्रूड ऑयल की इन्वेंट्री भी बेरिस ही दिखा रहा है मेरे इसमें। तो दूसरे पोर्टल में, इस वाले में भी देख लेते हैं। ठीक है, 3 में से 2 तो बेरिस हैं क्रूड ऑयल की इन्वेंट्री, तीसरी भी बेरिस ही है। ओवरऑल क्रूड ऑयल की इन्वेंट्री बेरिस ही दिखा रहा है गाइस। गैसोलीन इन्वेंट्री इज बेरिस, ईआई का डेटा बेरिस, क्रूड ऑयल की खुद की इन्वेंट्री बेरिस। तो क्रूड ऑयल इन्वेंट्री इज बेरिस फॉर क्रूड ऑयल प्राइस। हल्का सा गैप डाउन हुआ है, कैंडल जरूर ओपन इक्वल टू लो बनी है, मतलब किसी ने गैप डाउन में ही बाई कर लिया लग रहा है। लेट्स सी क्या ये ब्रेक डाउन पे और नीचे जाता है या फिर पहले ऊपर ऐसा उड़ाता है और फिर जाता है नीचे। किसी ने यहाँ पर अगर ट्रेड लेना है तो थोड़ा सा ध्यान रखना क्वांटिटी का। हाँ, इन्वेंट्री वाली कैंडल है, इन्वेंट्री है बेरी सी, बट प्राइस एक सूट अप कर सकता है ऊपर की ओर एसएल उड़ा के, और फिर हो सकता है फिर डाउन साइड की ओर जाने की कोशिश करे। कैंडल इज ओपन इक्वल टू लो। ठीक है, बाकी टारगेट बड़ा रखना, क्वांटिटी थोड़ी कम। अगर ये यहाँ से नीचे आता है तो फिर लोअर एंड पे यहाँ पर बाइंग का ट्रेड रहेगा। ऐसा उड़ा के अगर फिर नीचे आता है दोबारा एंट्री कर सकते हैं। अगर ये ऐसा पूरा ही उड़ा के चला गया ऊपर तो फिर ये नेक्स्ट रेजिस्टेंस जोन रहेगा। अब सीधा 1030 पर आएगी नेचुरल गैस की इन्वेंट्री, उस पर फोकस रखेंगे। नेचुरल गैस में एक चीज़ ध्यान रखना है, जो मैंने लेवल लगाया है ना, ये तीसरी बार टेस्ट हुआ है यहाँ पे। दिस इज द थर्ड टाइम टेस्ट हुआ है। फर्स्ट टाइम एक लो बना था, सेकेंड टाइम एक लोअर लो बना था, एंड थर्ड टाइम है, देखते हैं कितना लो बनाता है। कंसोलिडेशन नहीं होना चाहिए, कंसोलिडेशन हुआ तो बड़ी प्रॉब्लम हो जाएगी सेलर्स के लिए। एक्चुअली अनुरू जी क्वेश्चन पूछ लिया करो आपका। अगर ऊपर वाले क्वेश्चन की बात कर रहे हो तो मैंने आंसर पहले ही दे दिया था, क्रूड ऑयल की इन्वेंट्री आज है करके।
Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world. And we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoin?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need, because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Let's cut right to it. This is Bloomberg's new show, Primer. Technology is $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on.
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Now, you've written that younger people today are not as happy as their parents were. That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in decline. That's the climate of happiness that's been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new meaning book is about. It's about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home, make sure that people don't interact socially, and that was catastrophic for happiness.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Tech is integrated into every aspect of our lives, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Tom McKenzie in London. Watch Bloomberg Tech Europe. New episode every month, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh, yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
When U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
So I know from owning a sports team that only one team takes a lot of energy and time.
Tell me about it, yeah.
So you decided after you bought the Washington Spirits to buy some other soccer teams. So you bought stakes in a team in England, is that right?
Yes. I bought a team called London City Lionesses, and that is the only one of the two teams in the entire, potentially Great Britain, that are independent. 99% of the teams in Europe are part of the men's team. But this is one of the only two teams that was independent.
So now you have two soccer teams, one in England and one in the United States. So I would think for most people that might be enough, but you decide to buy a team in France as well?
Yes. Olympique Lyonnais Feminine is actually the best women's team in the history of women's football. In terms of how many trophies the team has won, they are the 8 times champions of the Pan-European League. And I can't even count how many times they won the French domestic league, the most successful team. I want to professionalize women's sports, right? I don't want people to think that somehow women's sports is a charity or a corporate DEI project. This is a legitimate entertainment product, and it is a business.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Some people travel to see the world. I travel to question the forces that shape entire nations.
How is it possible?
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
and laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
A cidade estava sitiada.
Nisso eu começo, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Up-to-the-minute news.
Geopolitical news.
Economic news.
Up-to-the-minute global news. Whenever, and wherever. Wherever it happens.
In Washington.
Buenos Aires, Argentina.
Sintra, Portugal.
Ottawa, Canada.
Bangkok.
Tehran.
Jackson Hole, Wyoming.
Windsor Castle, England.
The Circuit de la Sarthe in Le Mans.
And this.
And this.
And this is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him in 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing because I never watched the movies. You know, I was traveling the business. But of course, after people, hey, Nobu, so you must know him, and then I understand.
How is he as a partner?
He's for me, and a great partner. He understands my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So example, Nobu Hotels idea come from him. He said, hey Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world. And we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading in cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need, because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Let's cut right to it. This is Bloomberg's new show, Primer. Technology is $1 trillion game.
Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on.
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Now, you've written that younger people today are not as happy as their parents were. That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in decline. That's the climate of happiness has been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new meaning book is about. It's about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home, make sure that people don't interact socially, and that was catastrophic for happiness.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Tech is integrated into every aspect of our lives, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Tom McKenzie in London. Watch Bloomberg Tech Europe. New episode every month, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more. But I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh, yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
oh boy,
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
When U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
So I know from owning a sports team that owning one team takes a lot of energy and time.
Tell me about it, yeah.
So you decided after you bought the Washington Spirits to buy some other soccer teams. So you bought stakes in a team in England, is that right?
Yes. I bought a team called London City Lionesses, and that is the only one of the 2 teams in the entire, potentially Great Britain, that are independent. 99% of the teams in Europe are part of the men's team. But this is one of the only 2 teams that was independent.
So now you have 2 soccer teams, one in England and one in the United States. So I would think for most people that might be enough, but you decide to buy a team in France as well?
Yes. Olympique Lyonnais Feminine is actually the best women's team in the history of women's football. In terms of how many trophies the team has won, they are the 8 times champions of the Pan-European League. And I can't even count how many times they won the French domestic league, the most successful team. I want to professionalize women's sports, right? I don't want people to think that somehow women's sports is a charity or a corporate DEI project. This is a legitimate entertainment product, and it is a business.
The Middle East
East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Some people travel to see the world. I travel to question the forces that shape entire nations.
No, it was impossible.
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
A cidade estava sitiada.
Isso, ao começo, eu não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Bringing you up-to-the-minute news,
geopolitical news,
economic news,
up-to-the-minute global news, whenever, and wherever it happens. In Washington, Buenos Aires, Argentina, Sintra, Portugal,
Ottawa, Canada,
Bangkok, Tehran,
Jackson Hole, Wyoming,
Windsor Castle, England,
the Circuit de la Sarthe in Le Mans.
And this is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did there.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, "Hey Nobu, so we have a lot of new restaurants coming in somebody's hotel." For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO? It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
up in our zone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoin?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need, because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Let's cut right to it. This is Bloomberg's new show, Primer. Technology is $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on.
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Now, you've written that younger people today are not as happy as their parents were. That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in decline. That's the climate of happiness that's been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new meaning book is about. It's about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization. where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home, make sure that people don't interact socially, and that was catastrophic for happiness.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with the close. Weekdays on Bloomberg. Context changes everything.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Tech is integrated into every aspect of our lives, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Tom McKenzie in London. Watch Bloomberg Tech Europe. New episode every month, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg. When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh, yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard, oh boy, can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
When U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
So I know from owning a sports team that only one team takes a lot of energy and time.
Tell me about it, yeah.
So you decided after you bought the Washington Spirits to buy some other soccer teams. So you bought stakes in a team in England, is that right?
Yes. I bought a team called London City Lionesses, and that is the only one of the two teams in the entire, potentially Great Britain, that are independent. 99% of the teams in Europe are part of the men's team. But this is one of the only two teams that was independent.
So now you have two soccer teams, one in England and one in the United States. So I would think for most people that might be enough, but you decided to buy a team in France as well?
Yes. Olympique Lyonnais Féminin is actually the best women's team in the history of women's football. In terms of how many trophies the team has won, they are the 8 times champions of the Pan-European League. And I can't even count how many times they won the French domestic league, the most successful team. I want to professionalize women's sports, right? I don't want people to think that somehow women's sports is a charity or a corporate DEI project. This is a legitimate entertainment product, and it is a business.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Some people travel to see the world. I travel to question the forces that shape entire nations.
No, is it possible?
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at the front and center of what we're trying to resolve and understand.
Americans need to know they're at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives
and laying the foundation for the future.
From finance to defense, AI to entertainment,
and from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
A cidade estava sitiada.
Isso, ao começo, eu não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Bringing you up-to-the-minute news.
Geopolitical news.
Economic news.
Up-to-the-minute global news.
Whenever, and wherever. Wherever it happens.
In Washington.
Buenos Aires, Argentina. Sintra, Portugal.
Ottawa, Canada.
Bangkok.
Tehran.
Jackson Hole, Wyoming.
Windsor Castle, England.
The Circuit de la Sarthe in Le Mans.
And this.
And this.
And this is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, "Hey Nobu, so we have a lot of new restaurants coming in somebody's hotel." For him, doesn't make any sense. Then we start Nobu Hotel de Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO? It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. That's a good-looking trophy.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good
question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world. And we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoin?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need, because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Let's cut right to it. This is Bloomberg's new show, Primer. Technology is a $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Now, you've written that younger people today are not as happy as their parents were. That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in decline. That's the climate of happiness has been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new meaning book is about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home, make sure that people don't interact socially, and that was catastrophic for happiness.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15%. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Tech is integrated into every aspect of our lives, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Tom McKenzie in London. Watch Bloomberg Tech Europe. New episode every month, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh, yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
Oh boy.
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
When U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
So I know from owning a sports team that owning one team takes a lot of energy and time.
Tell me about it, yeah.
So you decided after you bought the Washington Spirits to buy some other soccer